Check
Permit
one,
the
two, mic check.
projectionist to complete adjustment of focus and sound level.
Check 1, 2, Mike. Check 1. Good morning, everybody. How y'all doing out there? Yeah, everybody's piling in right now. Right on. Good to see everybody. How are y'all doing out there? Happy morning to you all. Happy Thursday.
Don't be here. I mean,
all right, let's get right in. Whoa, we got a bunch of stuff to move over here.
Linebacker coach. Before I let this continue.
Part of it does go back. Let's not forget there was a different CEO for a number of years, and
you just won the Massimo board.
And you want to, you may want to criticize the board.
Turn that down a little bit in the background there.
Success in succession.
Good morning to all of you. So we had a stabilizing market yesterday, right? And we had one last little dip down to 470, and then we rolled right back up into the close, and we are up this morning. And hopefully, I think I posted to you. We should get a print right here, right? So we're in the money 100% on that trade right now, right? So you take that trade off here. You don't know.
One thing we didn't get to at Nelson was whether or not the company is culturally
hold on here.
tone deaf in ways that cause
So you take the trade off here because we can't make any more money. I guess we could cut one side of it off, but you should be taking the money and running. Hold on, we got a couple of things we got to do here. I got to do a couple quick things.
Maybe that's what's been lacked. It does seem that you kind of.
Hold on 1 second here. I got one more thing to do here on my end. I got to make sure I'm doing what I'm supposed to be doing here.
Who may not have been at the top of her game near the end of her career.
There we go. And let's see what else we got here. We got to turn the comments so it's most recent first.
She stayed, and the stock has just been nothing but a horse.
What am I missing here? There's something here I'm missing.
Amazing, even though they were treated with very little respect.
I got it all? I'm missing my thumbnails for a second day. Okay, newest comments first. Blissowitz, what's going on? Good morning, my brother. Okay, we have some issues this morning. We're going to talk about them. Not quite issues. We're above the gamma flip at the moment, which is good. We turn this down for a minute here. Okay, so I want to show you guys a couple quick things here. Okay, now these levels, I was pushing the levels where I want them, and I wanted to get this. I had to make a trade. I had to close my trade. So I'm running a little bit behind at the moment, but regardless of where the levels are, I do want you to look specifically at price action. And we're in a crossing environment here, right? So, or I should say, V-shaped recovery, a bounce, right? We're now up here, and price has crossed above the hourly trigger. The half-hour trigger needs to cross higher. And also, when you see that half-hour crossing the hourly, we typically will come back down and do a back check on trend to the upside, okay? And you want that confirmation. Now, it doesn't matter where we squeeze to or how high we go. You're always looking for that back check at some point. And I always say this to bulls and bears, both of you guys, generally speaking. I don't care if we're going down, if we're going up. The initial move, though, right? So the initial move above the hourly trend or the initial move below the hourly trend, you want that back check, okay? And that back check signifies, especially on an hourly basis. Now, you can do this on a daily basis, weekly basis, 1 and 5 minute basis, right? You know, Jedi Marcus is out there and he trades that 1 and 5 minute trend, right? So, on this hourly trend, at least, you're looking for that back check, and you need it for a continuation mostly, right? So it's not like the grit squeeze isn't great and all that kind of stuff, but you are looking for some kind of a back check, and oftentimes you'll see them when you see two triggers crossing. It ends up acting like a magnet for that back check. So we'll see if we get that back check or not, or if we just park it and you see the cross come up here. You see this gray cross here. We just start running at some point, okay? But I like to see that back check. Now, coincidentally, same time, excuse me. At the same time, right? Now I need to do all this again, but whatever. Well, I'll do this in a minute. But the key point here is that here's your gamma flip right here. And it just so happens to lie right where we are on SPX. So we do want that. I want to see that, that back check on gamma flip. And where do we head next would be the next question, right? Where are we going, Cap? Where are we going into Friday and stuff like that too, right? So we got a target to the upside here, 47.75, 14. So 47.75, 14.93 on SPX at least. And that's just that top of the key right here. We talked about that top of the key yesterday, right? Remember, I drew these in for you yesterday. So on the main screen back here, we're just looking for, we use our normal tools that we use, right? You guys, how many times do we go over this stuff? Every day we're in here talking about this stuff, right? It's like here's a new tool, here's a new tool, that kind of stuff, right? We talked about this one back here yesterday. And lo and behold, where are we at? We talked about this one yesterday, right? Lo and behold, here we're at. Tapped it up here. Nice little sweep. So we're going to get rid of these at this moment or move these up now, okay? And we know where support lies, right? So we know that support is right here on this green area right here. This is support. Hold on. This is support right here, and this is trend. Okay, if we're gonna continue up, and then we took out our previous pivot points, so we're gonna start to look at the next pivot points, right? We'll drop this one up here. Whoop, right about there. Drop this one right here, and we'll add another one in. How about this? We'll take this one from the other day. Put this one. Already tagged that one. Might be like one more up there. Just put those up there. Fairly simple, right? Not too hard. And so if you're looking for some targets, for upside targets, you got them, right? You got support, you got targets. You know that if we roll down below, that will be below positive gamma again, and then we'll start flipping to the bear side for a downside move. You got one more target right here for a back check, I guess, if you really wanted to say, yeah, we're still bullish, I guess. We could come all the way down to this pivot and come back up, but we don't want is that roll to the downside. And I don't expect that roll into, personally, I don't expect that roll until we get into the weekend. So I'm not looking for extreme bearishness or anything like that, but I am looking for sideways and down into next week. We'll talk about that at some point this morning. It doesn't necessarily have to happen, but I would like to see. I mean, I'll be honest with you guys. If we are gonna make a run this year, if the thesis is we're in a soft landing, if the thesis is that we're going to get a seasonal low, my expectation is that earnings come in. If they've been trading up, right, and they get a great earnings, they're gonna sell the news and they take the monetize, right. You're gonna be looking for other companies to get a major low on their earnings, believe it or not, and some blood into this spring. Who wants to buy a ticker on a high, right? You want to be looking for a nice fat low to buy for a bull run for the rest of this year. So my expectations for earnings this season are either take the money and run in stuff that's been run up, or some capitulation to the downside for tickers out there that really isn't as bad as you might think. It's more just a setup for the rest of the year. So keep that in mind at this point where we are. We'll chat more about that this morning. We'll talk more about that this morning, but I would keep your I guess my thesis here on earnings season for this year specifically is to if you've got 5, 10, 50, 100, whatever your favorite tickers are, and they've been underperforming, it's not necessarily a bad thing. They've been underperforming if you're of the thesis that we're going to have some form of a bull run into that election season at the end of the year. You should always welcome weakness in tickers if that's the case. So we're going to get into that more. We have to go over earnings. I didn't go over the bank earnings, and missed that, or I didn't have the time to do it, but we're going to look at the earnings for this year and a lot of your favorite tickers and stuff. I think we have the time today to get to some of those tickers. Right now, just coming back down and back check that hourly trigger. And we'll see if we can actually get the touchdown there and find out, are we bullish or not. And let me set up the levels for you this morning because none of these are accurate at this time. The pivot point, I think, is right. 471.65. Put that down there. One quick second here. Let me set these up. 471.65, 470.51. There's your S1. Support 1. Then we have 468.73. Here's your second support right here. And then down below that, we've got 467.59. Right there, it's close enough. And then above, we've already blasted through R1. And that's sitting at 473.43. We got R2 right here, 474.57. That's your R2. And then your R3 for today is 476.35. Up there. Shocker, right? That looks appropriate to me as well. That looks appropriate up here as well to me. I don't think we're ever getting back to that 4,800. Well, not ever, but I don't think we're getting back to that 4,800 today or tomorrow. Personally, I don't. I think that we do. I know some of y'all think that we are, but for me, I don't think that we are. Let's also take a quick look at the 30-minute chart here, and just so we can get some context, right? Just get some context here. Let's get some nice little context right here, right? So you can see this. 1, 2, 3, nice blast up. Woohoo, daddy, I love you. Right? Come back down, slam into that daily trigger. Come right back up here. Talk to you about coming into this on Friday and being told no. We're right back down again, okay? So just be aware of that. They're going to try to sell you here right now where we are today, but I don't know if it's either today or tomorrow. They should come in and try to sell this right back down again. Matter of fact, yesterday when I talked to some of you guys, and there's some lower targets down here, but there's a giant move coming up here. Now, I don't know where this is here, where this dip is going to be to buy. We'll talk about that as well, where we think it is, and where we think we're going, and we should have one more squeeze. I'm going to call it a squeeze because this squeeze should result in a big down move into late March, 21st, 20th of March, something like that. Pretty significant correction coming up in springtime. Should. Now, it doesn't mean that it's guaranteed that's how it's going to go, but we're looking forward with a plan to that, and we'll trade what's in front of us. We do it day by day by price action, of course, but we are at least, hey, this is what we think's going to happen down the road. If it's wrong, we'll adjust to it, right? But we're always thinking ahead of it. I saw someone yesterday on FinTwit bring up how shocked they are at how many people don't have a plan, how they enter a trade, how they exit a trade. If it goes against them, how they exit. Do they double down? Is their thesis right? Their timing is wrong. Your entire trade being planned out, right? We talk about that here frequently, don't we? Spend a lot of time on. Matter of fact, I think 2 days ago or 3 days ago, or 3 sessions ago that we were together, that I laid out a trade from start to finish, right? I was like, we're going to do this, this. And the moment that it fails, we know to exit our trade, right? That it's not going the way that we want it. And if we take this trade, what's our percentage of winning from the point that we take that trade? Like here's that we have a 30% chance, 15% chance, 30% chance, 60% chance, 80+ chance to make money at different places. And why are we at 15%? Why are we at 30? Where's the fail points in that trade? So we're gonna go over earnings today at some point. We're waiting for a back check here on the hourly trigger to confirm if the move is higher into Friday. Now, from my perspective, my price target on Friday was 475. I think that is top for this week at least. Personally, I could be wrong there. We could bounce off this hourly trigger and trade 480 or whatever, but I'm on team. Park the bus into the end of the week, somewhere around that 4750, 4750, and down to 4700, and then a slow bleed out into the end of the month. That doesn't mean we'll have some cool trades. We'll have some cool trades in this earnings season. We'll have some fun this earnings season, but that's what I'm expecting here at least. All right, let me just check these one more time here. Yeah, that looks right there for me. All right, so I'm going to go over a few things with you. I'm going to catch you up to the market, and we're going to have a quick chat about the market for today. And I'm going to read some notes to you this morning. One quick second here. Let me check Gamma this morning too, by the way. I want to make sure that we're the same on Gamma this morning. Make sure I'm not telling you one thing and the Gamma picture has changed. So I talked to you about the Gamma that's rolling off into this Friday. It's about half of the call Gamma that's in the market. There is another, the call Gamma that's running off the market. The market is still developing call Gamma, though, to the upside. So we'll wait and see how that works itself out. Put that in there. Yeah, so we're good. Oh, no, the Gamma flip is slightly lower. Gamma flip is it's slightly lower. It's 4750 or 4748 or something. 4749, so just below 4750 on SPX. It's gone down slightly. I'm going to leave this up for you right now. If you look at the bottom right-hand side of your screen, if you look down here, this is your Gamma flip right there. So we're just going to check and see the behavior on that flip, see if it holds or not. So we can bring that. I thought I had Gamma flip. Yeah, here we go. We'll move this over. Here's the SPX Gamma flip right here. We're going to see if that holds right there or not. And also note, too, we have a gap on SPX down just above the 5-minute trigger. So it is possible you could see like a quick break down below and then a recovery. So it might not bounce exactly off of right here because I'm just looking at this. I'm looking at this gap that needs filled on SPX. Small gap down there. Oh yeah, I sold. I was 100% of the money. So 475 was top for me. So I was out right on the open this morning. And I did say something about it, I think, when the stream came up that I was closing them. So, or that I'd closed them or whatever. Good question. Let me read some stuff to you. Fed's Raphael Bostic, the voting member, of course, says he doesn't expect the Fed to start cutting rates until the third quarter. Until the third quarter, according to Bloomberg. So Q3, they want to start cutting. That's bizarre. That's not bizarre. You know what the truth is? We talk about it, right? We're not getting any fucking cuts, and they're gonna fraudulently report fraudulent numbers. It's the highest point of fraudulence or fraud from the Fed, and they're gonna massage the numbers, and they're gonna massage the inverted yield curve and get used to it. If you want to know when they're gonna likely cut, if they were going to cut, it's not in well, I guess there'll be a September low. Maybe they want to start cutting there, but you're talking about volatility into the election. We should drop into September, and they're talking about cutting at that point, and then that vol is going to kick off, and the market's going to moon. It's going to straight fucking moon. So I don't know if I see those cuts at that point. And then it doesn't answer the question either. Like, here's another thing. When you guys hear about like, hey, what does bag holder mean, right? There's a whole story behind, like, bag holder is not something that was just made up. It has to do with the bag being empty, being filled along the way, and then people convincing each other that there's still room in the bag. You become the bag holder. It's not empty. It's actually full, right? Do you guys understand that concept that when you hear about a bag holder, the bag's not empty. The bag's fucking full, and the last person thought there was more room left in that bag. But they can fit a little bit more in and tell the next person that there's still a little bit more room in, even if it's a lie. And so when you hear things like when the Fed cuts rates, it means they broke something, but they haven't told us or we haven't seen it. So when you hear that talk out there, it's normally on a high. We're normally cranking on a high, plateauing, not like in the depths of hell, and we're chasing it down. They start that rate cutting, we begin to roll over, and they chase with more rate cuts as the market rolls over and down to the downside. That's about 80 to 90% of the, well, no, I shouldn't lie. It's about 80% of the time if you look in back check history on rate cuts. Now, there's some other ways for the market to go up during rate cuts, but we haven't seen anything, at least from the Treasury Department, to validate that that we don't roll on rate cuts. So if we're looking for rate cuts in the Q4 or Q3 or Q4, I'm going to say probably fucking not. You're probably looking for a high. We'll likely get that high from the election. And that high can last from December. We finish in December and then even into March. So if we're just cranking up there and you want to see a rate cut, it would make logical sense. It would be going against plebs, people out there saying, why are they talking about rate cuts? We should be raising rates. Look at how high the SPX is, right? So it should go counterintuitive to what you think should happen when we get those rate cuts. And hence that is where you come up with what if the Fed is cutting rates here, something must be broken because the market is up, right? Does that make sense? Okay. Okay, so what else are we going to read? Houthis warn that they are now in a direct confrontation with the U.S. and UK. Let me ask you guys a question about that. Do you think that there's any risk to for lack of a better word, terrorism from the Houthis with U.S. targets that are not tankers. I haven't heard anyone speaking about that on public, and I'm questioning that as well. If we're beginning to invite some form of terrorism too, there's an expansion of war going on in the Middle East. We all know, right? There's come on, let me drag you into this stuff. You saw the Houthis in Iran are exchanging, or Pakistan and Iran exchanging fire, which is kind of funny because they're hitting each other's terrorist camps. It's kind of crazy. If you guys, I don't know if that's been confirmed or not, but in the middle of the night last night, they were saying that they're not really. I guess they're attacking each other, but not quite. But there's an expansion to some extent, right, of tensions in the Middle East, and I always wonder about what's not being said. Is this increasing risk to an event maybe happening to the United States citizens? Every 3 to 5 years, when we don't have something crazy happen, you start expecting something crazy to happen that's unknown to the market. We're kind of around that. We're starting to hit that moment, right? So we had COVID was the last big one. So they tend to happen, like something unknown to the marketplace. The risk grows as time passes. So I'm watching that on the back burner, but it's still not meaning anything. It's not meaningful at this point. But people are aware of it. I'm assuming that you're aware of it as well. Philly Fed manufacturing was negative 10.6 versus negative 7.0. Negative 12.8 was prior. Initial jobless claims was 187,000 versus 207,000. Expected was 203,000. What else we got here this morning? I think that's all I got for you right now at this moment. Economic calendar. Today is Thursday, January 18th. For the rest of today, we have Bostick speaking at 12 o'clock today, so be aware of that 12 o'clock hour. And then on Friday, we've got consumer sentiment, the preliminaries, and then we've got existing home sales. Those are both at 10 a.m. tomorrow. At 1 p.m., we've got Michael Barr and then Mary Daly speaking at 1 p.m. and 4:15 p.m. respectively. We've got nothing scheduled for the 22nd. That's Monday. Nothing scheduled for Tuesday. Then Wednesday, we've got we start getting hit with some big data next week. Wednesday, Thursday, Friday, we've got serious data coming in. PCI, GDP. We've got durable goods, PMI, flash, all that kind of stuff. So we have a busy week coming up next week. I still want to see that a little bit more of that bounce there. I don't think we're quite done here yet. So a little bit more to come here. Let me read what you guys are saying in the chat right now. Go through the chat here. Good morning, everybody. Good morning, Harushi. Cannot be helped. John Boy. Binky, how you doing, brother? Sorry I haven't gotten back to you. Been crazy busy. Stacy F, good morning. Blissowitz, I love you, brother. Rocket Surgeon, Steve M1N1. Large Stock Bass, what's going on? TL, Brad A, baby. Adrian, Will M, good morning. Bizkit, good morning. She Kim, She Kim Ava, Princess King. I should just call you Kim. Kamel, good morning. How are you? IB Crypto, what's going on? And these events are random. How you have more faith in the system than I? I don't really have. It's a good question. Do I have faith in the system? I don't. I don't have faith in the system. I have faith in what they have to do, maybe. That's about it, though. Until they break it, and they do break it. And they intentionally break it even when they know it's broken. If they're like, hey, we know it's broken, at least let's break it then. It's hard to explain. Let's abuse it as much as we can, right? If we've broken it, just abuse the fuck out of it. Every time it breaks, we'll come in and fix it again. Remember when they were sitting on the court steps? George Bush was sitting on the court steps. You guys know the story behind all that, right? And this is 07, 08. There was a moment where U.S. corporations would not make payroll literally like McDonald's, Walmarts across the country. We're not going to make payroll, right? And we needed to pass a bill, a spending bill, in the Senate. The Senate said, I mean, I'm paraphrasing here, but you know, they were they said we need money like today, and the Senate was like, we can't pass a bill in 3 days or even 1 day, or 1 day, let alone 3 days, right? And I think Bush was getting like whispered in his ear, like, we need to pass this bill today, so there's money available, so we don't have riots in the streets of America. So they'll break shit to. My point here is that Wall Street will break shit and just come to the fucking steps of the Senate and say we need money today. And that's how ruthless they are, right? Absolutely ruthless. It's like the quest for greed. You watch the 3-hour the Kendall and Doc Baker doc, or their speaking thing. That was wild, right? A note on that video too, or that wasn't a video; it was an audio from Spaces from way back, not way back when, but I think it was 6 months ago or something. Think about the context. Could have been longer than that, but think about the context of when that interview took place. And that interview took place.
Time now at 10:15 a.m. Eastern.
Thurston Howell said he
ECB's
listened to it.
President Lagarde is due to be speaking at the World Economic Forum panel in Davos.
So that that interview took place when you had lots of insiders, bond insiders, market insiders, were pushing a narrative of the Fed and Treasury Department not proceeding with the amount of QE ever again that they provided in the past, and the amount of QT they had in the past. That there would be this moment of no more greed, I guess, or I don't know how you explain it, but try to tone down the volatility in the marketplace over higher time frames. And these guys, of course, are like, they're out of their fucking minds. They're lying to you 100%. The whole system would collapse. These aren't like regular traders, right? Like these guys are especially that Doc Baker guy. The guy was like a president of like the United States Bond Association or Bond Trader Association or something like that. That guy's legit, real guy. So that was a fascinating conversation, especially in the face of what was being pushed on public. I didn't see the Cat Williams stuff. Let me bounce through the chat here and say good morning, everybody. Go over to Twitch really quick. Good morning, Twitch. How are y'all doing out there? Green Man, good morning. JT, Limit Buyer. Captain Shonsky, full-time student, good morning. Jasmine. Momo Land, Wolf Circus, Market Squid, Vengeful Silent. By the way, if you want to chat here, if you're watching on YouTube or on Twitch, if you want to chat, we started charging $5 for the chat. It was mostly to keep out scammers, Russian bots, hit and run commenters at tops and bottoms in the market, and keep our alpha cleaned up. Now, there is a way to chat for free. There is an option, but it's that one extra step to keep the bots and the scammers and all that out of there. If you are watching on YouTube, you can watch us on Twitch and subscribe via Amazon Prime Gaming. It's free to you, and you can chat on Twitch. If you haven't used, not that I'm trying to push people from YouTube to Twitch, but Twitch's interface is very, very nice. You can like remove the windows while you're doing other stuff. Just listen on your phone while you're doing something else. And also, it's natively in real time. YouTube has a native delay where you have to speed up the live stream at key moments to be real time. Twitch, though, is real time. It's like second. It's like from where I am to where you are, it's like 1 to 3 seconds delay. So you can chat via Twitch if you like. If you've never used Twitch, I never used Twitch in the past. And so, of course, it's like fumbling the first time you use it. And you're like, I don't know if I want to do that. I'm comfortable with YouTube. Stay on YouTube. But if you want to chat, you can always I don't know, maybe mute and have the show on in 2 different places, watch it on YouTube, and then just chat on Twitch, something like that. There is an option, a free option, though, for you. Warriness, how are you? What do I think of AMC in its current state? AMC, I'm not a fan of the CEO, and I know the CEO admitted years ago, it's been 4 or 5 years, he was sitting in his shitty office that he's got probably rent controlled in New York, and he was like, what did he say? He said, I've got shares at $1.50 or 60. I think that's his total cost, right, in shares. And I think he even admitted, like, I'll loan them out to whomever to short it down to the ground. So I don't think that guy cares. We'll talk about AMC in a moment. We'll talk about GME, too. There's a lot going on in GME. Matter of fact, I'm going to write some of this stuff down. Hold on here. Because we're going to talk about ER. We're going to talk about AMC and GME. GME specifically has got me scratching my head here. So Warriors, we'll talk about both of those this morning. Beartown Sheriff, how are you? Trader Podcast, what's up, brother? Yeah, oil has to pump at some point.
5 minutes time,
Absolutely.
10:15
Agree with
AM
that
Eastern
statement.
Time. ECB's President Lagarde speaks at the World Economic Forum panel in Davos.
Yes, Trader Podcast. Give me Trader Podcast. Do you want to come on to the show, even if it's just audio, and we'll talk about that list this morning? We could probably do that first. If you don't want to do a video, do you want to jump on the show? Let me just chat briefly, or no? Let me know in the chat, brother. Green Man, thank you for subscribing. Steve Milley, what's going on, brother? Jade Pasture, Bubble Don, Bork, baby, stretching walls. Good morning. Goat Boy, good morning. Thanks for the you can also hit exclamation point and then type in Prime, one word, no spaces, exclamation point Prime, and it'll give you a link on how to chat in stream. Bork just made it super easy for you. So inside of Twitch, Bork just showed a link on how to sign up to chat for free. Thanks, Bork. I appreciate that. Sweet Trader Podcast. When do you want to do it, man? You want to do it right now? What's a good time for you? Drop a time inside of the chat, and I'll set it up. So Trader Podcast is going to give us a quick presentation on some data for ER season. We're going to take a look at that on stream here in just a moment. Hell yeah. You can do it right now? All right, give me 2 seconds. Oh, look at that bounce, baby. Bounce it like it's hot. So what are you looking for here if you're a bull? Do you know what you're looking for? All right, so Trader Podcast, give me 5 seconds. If you're new to the stream, what are you looking for here? Do you know? You've got an intraday basis, small pivots, right? You got this pivot here. You got that pivot right there. And you got that pivot right there, right? If we are going to get a reversal to the upside, you're looking for the 1 minute trigger and the 5 minute trigger to flatten. And then you're looking for a cross to the upside on that stuff, right? So you've got your back check that looks like it's working here. And then you're looking for a cross here, right? Of the red line, that's the 5 minute trigger. And then we've got the 1 minute trigger here, cross here. Right? And what is this right here? That's a bull cross, right? On a 1 and 5 minute basis. Right? Bull cross, 1 and 5 minute basis. We're looking for price to do what? We're actually watching to see if there's goodwill from buyers here, right? So I'd really like to see just the tip, right? We like to see that. Come back down here, test that cross, right? That cross becomes successful. And we're then looking for the next tip, right? right there. Just a little break. Doesn't have to, but we like to see it, right? The will of buyers, right? Demand is strong here, right? You tag that second one, come back down right here, and we know after this here and that here that the market is, or the buyers are showing up, right? This would be your big buy right here. This is where you go long up here. Well, your percentages get better and better. 15% chance, or 15% chance, 30% chance, 60% chance, and then boom, you're up here, right? Now you're tagging this one. Come back down right here, and this is your 95% winner right in here. It's where if you've done this 1, 2, 3, you're going to start having higher and higher percentages for us to go up here. So where your most consistent money is right in there. Okay, so we'll watch how this plays out and see if that happens. Now, so this is the plan, right? If it goes against us, what are we looking for, right? Like a failure of demand, right? You can see, if you see failure of demand, start to break down here, reverse here to the downside, right? Your pain is in here. Your stops are actually up here, right? So let's say you're taking a long here. You're like, I'm long right here, Captain. But then price fails, liquidation break, you're panicking. You're like, I'm cutting my calls here, Cap. And when in reality, you should have waited to come back up for the failure here and the closing the door in a bull. And that's where your downside is right there. Okay, Trader Podcast, give me just 2 seconds here. Trader Podcast, can you do me a solid and you know what? I'll just do it on Twitter DM. Hold on here, brother. Give me 1 quick second. I'm going to set this up here. Trader Podcast, I'm going to send you a link. Just share audio. And I don't have you showing on the screen anyway, so I'll put you in a waiting room. So we don't get you on camera here.
Monetary policy, however, it does say that anecdotal data is a key guide for policymakers there. So again,
I'm going to send you a link to your DMs, brother.
Just releasing an essay today for the Philadelphia Fed, not commenting on monetary policy, but says that anecdotal data is key.
All right, there's the link, my man. Boom. Okay, save that. So we're going to have a special guest on this morning. This is Trader Podcast. You guys may know him. There's a couple ways you might know him. He is very well known. Oh, we're going to get him in here. Hey, heads up, Trader Podcast. You are live. They can hear you.
Non-farm payrolls. Then sign up today and get our special offer of financial
good. Your video is off.
Worth our service for the price of 1 month and save 90%.
Now, you may know Trader. First of all, you should follow him on FinTwit. If you don't already follow him, it's TraderPodcaste. He's quite famous in the retail community. He makes really cool meme videos, and they go viral on Wall Street Bets. They go viral on Twitter. But he's also a great trader too, and he has dropped on us at some point. Maybe if we have time, we'll talk about another thing that he dropped on us on an MOC sell side 4 billion or more, and its implications, giving you an edge within about a week's time. If you buy that close, you will get a print. So maybe we'll talk about that at some point as well. Trader Podcast, are you here? Say something, brother. I can see that you're here, but I can't hear you. You should have a microphone button, a circular button on the bottom left-hand side of your screen, Trader Podcast. It's to turn your microphone on or off. Let's see if we can get him on here.
Can you hear me?
I can hear you. I think everybody can hear you. Say something again.
Perfect. Good morning, everybody. How's everybody doing?
Woohoo!
Yeah, the market's doing well. The dollar seems to be retracing its pump from this morning, so I like seeing that. But what I really wanted to talk about is Opex, and Opex is coming tomorrow. Now, as Cap has mentioned before, and a lot of other people that you might follow on Twitter or on, whoever, has talked about how this is a pretty big Opex that's coming up tomorrow. The reason it's really big is because every year when for single stocks, new options get opened, they get opened for January. That's the longest one you can usually open for. So if you go look at any of the tickers, you'll see that there's a January option for 2025. These get opened, these long positions get opened usually, 10, 15 months in advance. And when these expire, they lead to a lot of gamma in these individual stock tickers getting removed. So what you see on your screen right now is a list of 25 of the top expiries for tomorrow's Opex. So let me explain what I mean by that. So these tickers, like for example, NMM, which is Navios, they are a shipping company. Now it is trading close to its call wall at 30. And about 88% of all calls which are in the money or at $30 expire tomorrow. Now, what does that mean? So when calls are in the money, the market makers have to hedge against that, right? Tomorrow, when those calls get either assigned or they get rolled to the upside, what's going to happen is all that sticky gamma, all the hedging that the market makers had to do for these tickers goes away. So they can sell the underlying that they have been hoarding for a while. This leads to a lot of weakness in these tickers, is what the theory goes. Now, people can buy more calls between today and tomorrow, create like a gamma position above the call wall, and we might continue to stick up here or go a little bit further up. But because like in a lot of these cases, you see more than 50% of all calls get evaporated tomorrow, or expire tomorrow, not evaporated. That's the wrong word. They expire tomorrow. And because they expire tomorrow, going into next week and the week after, before Vanna and Charm really start doing their thing, you're going to see weakness in some of these names. Now, there's a couple of names on here that I do want to tell people to be a little bit careful of, because this is only an equities list. FXY, which is number 7 over there, is the yen. And the yen trades in multiple markets, not just the spot ETF. So that's something to kind of think about. You might not want to short the yen, or if you want to go ahead, but know that that is an incomplete picture just because this is only showing equities and calls expiring for equities. Similarly, number 15 is GLD, gold. Gold trades in multiple ETFs. It trades in spot markets. It trades in futures markets. So that is something to kind of think about. You might not want to do that. I would personally draw your eyes to number 22, which is Meta. Meta currently is 373 last I checked. And that is very close to its call wall at 375, and a significant amount of call volume expires on, I'll tell you exactly how much. 49.98% of all calls in Meta expire tomorrow, as opposed to 4.7% of puts. So that is something to think about if you are going to think about shorting mega caps. Like that's the one that like I am personally looking at. I am also looking at Chipotle Mexican Grill, because that is very close to expiry, and like very close to the price. And about 36% of all calls expire on there. But these are in the money calls, so it makes it a lot more interesting. So That's kind of what a lot of people have been looking at when they talk about that there's going to be weakness because this is a big expiry. This is a bigger expiry this year than the 2023 Jan expiry was. And that was the largest on history, on record. So this is now the largest single stock expiry on record. So yeah, that's kind of like what I wanted to talk about. And yeah, so here's the other thing too. I see somebody's talked, Bork is talking about too poor for Chipotle though. Yeah, you can sell call spreads. That's a lot more doable to make some money. You could sell call spreads, let's say at 23.50 and 23.55 or something. And that's going to cost you $500 in premium, but you might be able to collect, a nice 30-40% return on that. So yeah, so that's some of the ways to think about what you're doing. But anyways, these are the places where we would see some weakness. A lot of these are also things that have done well, like RCL. RCL is Royal Caribbean. Booking.com, they've kind of been on a tear, these two tickers. So you kind of want to reflexively short them as well. But now is the time to take your shot.
Do you have any questions in the chats? If you are on YouTube or on Twitch, if you guys want to give shout outs to Trader Podcast, that Deepfake Master, right? I saw that comment earlier. You guys have any questions on some of the tick, or maybe you have a ticker out there that you're looking to short as this gamma rolls off single tickers into the end of the week here? Any questions about your favorite ticker out there?
I have my spreadsheet open in front of me. I can look up any tickers. Yeah, if somebody lists them, I can tell you how much is expiring.
Sweet. So if you have a ticker, you want to find out if they are near their call wall, and if they have a bunch of their calls rolling off the market into Friday, and you're interested to find out if there will be an attempt to short that ticker, list them in the chat.
Okay, Tesla, that's the first one. Let's see.
Yep, Tesla.
Tesla's call wall is 240, and there's 51% of call volume expiring tomorrow.
Waterboy is asking, does this hold for the inverse? Say if puts are deep in the money, then calls?
Ideally, theoretically, yes. That's what that means, but there's not a lot of in the money puts for a lot of these tickers. SMCI, I can look at SMCI.
You've got AMD, MBLY. I love MBLY. They got torn down last ERC.
Call wall is at 350, and next expiration call volume percentage, which is tomorrow, is 52%. But out of all the call OI, only 30% is expiring.
On SMCI?
On SMCI.
That was for Doug Fuller?
Yeah, and then Mobley.
Yeah, MBLY.
Yeah, I like it's an old joke. Yeah, Mobileye. Call wall is at 30, and 56% of all the call volume is expiring.
At home, if you want right now, as we get into the next tickers, do yourself a solid here. I don't believe this is on public, but what I want you guys to do is get out your snipping tools at home. And if you want, take a quick picture of this list that's in front of you right now. We also have AMD.
I'll look up AMD in a second.
right now, right? Did we already do that one or no?
We did Mobileye, and I am looking at GoDaddy. It's 2%.
How much?
2% is expiring. 2% is expiring calls. So
not
GoDaddy
much.
should be not much. GoDaddy should not get impacted too much by that. And then AMD. I suspect this is going to be, call wall was at 150. It's already blown past this call wall, and 56.57%. So all this data is from last night. So I just want to tell people that it's all from last night. And given how much where AMD is right now, I'd expect even more weeklies to have come in. So more calls would be expiring, but it's about 57%. for AMD. BA, sure, I'll look up BA. So 33% of call volume is expiring, but only 10% of all call OI is expiring. And interestingly, 33% of puts are also expiring.
Oh, no kidding.
Yeah. So it's pretty evenly balanced for Boeing. Now, I just got a question. Cap, do you want me to answer this? Because I could kind of get into a little bit more.
Answer whatever you want, man.
All right. So the question is from Stretching Walls. Any additional insights on SPX or NDX that add any depth to what Cap's been saying about call and put walls? So if you see on my Twitter yesterday, I posted a long thread about volatility. And like, I talked to Chem Carson, I talked to Vol Signals, I talked to Options Depth. I try to amalgamate all of the stuff that they are talking about to get a better understanding of how I want to position myself. So what I've been looking at is the implied volatility across SPX. And what I'm specifically looking for is there more put demand than there is call demand. And so far, what I'm seeing is that going into February 9th and February 16th, our spot is right now at 4755. The IV right now is more than 1.5 standard deviations higher than what it has been in the last 2 months. So statistically, there is more demand for puts right now because of the perceived weakness and people want to hedge. Now, when people want to hedge, that could mean two things. It could be downside speculators that are buying stuff, or there's money in the market that is trying to protect itself. So I don't think we are going to get a big crash. That's my current working thesis. Because vol is getting more expensive, that means dealers can come in and sell more vol. That has been the story for the last 9 months. We've been systematically writing puts 7 days out, 30 days out, and gaining delta from that. I mean, people have been collecting theta from that. And that kind of puts a floor under the market. IV had gotten so low. It was a 12.5 handle. And, at that point, it doesn't even make sense to sell volatility. So we were not, people were not selling volatility as much. And that's why we kind of saw a bid in volatility the last 2-3 days. So what I'm trying to say here is once IV rises, it makes sense for dealers to sell. But there is a lot more demand right now. So I don't expect there to be a big crash. What I expect is if we're going to get a downside move, it's going to be stair step down with an occasional rip in the middle that you sell down as well. Something we saw in late 2022, we might see something similar. Now, whoa, that's a nice bear candle. So anyways, that's my current working thesis. I am cautiously optimistic to the upside. But I am very cognizant of the fact that, there is overhanging macro, and this is a window of weakness, as Chem Carson likes to say, and we're in the middle of it. And both of those can cause things to, slide down. But I don't think it's going to be a big slide down. So, yeah, I hope that answers your question. What does Coney look like? Okay.
YouTube's asking some questions about Coin,
Sure.
Docu, Etsy, Mara. So Coin,
sure. Give me 1 second.
I think we need to show just a bit of love to the YouTube crowd really quick.
For sure.
We'll jump back
52% of call volume expires, and
30% of call volume.
52%.
52% of
Coin.
call volume expires
And
on Coin.
And 43% of the put volume.
So net neutral almost.
Almost neutral, and it's call wall is at 165, its put wall is at 135. I wouldn't expect it to slide down that much further. They should kind of act as support, the 130 to 135 region. All right, so
Docu?
Docu, yeah, sure. Give me 1 second. Is 28%, 28.5% call volume expiring and 40% of put volume expiring for DocuSign.
Etsy?
11% call volume expiring and 11.7, almost same in put volume expiring. So
Not too much.
and it's
there.
and not too much there. And its call wall is at 80 and its put wall is at 74.
Mara.
And yeah, the Bitcoin stocks are pretty popular right now. Okay, let's see. Put wall is at 22. Call wall is at 30. 56% of call volume expiring, and 57% of put volume expiring. So about the same.
What else we got here is Kamel is asking, would that imply weakness for AMD tomorrow?
I would suggest so. It would look like that. But all the semis are kind of pumping right now. But I would suspect, given how it's at all-time highs right before one of the biggest Opexes, does not make me feel terribly bullish at this point to purchase AMD. How about I say it like that?
That's a good way to say it.
Yeah.
And I want you guys out, if you're watching right now and listening to Trader Podcast at this moment, the thing about this is we're presenting information to you. It's not, hey, this is going to happen or that is going to happen. Oftentimes the Twitter mob, the FinTwit mob likes to go out there and just like burn people to the ground. You go find their profile and they add nothing to the conversation. So take this, not to take it as a grain of salt or anything, but take it as another piece of information for your decision making and your education that you're doing on your own thesis out there. We also have Binky asking about FDX. He's been asking about FDX.
FedEx.
Yeah, FedEx.
Yeah. By the way, for what it's worth, I really like FedEx and the turnaround story they've got going on. And FedEx, 10% of its 22% of its call volume expires, and 9% of its put volume. And its call wall is at 260 and its put wall is at 245. So it's kind of right in the middle. I would expect there would be more secular things that might move FedEx than just options positioning. Now remember, like this list that I showed you is like where I would expect options getting removed to impact the stock most than other things. There's, I have all 3,200 stocks on here on my spreadsheet and their positioning on there. So, it's not all of them going to work.
I'm fascinated that you're bringing that up because Binky has brought that up as well, what you're talking about with the secular or the news surrounding or the environment surrounding FedEx and UPS. Binky, maybe we might have to have you on, man, and talk about some of your theses on FedEx right now. I'm fascinated that Trader Podcast is bringing up the same stuff that you have on FedEx. So, Binky, if you're hearing that, if you want to come on at some point and just chat about FedEx or UPS, we could do it today if you want to. Okay, so let's go back over to. It looks like we got a bunch of questions done on YouTube. Let's go back to Twitch really quick. See what those guys are saying. Bork, you want what? Lily. Someone.
LLY?
Yeah, Sam wants to look at LLY.
They increased the prices yesterday, so that's bullish, right? 32% of the call volume expires, and 51% of the put volume expires. This would also feed into the fact that if tech is going to get rotated out of because, people are going to take profits because it's been up so much the last year, rotation into healthcare would kind of support this too. Anyway, so for LLY,
I believe in a large rotation into healthcare.
yeah, I'm long
this
XBI,
year,
so
or especially
yeah.
equipment, healthcare equipment. But go on.
Yeah,
Continue.
no, that makes sense. So let's go back to LLY. Its call wall is at 650. Its put wall is at 625. The largest gamma band outside of those two, so which would act as like support, is 630. 32% of call volume expiring, 52% of put volume expiring tomorrow. And so actually, and I could put this into numbers, almost 5 billion in call delta is present on LLY, and that's gonna like impact how the stock responds. It might not pump immediately, but I could see a pump in its near future next week.
So I have another question for you here. Trader Podcast would be, or not question. This is for. Let me see if I can bring this up here for everybody. So this is in line with all these single ticker expiries. You also can see the gamma on SPX rolling off for a culmination into Friday of 180 million. You got 50 million, 42, 20 today. That's Thursday, right? But then Friday we got the big bad boy here, minus 180 million. This is invariably half of the call gamma on the market expiring this Friday.
Mm-hmm. Mm-hmm. And you know what's really interesting about that too, Cap? We were in such high positive market gamma that's what we kept seeing. We kept seeing like all dips getting bought. If we rally too hard during the day, we saw mean reversions down. That's very characteristic of positive gamma regimes.
Mm-hmm.
When you get a negative, and so even though we've lost all this gamma, we are still positive gamma in the market. So markets are still, the positioning is still somewhat supportive of the indices, specifically SPX. And that's kind of what we're seeing. Yesterday, it got to just above neutral. It had shed a lot of its positive market gamma on SPX. We got just above neutral, so still slightly positive. And now we're seeing supportive flows come in today. It's what we're seeing today. And the thing is, I think you said this once, and it resonated with me so deeply that I say it all the time. All-time highs are made with volatility.
Mm-hmm.
So what we're seeing, if we tomorrow, when a lot of this gamma flips off, like goes off, right, we will be in negative gamma territory, which by definition means volatility is going to be higher. We are going to either get big rips or we're going to get big dips.
Mm-hmm.
Right, that's what everybody is like looking forward to. Now, that to me, given where we are, like around 475, we're within 1% and a quarter of all-time highs. So that's what like really like has me thinking a little counterintuitively, as opposed to all the doomers on FinTwit. I honestly think we could make all-time highs and keep running till Valentine's Day. I really think so.
I agree.
And if we do, and then Valentine's Day is where I would be like, okay, this is kind of the point where I, step off the gas a little bit, think a little bit more about, hedging for the downside, or just sitting on the sidelines with cash, collecting money in my money market account, and then just buying the dip when that happens. So there's another tool I'll show you. It's a very naive tool, and I generate it every night.
I like naive, man. I got to be honest. For a long time, I complicated my thinking. I got like go down the rabbit hole, learn so much stuff, and it did more disservice to me than just understanding the basic mechanics of how the market moves. So you did tell them about.
All right, I'm generating it right now, and I'm gonna send it to you because it's gonna be a picture and via DM, and then you could probably pull it up.
You are correct, by the way. The 14th of February would be the top of the market. for a major corrective move to the downside into March 21st. February 14th, March 21st. Good job, bro. Right on. I like you. Always have.
I know you like me. So,
Always have.
All right. I just sent you a picture of a
Let me see
chart
what I got here.
on your Twitter DM.
Okay. Hang tight here. We'll let me download this really quick. Give me one quick second here, and I'll bring this one up next. This is so odd. Hold on one second here. Having some formatting issues from. Hold on, let me do this again.
Razorback Bradley, I see you. I'm sorry, I did not see that earlier. Let me pull that up for you. Apple. Its call wall is at 187.5. Its put wall is at 180. Next expiry call volume is 44%, and next expiry put volume is 45%. All right. Yeah. Okay. So this is a really naive tool that's on screen right now. I want to.
I use this tool in stock charts all the time.
Oh, you do?
Yep.
Actually, so this is like I created.
Or similar.
This. Yeah, similar. So what it is, what I do is I take 101 day look back, right? And the black line is, and I index it to 100. And so the black line is the current price action over the last 101 days, including today. And what you see, what I do is I go back to 1940 and I look for all series, time series that are 101 days long, that are highly correlated. So the correlation cutoff that I have is 0.93, which is considered pretty high correlation. But then it generates a whole bunch of time series that correlate with this. Then what I do is I run what's called a Granger causality test. Granger won the Nobel Prize in economics for his work on time series data. He came up with this wonderful test, which you can take one time series and compare it to another time series and say if time series A predicts time series B with any sort of statistical significance, right? So what it then does is it spits out, well, after I run this test, it spits out a bunch of them that pass at, at 0.05 level. But I run this with a very tight threshold. My p-value that I look for is less than 0.0001, which means that these series are in 1 in 1,000 chance of predict these out of all the series. These series have a 1 in 1,000 chance of predicting, and these are correct. So what you see here, and the way I read this chart, the black line is now, and if you look at the historical chart, you see like there's a whole bunch of correlations. Look at that green line, 0.95 correlation, right? And it kind of like grinds up, and then we kind of get a little dip, and then it continues to grind up into the end of the year. Now, conversely, look at the brown line, which is almost 0.95, and that kind of just chop trade down into the end of the year. Now, these are trading days. So this is not calendar days, this is trading days. And if you believe, like I do, that no matter what happens, human nature and human psychology remains constant over time, despite all the new products, equities, options that are available, price action should remain similar. This is a really cool chart to seeing what are the possible outcomes in the market that we could follow. And right now, I don't have a call to make. And this is why I said I'm cautiously optimistic of us going up. but I'm also cognizant of the fact that we could go down, because right where we are at an inflection point into tomorrow. So either we start the grind up or we start the chop down.
Yeah, it's fascinating to see right here that this is that one outcome up here, and then we have this other outcome. We have a let me see if I can clear all this stuff here. So we have a pretty clear delineation here, right, of like a move up, and then we've got this move here to the downside here. It's a little bit of an action here, the sideways grind up into the end of the year, but we also know the elections are coming. But I see what you're saying, and this inflection point is almost clear as day, right? Or at least where we start to get right in here, we start to get a decision on market direction for the year. You know what else would be fascinating here would be to maybe bring on David AMS at some point to look at this chart as he tracks this same stuff going back multiple years, trying to find out where that manipulation takes place. And this is likely that we're coming into that moment, right, of that manipulation. Like you guys know how you look at a chart on a weekly base or a 1 week basis. Look at a 5-day chart, and you guys hear about all the time about turnaround Tuesday, manipulation Wednesday, or what the fuck Wednesday. You'll hear, and then you'll see monetization on Thursday, and then we sell out of the trade for a weekly trade. And you can do that on a monthly basis, a 3-month basis, a 1-year basis. And it all correlates on every time frame. So it doesn't matter if you're looking at a year chart, a 3-year chart, 5-year chart, a 1-week chart, and even an intraday chart. And as a matter of fact, this morning, David AMS spoke about sweeps up on high this morning in the marketplace and pre-market. And this is a similar concept if you're trying to grasp what this means on a yearly basis. All right, continue, Trader Podcast. What else you got, brother? Sorry.
Well, these are some of the tricks in my bag that I have right now that I'm willing to,
man,
comfortable with sharing.
Yeah, you're coming on board for the Trade the Trigger network, aren't you? The supposedly I've been talking to Trader Podcast in the background, and maybe we can get him on board here more frequently, even if it's in written form or something like that.
Right. Yeah, no, I'd be happy to. As I said, I'd be happy to contribute to the platform. I think it's important for people to understand one thing, though. It is good to get information. It's good to look at information, but the trade is yours.
That's right.
So the trade is yours. You make it your own when you press that buy trigger or when you press that sell trigger. It is your own. And these are some of the tools like I look at. Like, for example, like I personally miss the trigger a lot. I have cobbled together something for myself.
Dude, Trader Podcast. Hold on a second. Shoot me your TV right now in DMs, and I'll get it to you right now. Done.
All right. Let me send that over.
Done, dude. Do it right now for you. Gotcha. Done.
Yep. Yeah, thank you. I appreciate that. I personally love the trigger because you know what? I have a script too. Let me share that, and I'll be. It's kind of private right now, so people will have to.
We'll talk about it in a bit.
Yeah. But anyways,
we'll come back to it.
Yeah. I don't know if there's any other questions. I'm happy to.
Yeah, if you guys have any questions right now, you guys want to. Maybe first of all, thank you for coming on and spending your time with us. We always appreciate that. And have been talking to Trader Podcast in the background for last month or two, trying to get him on board to join us on the team. And there's a bunch of other guys out there that some heavy hitters out there that are supposedly going to join the Trade the Trigger network and give them a place to for you to interact with them and maybe. You guys like being on Wall Street Bets, so then you like to go to Twitter for this. You like to go to YouTube every night and watch a video, and then you can hook up with retail traders and find out what they're thinking in I don't want to call it a safe space, but a place for them to lay out some of their stuff and that they can do it without getting torn to pieces or shit on or any of that kind of stuff. So Trader Podcast is in, we're working with them right now, hoping to get them on board here. You guys have anything you want to say at Trader Podcast? What do you guys got? Matter of fact, let me get you his handle right now, really quick, and I'll get you his exact handle, and you can follow him. He's got 7,000 followers. It's criminal that he doesn't have any more followers, and I'm sure he'll follow you back too. He's not the he's like, dude, he's a regular guy just like you and I. So here's his Twitter handle right here. He always lends good insight. He always lends him. I'll tell you. I want to say something about Trader Podcast, and I don't know if you know this Trader Podcast, but I follow him closely because when someone says something on FinTwit, I always notice that Trader Podcast is always there trying to lend to the conversation. Whether he agrees or disagrees is irrelevant, but he's there trying to be constructive. And so if you follow him on FinTwit, you're going to see how he weaves his way in and around some heavy hitters out there and trying to enrich the conversation that's going on. So do yourself a solid. Follow him. Trader Podcast. I just posted his handle in the stream.
Yeah, thanks, Cap. I appreciate the support, man.
It's a great quality, dude. And your crew there, like Vol Signals is amazing. I like him. A whole bunch of the guys that you run around with, I think, are amazing. So
yeah, it's so for me, like there was a big fundamental shift in the way I started looking at the markets in the last couple of years. And I moved away from fundamentals.
Yep.
Because I just moved away from that. I did use a lot more TA, and then I have a statistics background. I enjoy statistics. I'm one of those nerds that does. So
tell him about the idea behind how statistics and probabilities can really help you in the cash market as a retail trader.
Well, yeah, because so the way I look at it, stock markets. I'm sorry, like I have cleaners in the house right now. They're cleaning, so if you hear a vacuum, sure. I'm so sorry.
No worries.
So probabilities and statistics help you understand the world around you. Like, it helps you become a little bit more intelligent towards reading the newspaper. It helps you become a little bit better at gambling. And stock market is the biggest gambling then there is. So
there's a lot of places where people make fun of probability and statistics. Right. Or they say they don't matter, they're not applicable. But like you just said, the stock market is a place where it can treat you. Probability and statistics can treat you very well if this is an environment like baseball, right? If you're batting a 300, you can make it in the Hall of Fame, right? And the stock market can do some of the same stuff for you too if you trade appropriately to that, right? If you're like, hey, I'm looking for a 300% banger. And I only hit that 3 out of 10 times, you're going to do quite well, right?
Right. Renaissance does exactly that. Their percentage is 51% of successful trades, but their profitability factor is over 10. Mm-hmm. So they're better than a coin flip, but each of their trades is extremely asymmetric. So it ends up paying them quite a bit. Like each of those, the ones that like hit.
Instead of running 10 trades and making 30% on 10 trades, losing one. Yeah, and their buy-in is probably, you guys know what I'm talking about likely, but that's running the wheel strategy. You get that one heavy loss and you're out of pocket. That's plus your taxes and the cost of the trade. And you're kind of up on the year, like 10, 15%, 30%, something like that. But just that one hit is a major hit to you out of those trades where if you bang 3 or 5 out of the park out of 10, and you're looking for that asymmetric, like 300% banger, 500% banger, 1,000% banger. You're going to beat it all day long, right?
Right. Exactly. And so B Harder, your question, this is not a 0 DTE strategy for Opex. So that will play out into next week. So I would give myself 3 times as much time. So a month out is ideally what I would say,
Who are you speaking to right now?
B Harder 12 on Twitch.
Says his expiry strategy, take a week out or to be used tomorrow's 0 date. You're saying not 0 dates, right?
Yeah, not 0 dates. This takes time to play out, right?
Yeah, it takes time to play out. And also you've got the dealer, usually especially on events like ER, you've got dealers that'll wipe the boards first, right?
Right.
and put the pain on until that first expiry is done. So if you're trading an individual ticker on ER,
Mhm.
you already know there's a run-up phase, right? People are either selling it down or they're buying it up. Then you've got the event phase part of that trade. That's the event. Sometimes we will blast up or down, and dealers are forced to chase that move if it's that quick. But generally speaking, you'll get a top and bottom side expected move tag, and then
Mhm.
they crush that next expiry, and then the real trade happens after. Does that sound right or no?
Yeah, no,
Or
that's kind of
frequently?
how it depends, you know, it depends on how much stuff is in the money
Mhm.
that's getting rolled out or getting assigned. And so the dealers can, like, if it's like I remember, like in December, like the December Opex, Nvidia got taken to the cleaners
Mhm.
just because there was just so much call gamma that expired in Nvidia. That complex, I tweeted about it like leading up to the December Opex, and you know it was around the 500. It was from like 450 to like 525. It was just
So
calls.
you're also positing that doesn't matter what the news is on some of these tickers, that roll off and in
Right.
the money call gamma is it's going to still force price down, right? Or up.
It's gonna force price down for the most part because there's like the ones I shared, they're mostly call heavy
Yeah.
expiries, right? So
Yeah. Or up would be if we're put heavy and
yeah,
in the money.
but again, yeah. So like for example, one of the other people just asked, did I talk about GME? I pulled up GME. GME's call wall is at 16, its put wall is at 15, and its next expiry call volume is 32.5%, but the next expiry put volume is 47%. So that's a put heavy expiry.
What
So
expiry is that, if you mind my asking? You're gonna go look it up?
it's uh it's the one that's coming up tomorrow, Opex.
So they've got
Yeah.
a huge puts rolling off tomorrow.
They've got huge puts. Doesn't mean that they can't get rolled into like more deeper
Mm-hmm.
in the money puts or more out of the money puts. Wow, this is a nice bloodbath we've got going on. VIX is the Dixie is on a rampage right now. The
I'm
dollar
looking
bulls
at.
are
Let me
eating.
take a look here. Tesla rolling down even harder right now. Tesla not liking this at all.
No, Tesla's kind of given up everything
Mm-hmm.
from pre-market, and I'll buy in the 160, 195s and 160s is where I plan on buying Tesla. This is not the time.
Let me take a look here. I'm having some lagging. Tesla now trading 210. Nasdaq
Yeah.
with a quick roll down. I'm not too concerned here. I'm on a 1 minute chart
No.
on Nasdaq, looking for a trade back to 16,855. We also have a cross coming up right now on SPX. You can see the 5 minute trigger is crossing the hourly trigger right now. I'm gonna have to buy this actually.
Yeah.
We have the cross taking place right now on the half hour and hourly trigger on SPY. You guys see the cross happening down here.
Yeah, it's a higher low. There you go.
Yeah, I'm pretty
Nice
happy.
call. Nice call.
I'm still not bearish here at all.
No, and then the only thing is at 1 o'clock in 2 hours, we've got a 10-year auction.
Yeah, we got a 10-year coming up. So right there, you see the cross taking
Yeah.
place down here.
Yeah, and the 10-year auction is also only 18 billion in treasuries. What's really important also towards the end of the month to think about, guys, is we get the QRA announcement.
That's right.
And that kind of feeds into like my February 14th market top. Because of election season, I honestly don't think that Janet Yellen is going to go heavy coupons again. She's going to do the same twist she did.
Yeah, if she
in October.
reduces the coupon issuance, the equity market and the bond market should rip like parabolic, right?
Yeah.
If she
Yeah.
reduces coupon, that's what you're looking for. If you guys are out there right now, so who was asking about that the other day? Was it let me see here. Who was asking about this earlier in the week? Was which one of you guys was asking about this earlier in the week? Someone on YouTube was asking about it earlier in the week. So let me see, who was that? Because I thought he was here earlier. I think it was Kamel that was asking about it earlier in the week. So Kamel, you're basically looking. You want to see, if you want to see it now. This doesn't. I want to say something clear here, okay? If you've got the stock market that's expected. Let's say you come up here, right? Have a March low, come up here for a summer run, come back down for a September low, and then up here. This thesis wouldn't be like the blast down, right? That's like rate cuts, that kind of stuff. Market events, something like that. We don't know about front running rate cuts, something like that. Whatever that is, okay? That's that downside move. This key QRA announcement would mean something more like this, like violence to the upside. Maybe some large pullbacks, of course, mixed in, but it's not this nice slope and it's not this downside, but something like this. And that would only be if, write this down at home, if you're looking forward to this. Now, Jedi Marcus made a point that it coincides with a bunch of tech earnings too. But you are looking for Janet Yellen to reduce coupon issuance. That's like the line right there. If you're looking for that parabolic move, now we'll say something. There's only like a 5 to 15% chance of that happening. There's not really a large chance of that happening. But it is there, because if they did this right and they proceeded to make cuts, you would not see the rollover in the stock market that's anticipated once they do begin to make cuts, with unemployment rising and inflation or bouncing off 2% and going straight vertical. That whole thesis would be washed away if that does happen on the 29th, 30. Is it 31st Trader Podcast, or is it the 29th?
We don't know. I think it's going to be the 30th or the 31st.
Okay, yeah, somewhere in there, right?
Yeah. I don't know the exact date, but it's somewhere in there, and we'll know. And if it's like more shorter dated treasuries, so that's what's called a twist. If they do that, the market is gonna essentially be a loosening of financial conditions. You're gonna see mortgage rates start to drop, and you're gonna see the market just take off. So,
and if they were to do that before they make cuts, and we know about it,
so the thing is, it takes away the cut. It takes away the March cut completely, and then. Because the thing is, so there's two competing narratives, right? Does Jerome Powell do the cut in March to basically be like, I am not beholden to Biden? Because if he does a cut later, if he does it later, it's going to be like, oh, this is political pressure.
That's right.
But if he does it right now, it's not political pressure. It's because the time is appropriate. Now, so that's one narrative, right? Like that we get the rate cut in March. For why we would get a rate cut in March. Now, the other narrative is financial conditions remain good. We are seeing inflation go down. We don't need to do a cut right now. And that would only happen if there is a somewhat loosening of financial conditions by this QRA. If we don't get a twist in the QRA and it comes out 60-40 like it usually is supposed to, then, in my opinion, what we see is the onus on the Fed to cut rates in March. So either way, I think the anticipation starts to come in. Keep an eye on the...
Do you notice that it hasn't been much of a topic of conversation? Like, I've only seen 2-3 real discussions going on in this QRA. I haven't seen many people speaking about it.
Yeah, people are hedging their, are watching what they say. They don't want to be offsides on this, right? And the other thing is also...
That's a key point, too, is that I think Jedi was making yesterday. Not that you can't short it, just I wouldn't be shorting it. I'd probably be sitting on my hands until that data comes out, right?
Right. Like that's the thing. And then the thing is, it's gonna be such a crowded trade so quickly because everybody's gonna short yields. If you get the bullish QRA from Janet Yellen, where it's mostly just short dated treasuries. Because as a country, we can absorb short dated issuances. Absorbing 30-year at 5% is a lot harder than absorbing 5%, 5.5% at 6 months. So that's kind of like that's my thinking. As I said, like I like to think of myself as somebody who's not smart as Michael Burry. So
That's
I find
right.
a lot of
Even when you are, even when you are.
it doesn't matter. I just find it myself to be in a much happier mental position when I'm buying the dip than when I'm trying to short a top.
Joe Donut and I were talking about that yesterday. That how difficult it can be for timing selling rather than buying. I mean, I guess it's not so bad on an intraday basis, but generally speaking, it's easier to be buy the dipper, right?
Yeah, I mean, there's a survivorship bias in the market.
Let's talk about that. If you disagree, say you can disagree anytime you want. So
yeah, so there's a survivorship bias in the market. Non-performing assets are removed from the S&P 500, and performing assets are brought in. That's why the market always goes up. And it's really important as an investor, as a trader, to think about it in that way. Yes, we might go 10 years sideways, but the market goes up. You have to find other strategies to generate alpha. And whether it be stock picking, whether it be call overwriting or put underwriting, you can generate alpha like multiple ways. And it's up to you to do that. But in general, the market goes up. I mean, just zoom out and look up and to the right.
I think Winky likes to talk about that too sometimes, or as well, I should say.
Yeah. So it's to me like it's a lot easier being a dumb bull buying the dip because it pays off a lot more than timing the top and putting enough leverage into it to pay off. Because we don't go down in a straight line. We can go up in a straight line, but we don't go down in a straight line.
We had that exact conversation yesterday or Joe had that exact conversation with us yesterday on a phone call. This exact conversation about the difficulty about being a bear and a bull, and then this and tied into what you're saying right here.
Right. Like even if the screenshot that I sent you, right, you see that brown line, right? It goes down, but it like chops up and goes down. So if you are like, doing a straight Vega trade, or you're doing so look at the brown line. It does not go down in a straight line. It's going down. It goes down significantly. But
and there's some saving grace down here too that it eventually comes back up again, right? So even if you're wrong, and you're just DCAing down here, you're still going to. I always like watching people say like the SP 500 is underperformed for. I always see people say things like, if you had bought the SP 500 and held it for 10 years, it didn't produce shit for you. But what they don't tell you is the compounding dividends, what that pays over 10 years. And it outperforms most of the market, right?
Right.
Generally speaking.
I see your comment, Retro Mantra, and it is a good point. It went down straight for 2 weeks, but then what happened? That's my counter to your argument.
Yeah, but then what happened? And we had this exact conversation yesterday, Joe and I, right? And I was like, the worst part is on this is if you're looking at 10 trades or 100 trades, so if the safest one is going to be just buying the S&P 500 on a dip, on a major dip, right? Even if it goes down for 6 months, a year, or whatever, right? And let's say you get a little bit more risky. And you're like, you hear people out there say, well, if you just buy these zero dates every day on a SPY or Qs, in over 100 trades or 1,000 trades, you're still going to be a winner. There's even more safer ways, but that can give you an higher wins, right? Spreads, spreads, like any major dip in the S&P 500 or the Qs. If you were to buy a call spread with enough time on them, especially in oversold conditions, you're pretty much a guaranteed winner 9 out of 10 times, 28 out of 30 times. Let's talk about that really quick. Let's see if I can bring this up. Explain, or you just keep talking trade podcast. I'm going to bring something up for these guys to see.
Gotcha. So yeah, that's great, Retro Mantra. I'm glad you took that short. I'm glad it paid out for you.
So let's talk about cycles, maybe. Let me see if this is it.
By the way, I also want to say, Cap and I, before December quarterly Opex, him and I were on a phone call, and I said that the collar is going to get blown this time, and I just want to say this, Cap, I was right. The collar got blown last quarter. It's not going to get blown again.
Totally, dude, totally. Totally got popped, which is rare, right? We know it's not common.
It's 1 in 17 times. It's happened
That's
3
right.
times now.
It's not common, dude.
But all the other positioning was screaming at me at that time that we are not going down to 45.15. There was too much support. There was too much sticky call gamma sitting there, which would just allow for mean reversion on a longer time frame. But anyways, I don't think that's going to happen this time. So I think we're range bound this quarter. So this is going to be a rough quarter.
We're going to talk about something quickly here on what trade on a larger time frame. What Trader Podcast is talking about. Okay, so I want you all to know out there. Now, this doesn't mean you shouldn't be if you feel more comfortable shorting, you feel more comfortable selling the market. I understand that. If you have a high rate success rate on selling the market, then you should stay doing that, right? If that works for you, stay doing that. His point is that it's easier to be a buy the dipper. Now, I want to show you guys something here. This is when we had and this is in relation to what he's saying here. Let me mute my camera real quick. Get rid of that web frame right there. Now, and Dan Niles is a big time bear. Okay. And he'll say things like right here. He'll say the market's going to crash, but I bought the oversold bounce down here. Now this is market breadth, okay? And this is an easy way to describe what we're talking about here. So I want you to see this topping action in breadth right here, right? But what you end up having is more squeezing action, right? Where this is rotation, believe it or not, in other sectors before you actually get your roll down the road, right? So it's kind of hard to see where the top is, unlike bottoms. When you get down here and you get these bottoms, you tend to still have this upside, almost immediate action. Same thing down here, right? Same thing down here, same thing down here, same thing down here, right? So the idea behind this thesis is, even if you were just looking at market breadth from a market breadth perspective, if you were to get into a market capitulation moment where we're at 30 to 21 over here, you see this total over here. You have a a capitulation phase that blasts us down. Let me change the color over here. It's easier to time a dip to buy. As we come down, you're like, oh God, this is terrible down here, right? We're blasting down, right? We have this one moment, boom. If you were to buy a call spread down here, you would have made money, even if we had continuation to the downside for a roll. Even if you had this right here, whoop, all the way up here, you'd already be selling out at that point from taking that dip buy down below here. So this is one of the trades that I run here. Every time we're coming down inside of a capitulation moment in the market on breadth, I will put on a call spread down here. Whoop. Right? Now, sometimes we'll continue higher afterwards. I really don't care about that part of the trade. I care about just that one part right there. If I run that trade here, run that trade again, right? Down here, run this trade one more time, I could have survived the entire pullback in 2023, or excuse me, 2022. I could have survived that. And I didn't even have to sell this whole market down. Didn't even have to get involved in any of this nasty down move that took place. Now, would I have made more money in the downside? Fuck yeah. But we're talking about win rates, right? I won again, I won again, and I won again over here and again over here. So, and that this is the other fascinating part. The reason I'm saying this about this call spread is, this is a good one right in here, right? So like you take that trade right there. So I'm long, and I'm out regardless if we go up or if we end up rolling above here. It's just that one part of that trade right there. An example here too would be, let's say I take the trade right here, right? We're squeezing up. I take the money and run once my call spread's in the money. Do I care about any of this? Nope. Do I care about this? Nope. I care about this next one over here. Makes sense? So I took that one. People say, yeah, but you lost all this money over here, Captain. But the truth is, if I only take 6 of these trades, 10 of these trades a year, and they're all winners, I'm still beating you likely. You're still losing your money in day trading. You're trying to time, quote unquote. You're trying to do this. You're trying to do that. You kind of got this right. You kind of got that wrong. So trading less, only taking the money in that near sweet, that high probability trade, that 80% trade. And if I put enough time in that trade and we continue down even more, I'm more than likely still going to print. So it's maybe if I take that call spread, right, and I'm only looking for 200 or 300%. If it costs me $1, I want to run that trade for $3, and I'm going to exit that trade likely at $1.50 or $2. I don't need to stay in it for the full course. I don't need it to go to a certain number, and I'm only placing just that trade, just that one, and then I wait for the next. And I sit on my hands until the next time for that trade to come to me to make my money, right? Where I'm dicking around doing, doing weeklies or monthlies or 0 dates or any of that kind of stuff. You have to find something like that for yourself. If you're watching this show right now, you have to have some part of your investing, trading life where you can reliably go back in time and say, I know this fucking trade works 9 out of 10 times. Now, I might only get that trade once a year. I might only get it 3 times a year. Whatever that trade is for you, you got to use that as your bread and butter, and I'm all in that trade, right? Not all in, but, I'm heavy fucking hitting on those trades or investments so that you keep yourself always in this market. You don't get blown out of this market.
Hey, Cap, I need a couple of minutes. I'll be right back.
Yeah, no worries, man. All right, here. Let's take a quick look at what you guys want to go back to that really quick. I'm going to talk to you about this trade. I used to discuss it often on the I used to discuss this trade often. I don't do it as much as I used to. Now, some people, I'm not going to name names, Jill Natolo. Some people, especially great traders, they go full in. They're not doing a call spread like I do. They're like 0 date calls, weekly call. They literally load up. They're like, I bought some monthly calls, some weekly calls. I bought some 3-month calls, and then I 0 dated the fuck out of those capitulation moments in the market. Now, we're gonna look. You guys want to look again? I'll look again. Hold on here. You want me to explain this trade better to you while Trader Podcast is away? Where's cycles? Okay. We'll bring up cycles. So this is a cycle trade right here, okay? This uses market breadth. This tool here is, I believe it's called the Market Breadth Indicator by Iceman Ran. I don't know if I have that right or not, but you can get it on FinTwit or on TradingView. It's a heat map, basically, that shows the accumulation, right, of sectors within the S&P 500, and then distribution, or rotation and then distribution inside of different sectors in the S&P 500. Now, if you're looking over here, there's actually inside of this indicator over here, you can actually go inside of it and it describes to you what each one of these sectors are. You see utilities right now is at 3.3. Let me see if I can make this larger here. So you can actually see right here, utilities are at 3.3. Tech's at 40.6. This actually can tell you if tech is overbought or even oversold. And you'll see the sector by sector. And you can actually track where the rotation is as well. And then once the market comes, oh, hold on here. What did I do wrong here? See if I can, give me one quick second here, boys and girls. When to time a trade based on breadth. So if you were to just track this right here, right? If you're just tracking this right here, there's two fascinating parts to this, or there's more fascinating parts to this too. Are we getting acceleration to the downside while breadth is going lower? It actually implies that we're going to go up from here and not have a huge crash. If we have if we have acceleration of price to the downside, right, before we get down here, we would know that as this is coming down, we're likely going to see continued violence to the downside. If you see market breadth coming down and price is not following, you tend to see limited downside before the next run to the upside. Does that make sense? That's where we come down here, right? We're at 0. And you're not getting the violence to downside that you're anticipating. As a matter of fact, that sits right about there, right? And you get your next run. Matter of fact, we can look at this right now on this right here. So just by looking at what we're looking at right now, right? Let me see if I can bring this up really quick. Hold on here. I'm getting a little wonkiness going on here. A 30-minute chart. And let's just look at this right here, right? You've got this initial concentration back here, right? And you got this. This is what the bears want down here. They want to come down here and blast and clean all that up. Are they going to get that or not? Breadth is telling you probably not, at least for this run right here, right? So if we switch over to the Webull chart right here, right? The question becomes, how deep does it go? The bears want all of this erased down here. Are they going to get all of this? So far, looking at breadth, it's telling you no, they're not going to get that. That the most you're likely to see is this move down here before we get that nice next run. Is this all making sense to you? So I'm going to show you this again one more time. I'm going to show you this area right here, right? And how we're not seeing the acceleration to the downside that you're looking for, and breadth is almost at the bottom again. So let's look at the trigger screen. And are we seeing the acceleration as breadth goes down? Are we seeing the acceleration of the downside? No, you'd expect it to already be about here. You'd expect price to already be there so that this last little leg would translate to boom, down here, clear all this out right here, right? So you just heard Trader Podcast saying, I'm thinking that this bottom is not going to be as deep as other people are thinking. Then that's how you get your last move up before that corrective March bloodbath in here, right? So this run right here is likely to take place. You want to know the date? It's January 30th, to be exact. January 30th, you're going to expect to be buying a dip down here, wherever that may be. And we're positing that it's probably here, right here, and not down here. Possibly get down as far as right there to close that gap right there. That's 440, 450, somewhere in there. But you'd likely also see breadth bouncing around on 0. And how often does breadth stay down there at 0? Not often at all, does it? It's like a V shape, right? We get way more V shapes than we do on rotational tops.
That's right.
Right? So
Right. Cap, I sent you 2 more charts.
Okay, 2 more charts.
Yeah.
Hang tight here. And Let me go back to a main screen here for everybody to pay attention here. We got R3 to the upside right here. Give me one quick second here. I want to close that out. And let me download these really quick. What do we got here? Do you want the what do you got here? You got a option. You want the is this an option option chain here? You want that one first or no?
So that's actually a fixed strike matrix, and yeah, let's put that
So we
on
have the
first.
fixed strike matrix, and what's the next one?
The other one is the term structure.
Okay, I see the term structure. Yeah, second here. What we got here? I see it. Fixed term matrix, and then we've got the term structure below it.
Right.
Let's bring this here.
Yeah, let's talk about
let me
that.
switch
Yeah.
over to a so they can see this.
The numbers don't matter.
Okay.
The numbers don't matter. And so what this chart is showing is the SPX fixed strike matrix, which means this shows the IV at every single strike that's close by within -5 plus 5%. So the screenshot that I'm showing, the cap is showing right now for me, is showing that. Now, the narrative has been that
look at this.
Yeah, exactly. And this is actually reflected on this chart, by the way, this move, Cap.
Yeah, I see it. I see it right here.
Yeah. So red means that volatility is well supplied. That means dealers are willing to sell options at a cheaper price than they have been on the 60-day look back. So wherever you see red, that means there's a lot of options. There's plenty of supply of options right there. And what you see green means that there is more put demand at these strikes and at these expiries than dealers are willing to supply. So that's why IV over there is rising. And if you look at it, if you look at the dates, those dates are the beginning of the month when the QRA is supposed to be.
Yep. That's
And
201 right there, February 1st, all the way up into the 16th of February, and then it wanes into the 30th and 15th of the March.
Yep. So dealers don't want to sell puts right there because that means that they are bracing for a downward move at that time. Right now, they're willing to sell puts. And that's why we're seeing red. So this is supportive in the short term. And then medium term, it shows that IV is rising. Now, if you go to the second chart that I have on there, which is the term structure, so what you see here is the teal line is the current IV, the current volatility term structure going out till March. And gray was yesterday's term structure. So you can see from yesterday going out in time, IV has come down across the chain. Do you see that? How it's lower? And this gray, this bluish gray cone that you see is average IV, is the 10th to 90th percentile IV on a 60-day look back. So we are towards the 90th percentile, but we had blown
That's 22.
past.
Hold on here. Hold on a second. I'm in the wrong place. All right, continue.
But yeah, so anyways, what this is showing, like, so the first teal
That is
point
2024. I got it right. Go on.
Yeah, you got it right. You got it right. So IV is dropping across the term structure. And that means that is supportive because dealers are willing to sell puts right now. So dealers are short negative gamma is what that shows, which means it has a positive gamma effect on the market. And you see certain areas where there are spikes, as Cap is pointing out. And those, if you look at the dates, those are around your inflection points that we expect. When the PCE comes out, when the FOMC is going to happen.
It's fascinating
you
too
know,
because you're like 122. That is heading. This is the next down move into the end of the month right here, right?
Yeah, so basically it's saying what that is actually showing is IV. So they're saying they don't expect that down move on Monday. They're selling it. And this is what Jim Carson talks about is well supplied in the market right now. If it is well supplied, we are not going to see a flash crash. We might see a stair step down. Now they can bring it down even more, because if you see like how much space there is left on that cone, they can bring down that wall even more.
So basically what he's saying to you here is on this chart is, everyone's saying, well, we're going down here, right? That in fact it's going to be right up something like that, right? That you're gonna
But that's what everybody is saying, yes. And I am saying that no, we're probably not going to dip down that low.
Oh, hold on. So what do you think what would you surmise as, so if we're looking at a 30-minute basis here, I'm assuming here that, and not assuming, but you can see this is that part that we were just discussing, right? There's an expectation. You're a bear that you want to see all this wiped out, right? We were looking at this on that Webull chart earlier. They'll get that closure down here. We're not seeing the acceleration to the downside, right? We're not seeing like we should already be like here, right? For breadth where it is, we should already be here basically. So if breadth continues to the downside, you get that last blast down. And you're also looking at this chart right here that's telling you, nope, don't expect that, right? So on 122. So if this was you, Trader Podcast, whatever this aspect of weakness that's anticipated, or breadth and weakness that's anticipated, do you expect any of this down move? Are you expecting to come back down and test this on the 30th? Are you expecting for us to just be kind of muted, like pulled?
I
think
that
we start, instead of any of this, we're just going to start heading up to the upside and make that
yeah.
run?
So it kind of depends on what happens today again at 1 o'clock, and then Biden is speaking. He's going to take credit. He's going to pump the markets. So the jobs number, the market did not want the jobs number to be that hot.
No.
Right. And he's going to come out and take credit. He's been quiet too long, and Trump has been taking all the oxygen on the campaign trail. So Biden has to come out swinging, and he's going to basically talk about that stuff, and that's going to pump the market. And then tomorrow, honestly, like given the strength in semiconductors, I don't think, if tomorrow is mega green, I will probably open a put spread, because I do not like seeing IV drop down that low. I would like the second chart, the term structures chart I showed, kind of want to see IV right around there. Like don't move up, don't move down. That's equivalent to a 10 to 12% IV right now. And I'd rather just have it stay there. If IV starts moving up, that means dealers are not selling as many puts. That is a danger sign to me. So, and if you go back to the first chart, the term matrix, fixed strike matrix, you kind of see that dealers are right now, for the next few days, they are selling puts. So I am okay with where we are right now, because when puts become scarce to buy, or they like become more expensive to buy, that becomes an issue. That's danger in the market. So right now you see it's all red, right? That means dealers are selling. IV is lower than where it was in the last 60 days. So that's kind of like what I'm trying to say, like, 4,700 strike, which is 50 points down, 60 points down from where we are for today, that's losing. And even like on the 22nd, they're selling puts there. They don't think we go down to 4,700 on Monday.
What do we got here? Okay, hold on a second. I got a couple things I got to do here in the background. Continue on. We got people chatting and talking in the chat right now, Trader Podcast, if you want to look at Twitch or YouTube.
Yeah, I am looking at Twitch. You'll have to help me with the YouTube
See what
comments.
how about you look at Twitch and I'll look at YouTube right now.
Right. You all think market up or down for bond auction? It seems to be up the last 2 times, albeit delayed for the last one. So, Spaceman, that's a really good question, and it does.
Good morning,
Nobody
David.
can predict.
David AMS, this is Trader Podcast, brother. Sorry, continue. I didn't mean to interrupt. I apologize.
No worries. Spaceman 003. So nobody knows what the anticipation is unless you are a bond trader and your desk has told you what the anticipation is. Is it going to be a well subscribed auction or not? But they won't share that information out in public. So what you do is at 1 o'clock, you wait for the tweets to come out as to what the tail was. And then you go look at Andy Constant's Twitter and
That's
see
right.
what he says, what grade he gives it.
The
If
A
it's
minus,
above
C
a-
minus.
if it's
Explain that
above
to
a
these guys.
C-
Explain this to these guys
So
why
he's
you
got a weird-
follow Andy Constant right now in a simple way
Okay, so
with the
And-
grading system.
right. Okay, so Andy Constant is a pretty famous bond
Famous.
trader. Yeah, like he was involved in a lot of stuff that you read about in books. He used to be at Solomon Brothers before they went defunct. And well,
He's a
he left
legend,
before-
man. He's a
Yeah.
fucking legend.
Yeah, and like everybody, like here's the thing: people can point out bad trades that he's made. Even I can point them out, but he's had more bangers than he's had bad trades, and he has survived in this market without blowing up all these years. So that deserves respect, and I will not stand for people, disrespecting Andy Constant
That's right.
because he made a bad call or whatever.
Well, and he's pisses his time away with us plebs on
he does.
fucking FinTwit. Like,
He has been one of the nicest people
Yeah.
to educate me about bonds. Like I have asked him, like I had like 400 followers. I was a small account, and I just went into his timeline and I asked him, okay, please explain why do you do these gradings and what the criteria is. So if you go look at his grading system, you'll see, if you go on his timeline, you'll see his grading system. He looks at a lot of stuff. He looks at, how fat the tail was, how well it was subscribed, yada, yada, yada. And so I don't necessarily agree completely with his grading system, but I don't have to. But he's more right than wrong. And what I found is if he gives something a grade of C or above, the market takes that positively. The market absorbs that.
so you
he
guys
gives
listen
an
to
A-
this. If he gives it a grade of C or above, the market, cash market, takes it positively.
Yeah. It usually, but
Usually, generally.
generally, but what the number one thing I pay attention to along with Andy's grading is that I will look at what the tail was. And if it is a big fat tail on the auction, which means that certain amount of bonds were not sold at the rate that they wanted to sell them and they have to offer them at a higher rate, the market does not take that well. So a fat tail is what we don't want to see at 1 o'clock today. I hope you understand that. Razorback Bradley, I will put his.
I just
yeah.
put him in just now. So if you're out there, right, and you don't already follow Andy Constant, he's on FinTwit. This guy's famous, man. Like he legitimately on Wall Street. This guy is known, man. He's trusted. You don't you go to him for an answer. The market, like, I'm gonna tell Andy he's gonna. I just sent a bunch. I'm gonna tell him right now. Sending a bunch of new follows your way.
Yeah, I love Andy, and he takes time. Andy Constant is, he's the straight man, and Jimmy Jude,
And
his
Jimmy
partner.
Jude too, man.
Jimmy Jude is the foul mouth. Like he's the Deadpool of markets. Like he makes jokes and he is raunchy AF, but it's a good time talking to those guys, and they're very, very generous with their time too. So if you ask a sharp question, they will answer, or just follow and absorb knowledge from them.
The other guy, I'm gonna post his name here right now too. His name is Jimmy Jude. I love Jimmy Jude.
Yeah.
So here's his. If you're not already following him, I'll pop that guy in there too.
Right. So, anyways, yeah. Is there anything else you want me to talk about, Cap? I mean, I could
think
keep
this is
going
great
on
for a
and
day, man.
yeah. Well, thank you for having me. I really appreciate it. Appreciate the exposure as well, and I hope people in chat and on the stream, like, you know, I wouldn't say learned something new, but I brought something to the forefront that they were perhaps ignorant of or did not know that you could even like look at these things. So I hope that it is helpful.
Do me a solid. If you're watching this show right now, would you guys do me a solid? Matter of fact, I'm going to put a Trader Podcast in there too. I should have put him in there. Do me a solid if you're out there. Can you guys do me a quick favor really quick if you're watching the show right now? Ah, shit, I did that wrong. Hold on a second here.
Yeah, that's going right to the 475 gamma and rejecting twice. That's okay. The expected move today was 0.63%. And I think we are over that. No, we still have some upside left.
Do me a solid. Can you, if you're watching this stream right now, can you guys like and retweet the tweet that I just made about following Damp Spring and Jimmy Jude on Twitter? Just make sure it gets out there. Make sure those guys are getting followers from young traders, young investors, that kind of stuff. So if you're in stream right now, do you mind just liking that tweet and retweeting it? And I threw Trader Podcast in there too. I just wrote also follow Trader Podcast for reviewing these guys on stream today. I appreciate if you could do me a solid out there on FinTwit. Yeah, he's on a break right now. Andy Constance's been on a break. He has popped in though. Every once in a while he'll pop in and try to lend a hand where he can.
Yeah, he got too much grief. So did Chem Karsan when,
strong personalities, man.
Yeah, they got too much heat from people who are just like,
it's like,
like these guys are like wrong, they don't,
well, there's like smart guys, then you got the FinTwit mob, right? They like to pour the gasoline, light the fucking fire on fire.
Yeah, and then to me, like this stands for like just like you, Cap, like this stands for like everybody who puts themselves out there and gives the read on the market. They might not be right, they might not be wrong, but like they're taking a stand, right? They're putting themselves out there, and that deserves respect. You don't.
Yeah, do we want these people gone or something? Like that's my big question is always like, do you want what is like? I feel like going to these guys, like I think some of them do like sometimes they do it wrong too. Like Jem is block happy, rightfully so, right? And you don't like I got blocked by Jem at one point. Then I blocked him, he blocked me, and then someone asked if I was like I don't dislike Jem in any way, shape, or form, and he unblocked me. And I unblocked him, and of course I like him too, and I like Andy and Jimmy and all those guys. These guys are just adding to our experience, right, and giving a free education. So,
and if I could plug Carson as well, Vol Signals.
Yeah, Vol Signals. Dude, let's plug him too.
Vol Signals is a professional, and he has the side gig where he just kind of highlights some of the more esoteric trades that come through. He understands positioning well. He's been a market maker. So if he sees something, like he's the one who alerted me to the VIX trade.
I'm going to post his handle out there for you guys too, for Vol Signals.
Yeah. Vol Signals is good. And then recently I found Options Depth. They're really good too.
I don't know them.
They do. Yeah, I recently found them like 2 weeks ago.
What's their handle?
Options Depth. I don't get paid by anybody.
No.
I just,
me neither, dude. I don't get paid by anybody.
But I find value in interacting.
This guy's only got 1,100 followers right now. Someone to follow him.
Yeah. He's definitely, and so he's selling a service. I'm not subscribed to the service, but he puts out good stuff on his Twitter timeline to generate,
cool.
followers and discussions. So it's good.
Okay.
Right. All right. Anyways,
All right. Anybody?
this is
Any more
fantastic.
questions out there?
If there's any last requests for stocks to look at for their options expiry, I'm happy to do that right now before I leave.
Mike Silva comes on the show all the time. I have great respect for him. He gives great technical analysis. I love Mike Silva. Always have. Always liked him. And Tom Atkinson. I always liked Tom too. FX Evolution is rad.
JPM. Oh, king of the Wall Street.
Wow, Jaime Dimon was really on fire yesterday, man. He was, or past couple days, he's been throwing out some bombs.
Yeah. So I have a
You don't
theory
get that
about
often from him. What's that?
I have a theory about why he's so anti-Bitcoin right now.
You tell me what your theory is.
My theory is, okay, yesterday we had $2 billion in inflows into those ETFs. Yet Bitcoin price went down. Why is money going into these ETFs and Bitcoin price is stuck between 42 and 43K? Why do you think that? It's a rhetorical question. Here's what I think.
I'm trying to open up a thing in the background here. Hold on. Okay, so the question is, why do you think there's all these inflows into the new Bitcoin ETF?
Yeah, but Bitcoin price is not rising.
It's not rising. What would be the thesis behind this?
They're basically, my theory is that traditional finance is loading up on these ETFs, and then they'll rip the price of BTC because they already held a bunch of BTC when they got approved. So they're basically allowing their friends to get on the boat before they roll it out. So that's my theory.
Do you think Diamond's behind some of this or no?
Well, JPM is involved in a couple of the ETFs. And that's why I think it's really funny that Coinbase is getting shellacked because, well, Coinbase, there was a lot of options positioning like going into 2 weeks ago, like when it hit like 180 or so, 190 or so, like it was cooking under a lot of calls, and then all those got like monetized or like sold, and dealers brought them back so dealers could sell the underlying. But I think it's just really funny because where Bitcoin was 3 weeks ago and where Coinbase was 3 weeks ago, it seems to be going at a discount right now, especially with the ETFs going off. So I think Jamie coming out and trash talking BTC is just he's trying to talk his book right now. He wants the price low so he can buy more ETFs into their funds. Anyways, somebody asked for XBI and IW. Okay, IWM, I would not look into that because that's an index level product. And there's a lot of shitcodes in it. If there's a shitcode inside IWM you want me to look at, I could do that. But just generally, 28% of call volume is expiring and 20% of put volume is expiring on IWM. But that doesn't mean anything. It's a very liquid index. This is specifically what I'm concerned about is it's a single stock expiry. It's the biggest one in history.
It's not the index, it's the single stocks that have are going to have the greatest impact, or impacts that you can actually see, right?
Yeah. So Carvana, call wall at 50, put wall at 40, call volume expiring is 36.5%, and put volume expiring is about 30%. I would say that that's somewhat weaker, but it's already been weak for the last 3-4 days. So, I wouldn't feel comfortable making a call about Carvana. And Carvana also has this other thing, right? Like it's a highly shorted stock. So any sort of bid to cover in the market where you see like IWM like just ripping, you will see Carvana basically lead the charge because it's, king of the shitco. JPM, Waterboy, I haven't said that, but let me look at JPM again. 44% of call volume expiring and 30% of put volume expiring. Call wall's at 175, put wall is at 167.5. So to me, and its risk reversal is like really low, and IV rank is really low. I don't see a downside as much in JPM from options positioning. It could be like secular, news that brings that brings KRE and XLF down, but I don't see anything specific for JPM. AMD, missed AMD. Did someone get that? Sure, I'll look up AMD. AMD put wall 120, call wall 150. It's way above that.
So IWM is lagging right now due to so IWM should ramp on the anticipation of rate cuts. So
Right.
if there's anticipation of rate cuts, you'll get the amplification effect in IWM. The moments that anyone thinks that there won't be any rate cuts, that's where you see IWM start lagging and not.
So
showing
there's a nuanced thing over there too that I want to highlight, Cap. I was reading Societe Generale's economist report, and they had something very interesting to say. They said even though rates might get cut, there are a lot of companies in IWM that are free cash flow negative and that do not have good balance sheets. And they are still going to have a hard time finding funding. So the rate cuts might not help them as much. And that got me thinking. So I want to highlight a different ticker, similar basket, IWN, which is your growth small and mid caps, which might benefit because a lot of them, when I cursorily looked at the components of that, a lot of them have good balance sheets. Or
yeah, it's like the
decent
spec
balance
growth
sheets.
stuff that we show in the show that has like good year-over-year profits, real money for real products, launched for last 3 years, great guidance.
Right. And so IWN long, IWO short could be a good pair trade if you anticipate rate cuts. So that should outperform IWM by itself, is what the thinking would be. But generally, as you said, you would expect as rates get cut, small, medium cap businesses are going to feel some relief, and investors should technically support them to the upside. Heber, it's a great question. What's your view on China stocks like Baba and NEO? I am currently in the red. Full disclosure, I have June call spreads on Queb. I have 27/32 Cs on Queb. And that is, I am generally bullish China because I think she's trying to take steps to fix some of the economic problems they have. They might just, print a bunch of money. They're also meeting today with US counterparts to talk about trade between US and China. So trying to, yeah. Oh, yeah, stretching walls. You're right. I'm sorry. I might have flipped those around. So, yeah. Anyway, so I am.
Give me 1 second. I'll be right back. I gotta take a break here. I've got a cat that's I have a cat that's knocking. Give me 1 quick second here.
Yeah.
Or if you want to chat with the group, you can. You chat while I just give me 1 quick second.
Sure,
here.
For sure.
Kittens. Are you still there?
Yeah. Okay. Yeah, I'm here. Can you hear me? Yeah, I'm here. So
read the
you
chat
guys have
and see what these guys are saying here.
Yeah. Oh, I got you, man. Did I miss XBI? Yeah, no, you did not, because I did not look it up. Let me look up XBI. Call wall's at 95. Put wall is at 90. It's below its put wall right now. But call volume expiring is only 7%, and put volume expiring is 36%. So yeah, that is actually kind of bullish. I own XBI stock. I've owned it since November. So I am very, very happy with my position. I plan on holding it. I've also said in the past that XBI is the ultimate indicator of risk on in the market because it is highly speculative biotech, And if money is going into biotech, means money is going to go to NDX. NDX usually follows XBI. It didn't do that last year, but usually it follows XBI. So we're looking at an intraday bear flag forming. Let me pull up my chart. I mean, it could be, but I see more of a bonking against the big fat gamma at 475 on SPY, which is also the volatility trigger. So above that, we should see supportive flows like really kick in above 475. That's why we keep bonking our head against 475 and getting rejected.
I've got these young cats, man, these kittens.
Yeah.
And they are they don't leave. So I had the other day I had the cats in the office. The cats came in the one cat specifically came in the office, and she's just walking by me going, I'm gonna knock those. As a matter of fact, I still have lights in the ground now. They're like, I'm gonna knock these lights off, that light off. I'm gonna knock that light in the corner. And she had the like paw up looking at me going, I'm gonna break this lamp over here. If you have a cat, I don't normally have cats. If you have cats and you have anything on a counter anywhere or on a shelf anywhere or in anything, they're just like poof, knocking that over.
They just want to hear that noise, man. They just want to hear that crashing noise. Oh, it's sitting up here. Oh, it's gonna look so much better on the floor.
You get a vase right there. Gone. Can you even have a vase at home with a cat? I guess I don't know if you can.
So I had 2 cats for 14 years. They both passed away within 2 months of each other. Yeah, man. Like I had to basically be very, very careful of not leaving any food out, not leaving anything that could be thrown.
All wobbly objects.
Yes. And yeah. Anyways, now I feed a neighborhood cat, like who.
Do you?
I don't know. Yeah.
Nice.
I live in a really nice neighborhood, so I'm really surprised there's like a stray cat, and like it comes and sleeps on my porch.
Even in a nice neighborhood, the stray cats, right?
Yeah. So, anyways, it's kind of funny. And
Bork saying that all of his house plants have been consumed.
Oh man, I know that feeling.
That's
yeah.
I don't know what to say.
So what I did, Bork, is actually I started growing catnip in a planter, and that prevented them from eating other plants because I gave them something to eat.
Yeah, that's good.
Yeah, and that just kind of gets them stoned, and they just they used to just chill.
We grew like this. We're having a little bit of a liquidation break here. We ended up growing this really tall grass, like a maze in our backyard for the dogs to go through. It's like pussy willow type stuff, but this is just grass. But then we planted catnip as the base cover, and our cats love it. Love the catnip in the yard, but we don't do it inside. I should probably grow some inside.
Yeah, I mean it's great. It's easy. It's easy, and
I've got the seed for it, man.
Yeah,
I've got some catnip seeds, so we're gonna try that now. And I think I have a bag of potting soil in my garage, so maybe we'll do that for a winter. And I've got LED grow lights, man.
I know why you live in Michigan, man. I know
Michigan, man. I think one of you guys is in Michigan, right? Is it you or Bork or no? You're in Grand Rapids, aren't you?
Yeah, for the most part, yeah.
Right on. Bork's in. I'm not going to say where Bork's from. I know where he's from too. I didn't forget where you're from, Bork.
Yeah, this is a port that's holding. Okay, anyways, I'm not in any intraday trades. I'm in a spread. I'm just sitting and chilling. I'm in the same spread as you, Cap. I don't know if you sold or not.
I sold. I was pretty much in the money by the time we opened this morning. So
yeah.
Were you in the 75s or no?
Yeah.
And are you going to hold it until Friday close or whenever you come up or no?
Yeah, I think so. Unless I go below my CB, and then I'll consider selling, because you don't want to trade to go red. Even $10 positive trade is a positive trade in my book. So
yeah, and as we get closer to, they start to trim on that spread too. You start to get eaten up, even if and then the curve would go down, and then only if you close the money with a print less 10 minutes of the close.
Right. And 475, as you have marked on your chart, is like a big gamma bar, right? I do expect price to kind of go towards that towards the end of the day. And the reason, it's a very simple
It's
reason.
right here. Here's that. He's talking about that gamma bar that's right here. This is the one that he's talking about. He wants to see that last little tag up there by Friday.
Right. And this is not that one, like on 475. Like, I think you're like way too high. I'm talking about
I'm talking about
475.
SPX.
Oh, gotcha. Yeah, that's your 4800. Like, what number is that?
I'm sorry. This is 4775 on SPX.
Okay. Yeah. So that's a good there's decent gamma there, but I'm talking about this 475 on SPY. That's the volatility trigger on.
Yeah, this is your tag right here.
Yeah. So we kind of got a tag earlier. We bonked our head against it twice. Now we're getting a liquidation break. I would expect this to get bought up.
Me too.
And it's just kind of funny. We're seeing more because we're under 475, which is the volatility trigger. You're going to see more intraday volatility, up and down. So we're just seeing some down, and we should see equally fast recoveries. So that's kind of the thesis. I still think as long as we're like close enough to 475, I'll stay in that spread. I don't have many open positions. I am most like 60% cash in like my play account, my gamble folio, which is my
gamble folio.
Yeah. And I'm just waiting. I'm waiting to buy dips is what I'm waiting to do.
Let's look right here and see if we see any down here.
Beginning.
So a little bit of a stink bid down here.
Yeah, maybe another 3-4 points. Yeah, there's.
Let me move this back over here.
So
look at Q's down here. Q's breaking below their 1 and 5 minute trigger right here.
Yeah,
this so you can see it. Are we at 1:30 yet, or is it just? Oh, it's 12 o'clock. It's not even 1:30 yet.
No, it's 1 o'clock is when in an hour we get the auction. So the dollar is also rising. That's the thing, and I think that's what's causing this repricing right now.
HYG with a nice roll on it, and I had a confirmation on a bear plane to the downside on a 1 minute trigger. NDX has a gap they've left down below. The gap is to 16,748.39. Tesla still bleeding out right now. TNX had a little rip there, little snort of cocaine. VIX looking, we might actually get some significant downside here. We've got a bear cross right now in the 1 minute, 1 and 5 minute on SPY. You can see it right here. So you got the cross right there happening.
We're sitting at support.
It could have a nice little relief pullback here. And VIX looks great to the upside right now. Not confirmed at the moment, but it's looking like it.
Yeah.
If you are in 0 dates here and you're getting torched, you're likely going to get another chance here to exit in case it does roll to the downside. Yeah, I'm flat right now, man. I'm in nothing. I took my money and ran this morning, and I'm just sitting here waiting. And if anything, I'm going to wait for whatever that upside target is and try to grab. I think I want some put spreads into the end of the month.
Next weekend?
Yeah,
end of the month?
Yeah, I'd like to get something in the end of the month that's like in the money-ish on a high. I'm hoping on Friday's close that there's at least the close or the open. It's either going to be the open, I believe, or the end of the day. And then I can grab that put spread for an expiry of the 30th of January.
Yeah, I'm going to be looking at positioning that develops in the next, like tomorrow as well, within the MAG 7. Because that's going to be the barometer. So Tesla, as you know, is the one that's underperforming.
Yep.
Amazon has been performing well. Apple basically erased all of its weakness. It's such a crime. 2nd of January, you get the first downgrade. Then 2 days later, when Apple starts to recover, you get the second downgrade. It hits 180. Yesterday, It's at like 180.02, like I think it like touched that. And I was just like, oh man, another downgrade and the market is cooked. And this morning, an upgrade, potential 25% upside. And I was just like, okay, this is a crime. They just washed out everybody that got bearish on Apple because they saw 180 getting slammed and then price not being able to recover above 182.5.
Let's look at the 30-minute here on Tesla. Tesla, man. I mean, don't quote me on this here, but the thing that bothers me about Tesla here is on this run right here. You got buyers, right? Buy, being told no on all this stuff right here. I'm assuming that there's going to be some kind of a group that thinks the next trip is right here, but personally, I'm afraid on this next like January to March run, maybe you get that, but then this is the real low down here sometime in that mid-March. There can be an argument that you might get like that run that we're talking about in there. I guess I can make that bigger, maybe, but dude, like.
That would be an incredible run if that happens.
Yeah, and
where's that?
This here could go. This here could actually go way down here too.
165?
No, 77. It's at $78.
Are we going to reprice Tesla from a tech company to a car company again? Is that what's happening?
I think we're going to close the gap down. There's a giant gap where this yellow bar is.
Right.
There's a possibility of like we get the run into February and maybe you get tagged that red one, but then there's like a major bloodbath coming. But whatever this is, if it's here, it does lead to some significant.
If Tesla goes down there, all the equity, all the tracking funds,
extensions here up tier 2. So
all the ETF tracking funds, if it goes on to $80, they're gonna sell SPY so hard because they're tracking that internally. They don't buy SPY, but they buy the components in equal weighted. And SPY and Tesla is a big part of SPY. So
I want to show you this here.
Sure.
I agree with what you're saying, or I normally would, but I just want to direct your attention to this right here, and then I want you to look at this right here. Let me do SPX or SPY. Hold on a second here. Maybe we'll look at it from a. Hold on a second here. Well, let's give me one. I just do something new, maybe. New layout. Tesla here, right? And I want to draw your attention to October of this is when we got the bounce in SPY. This is October, and then SPY started turning, and you'll notice that last little leg right here, Tesla went down and did not follow the market up.
Gotcha.
Do you get what I'm saying here?
Yeah, I see exactly.
So
what
you see that last little bit down there? May not correlate directly with SPY. So you get the small dip and rip. You come down here. Well, I guess you get the small dip here, and then you get that rip. Then you get that March low, and you might not see Tesla quite follow up. It might just fucking consolidate and then blast down. It might not join in on this next rip. Is my point that I'm trying to make here.
Yeah.
Where you get what I'm saying?
Yeah, I do.
So
We'll
there's
see.
there's a
Yeah,
chance here that Tesla. My point here is, if SPY's going up here, and you might just see Tesla kind of like do its fucking thing, and then it joins in for that March low down here.
Mm,
I don't like saying that because it's gonna piss off our. We have a lot of Tesla bulls here. But
yeah.
you disagree, right? You think that Tesla's gonna join in the party? Is what you're saying?
Uh, it's
Don't know.
no. I honestly,
Don't have
I'd be
to.
lying if I said if I knew. I would see a risk and reward in buying the 165 on Tesla. You know,
You say this say that one more time? I missed that last part.
165 on Tesla.
Yeah,
would see a fair amount of risk to reward in that area, but I could see what you're saying too. The old adage is all gaps must be filled, and if Elon continues to basically be like, give me 120 more billion in equity and
Yeah.
make me in charge of Tesla. Otherwise, I'm like, taking all
We're
the
just a
good stuff.
car
out of
company
this.
now, right?
Yeah. So if it's just a car company, then it should get treated like a car company. If it's a tech company that happens to make cars, that's a much different proposition. Then it deserves that premium in multiple.
And that's where
Right?
fundamentals actually matter, right? Fraud, no longer a growth company,
Yeah.
or another one that's fascinating me about Tesla specifically right now. I want maybe to get a quick take from you and put you on the spot. You don't have to answer this. I've been going down the rabbit hole of some of these Chinese EV manufacturers, and they're trying to now assemble in the U.S. And put some of these cars on market here in the U.S.
Yeah.
They're killing it.
Yeah. You don't need to go that back. You're from Detroit. I mean, you live in Detroit. You understand the car thing, right?
Yep. I have a lot of friends
How
trying
did
to learn about
Japanese
it here.
cars come here?
Say again?
How did the Japanese cars come here? We did not let them import. We had huge taxes on
That's right.
Japanese imports because they were eating the lunch of American companies.
That's right.
And so Toyota said, "Hey, you guys in Detroit, do you want to partner up and make cars together?" Their first car was a disaster that they made together, but that allowed them to get a foothold into Kentucky, into Ohio, and start putting in car manufacturing plants. And they did it in the heartland where labor was cheap. China is following the same playbook. It's following the
exact same playbook. I know that I'm always the guy that's like, Elon welcomes competition and wants to see this happen. He might not survive it. He's even made that statement, right? Like most car companies don't survive just normal operations. They go bankrupt all the fucking time. It's the norm for a car company. But I'm with you on this. Like, there's a real threat here. If now, I don't believe that Elon's going to remove that stuff from Tesla, but I think it's a play to get Tesla cheap that he can buy as well to help pay for Twitter, in my view. But there is some real risk to Tesla. I don't think it's American. I think it's Chinese. I think there's actual risk to market share of them.
I agree. And
have
you been to China recently?
I haven't been there in over a decade, but
all right. So about 3 years ago, I went to China, and I did like a 3-week long tour of China, and part of it was work, part of it was pleasure, and they were building all these highways, these brand new highways, and I know it's really fun and in vogue to make fun of China and their empty ghost cities, but I will tell you this. Their highways were really interesting because they're putting in sensors and magnets while they're building these new highways.
Yep.
Because that helps in automation of driving.
Where U.S. bureaucracy is way behind the curve right now, right?
And this is why I always have said
self-driving.
Right. We need another Eisenhower. We need another guy to basically say that, hey, highways are important for national security.
Yes.
And we're going to build them. And
build them for that self-driving, right? Our roads are built for non-self-driving. They're built for a human driver.
Right.
Our stop signs, our stop lights, everything involved in our roadways are built to go against self-driving.
Right. And so I am not at all surprised that there is an ascendancy in Chinese EV manufacturers.
I'm blown
So
away, man, by the brute force manufacturing, like where it's taking time for Tesla due to money and all, and just no one's on this. But in China, they're like, "Oh, you want to like reinvent manufacturing for EVs? We'll do it in 6 weeks."
yeah,
Just throw
the
everybody
government
at it.
throw everybody at it. The government underwrites your loans.
Yeah,
You
it
don't need
writes
to
the whole entire
worry.
thing, man. They don't
Yeah.
care. Just
So
piss money away.
yeah, I mean, we did that too at one point. I always remind people of Kodak
Yeah,
and
David's
how
bringing up trains, EVs too. Yeah, absolutely,
yeah,
David.
yeah. Well, the trains, they stole all that tech. That was not homegrown. There was a couple of German manufacturers that took them to court. All of their
You think any of
their
it's really
tra-
their tech? I think they steal most of it or some of it, and then
I have met some fantastic scientists and engineers from China, so I do not want to.
I'm not trying to say that's a disparagement either.
Yeah. But
Chinese people don't look at you know this, right? China does not look down on replication of other thoughts either.
Oh yeah, no. It's
Not
a very
seen
simple
as a
ethos.
negative.
Yeah, it's a very simple ethos. You do everything you do to be successful, and if that includes by hook or by crook, that is fine. Because if you don't do it, the guy next to you is doing it.
It's added into your hey, I'm smart. It's not like they're dumb or anything. They're smart people. But if someone else has done any of this work, we want access to it as well to further it. Whereas the U.S. is like, no, or maybe Western society is like, though this person owns this concept for a set amount of time where you can't use it or replicate it, or you have to create your own methodology, right? Or there's some monetization of it.
Right. Yeah. So
by the way, if you're a bull, this is where you buy the dip.
Yep.
If you don't know that, we're on the gamma flip right now. This is where you buy the dip if you're a bull. If we start to break below the gamma flip and reject off of it, you're selling the rip. Fairly simple, right? Above the gamma flip, when we come down into it, you buy the dip. If we go underneath it and start rejecting, you're starting to sell the rip from there. You know, it's kind of like a simple crayon rule for you. So just a heads up out there. If you're scared right now of buying the dip here, even if you put a stop underneath it, now maybe that dip that you're buying is the pivot down below here, but just be conscious that if you are a bull, this is the place where you're looking to enter a trade. And it might be after you get above this bear cross or something. You can use that if you want. I'm not saying buy a dip here either, but this is the general area where you're buying a dip.
Right. Let me check one other thing that I have access to. So right now,
or if you're a bear, you're looking for the break of the gamma flip and then a rejection to take that short right there, I guess. But we're not there yet, so
right. So the most active put right now is 10 points below us.
I can check to see if they're selling calls right now too.
Yeah, and I can check that on spot gamma as well. But the most voluminous contract is 25 points above us. That's the hot call, 25 points above us, 38,000 plus in call volume at 47.70.
Yeah,
so,
but Bork's saying that too right now. Okay, continue. Keep talking.
No, I mean, that's just positioning wise. Like that's what I see right now happening in the market.
Bork's making a comment here saying, homegrown or not, they build on top of existing tech and seem to make leaps and strides by being more open. Yeah, I agree with you, Bork. There's some, well, it's like such a fucking complicated mess talking about China, right? With like what's open. You still have like state run or interference in where profit goes. like the hand and that reinvestment of that tech and all that stuff, whether that's good or bad. I understand. I get your point too, I should say.
So my trading strategy is Bear Town Sheriff.
That's a good way of saying it. H-Bomb's saying the Western government is built on exploiting the many and protecting the individual who happens to invent something. That's a good way to say it too.
Yeah. But that's what makes us great, man.
Thanks, Kamel. Hey, look who's in here. Vol Signals is here today. We were pumping you up earlier, Vol Signals. He's on YouTube right now. He's on YouTube, man. So Vol Signals is here in the audience right now. Vol Signals, we were pumping you up earlier. I apologize, man. We're talking good about it.
He deserves it. He deserves it. He is, seriously, the amount of knowledge that man has dropped on me, like in the last 2.5 months, and being so supportive, like I cannot pump him up enough. This is podcast, by the way. Person.
Yeah. So yeah, Trader Podcast is here. Vol Signals, if you're here right now, Trader Podcast is in the studio with us today. If you guys don't know who he is, we dropped his name in the chats of both Twitch and YouTube earlier. He is here right now. Let's see what he has to say about the market from a gamma perspective. He's saying, buyer beware. Mind your timing. Should have some stickiness through tomorrow AM Opex at least. What's going on, man? Good to see you, brother. Yeah, we're pumping you up, dude. Trader Podcast, you want to talk about Vol Signals one more time? Maybe rehash it a little bit, why you like him?
Yeah. So Vol Signals has been, so you can follow him on Twitter at Vol Signals, and he's been, really instrumental in highlighting some of the big trades that have happened over the last year. Like, he was the first one I know that, alerted pretty much all of FinTwit to the iBroker, Interactive Brokers whale. This is a retail trader with a lot of scratch because they're using Interactive Brokers, and they routinely put in millions of dollars into SPX spreads one way or the other, or sometimes straight puts and straight calls. And they have pretty much, dictated where the market ends up going, whether they're dictating it or whether, they are really good at recognizing a pivot and capitalizing on it, because they've had an incredible hit rate. So Vol Signals was the first one to highlight that, and many, many other trades that I have seen. He has his own Discord, and it is full of intelligent people who trade volatility, and with some really sophisticated strategies, and eke out money from this market. I know he himself was in a bank of trade, and I cannot. And the amount of knowledge he's dropped on me on Twitter on explaining how the interaction of dealer positioning, market structure, and price action can provide an edge one way or the other if you're taking a position. So I cannot say enough good things about Vol Signals, and I'm glad he's here. He deserves.
And he's dropping some bangers in here that reinforce what we were talking about earlier in the show. He's saying this window here, corporate buybacks closed for now. CTA triggers dragging up near the money as momentum fades. This is like a dealer negative gamma. He's saying you have a January long gamma rolling off, and behind it, there's a lot of quote unquote traditional hedging. Think JPM collar type stuff through March concentrated, and also arguably June. Watching for sentiment to get spooked if we keep getting bounced off the highs. Trader Podcast is the local celebrity in the Discord. Hell yeah. We got to get Vol Signals on the show here at some point too, and get his voice on the stream at some point. Try to schedule him to stop in. Trader Podcast, I need to take a break. I got to go potty.
Gotcha.
Do you want to wrap this up or say anything else, or
yeah, let's wrap it up.
Anybody out there questions for him? Want to thank him for coming on the show and spending his morning with us. This is the time. He's still here right now.
I think they've heard me enough. I am not as exciting as you are. So, anyways,
yeah, people are thanking you right now. They're thanking you inside Twitch and inside. We got John H chiming in on Yellen, old Yeller. Yeah, man, I want to thank you for coming on this morning and giving that detailed analysis. And Vol Signals is saying some of the same stuff, or all the same stuff that we've been talking about all morning here. So, Vol Signals, let me ask you a question. Are you expecting, you're in the stream with us right now, do you expect some of this weakness to restart again into Friday and Monday, heading into the end of January? And if so, are you expecting any kind of significant downside move, or is it more like 470-ish? Or is it possible to hit that 464.50 to the downside? Yeah, definitely Vol Signals, definitely. Maybe we can have Vol, if you've had time tomorrow, man. If you want to come on for a Friday tomorrow, it might be a good day to have you on, actually. As we have what, minus 290 or something like that, falling on single tickers falling off tomorrow, or SPX, I think 290M or something falling off tomorrow. Maybe we can get him on the show. We'll have to ask him.
Yeah, I'll reach out to him. I'll talk to him.
Cool.
And I'll needle him to get on the thing. He might be not keen on sharing his voice, but
yeah, he's also saying he's got I think if we break 46.75 on ES, we have risk to run to 4,400 until trend reverses.
Yeah, I think he did. Somebody else, like, there's a big trade that came in, I think yesterday, that reflected that positioning too.
Was that I saw the VIX trade and the VVIX stuff. There's a lot of people out there betting on that VIX.
Right.
Running nice and hot.
Yeah, as I said, one of the best things you can do if you're an intraday trader is you can look at VIX, VVIX, but what I have right now on my screen.
Let me check I gotta check my DMs, I guess.
SPF, I have SPY on and I have Dixie. That's what I'm looking at, and I think the dollar and yields are running the show right now, and that's why I think the next, 30 minutes with the 10-year auction will determine if we flush today or if we basically go and retest.
All right, so we're not going to hold you to this. Do you think we're squeezing the TNX to the moon right now so we can flush it, or no? Bloodbath incoming?
I can't make a call because it all really depends on how well that that auction goes. If that auction goes well, we're squeezing every bear out of the market today. Right. Everybody's going to cover.
So we talked about Andy Constant earlier, right? You guys we showed you guys his handle as well. You want to see if he pops in and gives a grade to that auction, right?
Yeah, and Carl Quintanilla usually gives a grade too.
Yeah, he's great too. He's good too.
Yeah, so if Andy doesn't do it, go look for Carl Quintanilla, and he's the guy on CNBC, and he gives a good grade. His grade is pretty decent. Barometer of how
I'm going to try to have Vol Signals on tomorrow. I need to give an invite to Discord. Sweet. So I'm going to try to jump in there, and then we're going to try to get Vol Signals on the show tomorrow if he has any time in the morning. That'd be great, right? Have him on next.
I think it would be, seriously, let's pump this up on Twitter because I think it's going to be a banger. If he comes and starts talking.
I should have said something, too, that you were on the show this morning.
Oh, dude, it's okay. I'd rather not. I don't make
God
calls.
Damn it.
No, dude, on Twitter, I don't make calls. I'm not in that business. I come and hang out with my friends because I'm a retail trader.
Your friends would have showed up. You would have brought your friends here, man. I apologize for that.
Oh, no, dude, it's all good. Anyways, yeah, we should pump that up on Twitter because I think if you're getting Vol Signals tomorrow, I think that will be a banger of a show because he's going to tell you stuff that the average retail trader has never ever heard.
Mm-hmm.
And this is how big boy positioning happens. He will, if he does what he does for me, it'll peel back the veil, and you'll see like the dark underbelly of what makes this market move.
Awesome. I can't wait. I'm stoked. So Vol Signals, if you're listening right now, do you mind if I say that you're going to be on the show tomorrow on public? We'll give you an audience of 5,000-6,000 people tomorrow, somewhere in there. You mind that tomorrow? Is that okay with you? Let's see if he's still in here listening. Yeah, we'll see if we can get him on. Well, I'm going to contact our Trader Podcast. We're going to contact him and see if he'll confirm that.
Yeah, let me just ask him right now.
So ominous. All right, so we're going to try to get vol signals on tomorrow morning. Trader Podcast, I want to thank you for showing up today.
Yeah, man, my pleasure.
We're looking
Thanks for
at
having me.
sellers here, just setting this up. We got a nice hedge in the market, waiting for the bond auction to turn this into a bloodbath to the downside. And we're going to try to get vol signals on for you tomorrow morning. If so, you'll get an announcement from me on FinTwit. If you do see an announcement for vol signals coming on the show tomorrow, I'm going to ask you guys, and any guys that are watching the show, to try to retweet that tweet, just to let the general public know that he's going to be here tomorrow. Let me see if he's going to answer that, say yes to that now, and we'll just do it right now. Vol signals, can I tell people on FinTwit that you're going to be with us tomorrow morning? Because what I'll do is I'll ask the community here to repost it everywhere across FinTwit. We'll do it again tomorrow. We'll repost it again tomorrow. Try to get you a nice active audience. Still waiting for a response here. And Trader Podcast, man, I appreciate you, bro, being here today without a doubt. We're breaking below the gamma flip right now on SPX. Dipping our wicks below that gamma flip. All right, we'll see. We'll get back with vol signals, find out if he's got time or can pencil us in if it's even possible. If that does happen, we will. He's saying he has to clear a schedule first. Don't want to promise, then let you fellas down. No worries, vol signals. We'll just wait for if you can or can't. If you can't either, and want to do it next week or something, don't feel like it's required that you're here. We'll make time for you whenever you're available. So don't feel like you're under any pressure to say yes or clear your schedule. Feel like, hey, Monday's better or something like that. If you ever want to do something on the weekend, let me know as well. All right. Thanks, Vol. All right, so this is for vol signals. Thanks for showing up today. David AMS is in the chat this morning too, so if you got questions for him, you know that he's inside of our network, and he'll have some answers for you if you have any questions on where the market's headed from here. And then I want to say a special thanks specifically to Trader Podcast for loaning some of his time and his insights for our community today. We really appreciate it, man. I appreciate you being here today. Yeah, thanks to all of you guys. I really do appreciate it. Trader Podcast, you still here? Right? I didn't close you off, did I? I think I might have. Oh, I left. So I lost vol signal here. But I just want to say thanks to him. Let's take a quick look here and look for some downside targets. And I'm going to read some notes to you from this morning. And I'm going to read you some. Hold on, give me one quick second here. Before I read this to you, let's take a quick look at the market. We're getting a little bit of a break here on the gamma flip and looking for a rejection to the downside off that 1 minute trigger for a downside target of 471.65. Excuse me. Got a little bit of a gap back here to close right here. Keep your eyes on this little area right here, right above this pivot. We'll drag this one down to the downside. Right down there. And I need to take a quick break here. I have to go potty. I have been sitting around drinking coffee all morning long. Jay Shady chiming in as well, saying bond auction at 1 p.m. probably determine the direction of the rest of the day. You want to be watching out for Andy Constant on FinTwit if he posts a letter grade on FinTwit. Fed's Bostic came out and had some doom and gloom on the market at 12 o'clock. He said, I am open to starting rate cuts before July if there is convincing evidence that inflation is slowing faster than I anticipate. He also says repeats baseline is for rate reduction starting in Q3 with care needed, not to cut too soon and risk renewed demand and price pressures. So speaking out of two sides of his mouth. Andy Constant. You can also his real name on his handle on FinTwit is Oh shoot, what's his real name on FinTwit is Damped Spring. We put his name in the chat earlier too. It's at DAMPEDSPRING. Damped, like damped, or what should I say? Delta Echo or Delta Alpha Mike. Shit, what is P? I'm forgetting all my military training here. Damped Spring. My alphanumeric stuff I'm forgetting right now. Stretching Wall saying, I feel like with it being 18 billion of tips, it's not non-event. Even if it does go bad, which it won't, shouldn't be lots of direct interest in that one. The markets will get it all back. Papa, that's what it is. Papa. So Delta, Alpha, Mike, Papa, Echo, Delta, Sierra, Papa, Romeo, India, November, Gamma. I think I got all those right. I missed P. I was having a brain fart. I always have a brain fart on like X. I think it's X-ray as X, and then Q, and then P, of course, Papa. That's right, Bumbledine. Yeah, look at Kamel. Dump it. I want to buy a dip. Or I want to sell the rip, maybe. Kamel might want to sell it. Thanks, Sunday Never Ends. All right, so that's a great morning. We had a pretty cool morning, right? Went over some of the earnings stuff, some stuff you might not be seeing from other people. So Trader Podcast dropping in some hammers on earnings expectations. Great way to start earnings season outside of us missing the banks or not giving any insight in the banks. So it's kind of a nice start. So we'll continue to add more texture and flavor to earnings season as the days progress. Yeah, it's pretty good today, right? And I got some other stuff for you guys. The past 3 or 4 weeks, right? As we're getting ready to do all this stuff, we've been reaching out to some people out there we're trying to, in the background, form like a network of people that will have a voice that you guys can tap into. And matter of fact, we were talking to Dre. Is it Dre the Moon? Let me see if I can find him. He's also known as Assface. As Assface. Hold on a second here. Dre on the Moon. We're looking to bring him on the show at some point. And there's someone else that we've been talking to on FinTwit to see if he can interview people on a stream. Like maybe he shows up on the stream or he has his own show or there's some kind of involvement from him. But we've been talking to another FinTwitter out there to try to get him on our show more frequently as an interviewer. Some of you might know who he is, and some of you may not, but we're going to try to bring him on board as well. And you got David AMS. You got a crew. You probably got a crew around here. We got who else? We got Chris DeMarco, and we've got some other people interested. So as we keep talking to these guys, we'll try to have more interviews, different portions of your day with us. And you guys know how we do things around here, right? It's not like a bunch of bros fist pumping each other, and it's not a bunch of esoteric, not choosing your thesis kind of interview style that we do here. It's pretty laid back and easy. Little bit different format than you might find across the shows that you watch out there. What's going on, Joey Donut? How are you doing, brother? We had some bangers on this morning, man. Doing some interviewing this morning, having some heavy hitters showing up to the stream today. So it's pretty cool. Yeah, Matt Ryan. We talked to Matt Ryan. We'll try to get him on the show at some point. Chris DeMarco, Dre, get him on the show at some point. We got a whole bunch of people out there trying to. Vol Signals trying to get him on the show. We got to get Short Seller ST on the show. I don't know if we can get Jedi. Vol Wiz talked about coming back on the show again, so I've been talking to him recently. So we got a whole bunch of people lined up to get back on the show. All right, I'm going to take a quick potty. I got to take a potty break. I'm going to put on some CNBC in the background, and I'll put on the news squawk for you so that you can listen to all of this as I'm taking this quick break. Turn this up right here. Let me launch this right here. We're just waiting for the next 18 minutes Looks like the market is hedged, awaiting the bond auction here. Yeah, so Trade the Trigger is our handle on Twitter. It's active and inactive. We're running a bunch of webhooks and stuff to it and testing that handle right now. And we have a website called tradethetrigger.com. That's coming online here. We're hoping for the end of January to get it online. And the idea here is to be here for retail traders, right? Always have some kind of a near free option, free or near free, what we've always provided to people forever, but keep it or turn this into something that can take care of itself over time and grow. And also have a network of people that you guys can trust out there on FinTwit, right? So if they're out there doing their own thing or whatever, we at least highlight these. People like, you guys know that, like, you guys find like gurus and shit out there, and it's always like, I'm the guy and I'm the only guy, or don't listen to those people over there. You guys know that I don't care who you are, right? You could have 1 follower or 100,000 followers. If you're lending yourself to the conversation for retailers or helping retailers out there, I'll always come find you and be like, hey man, let's get John, or let's showcase what you're doing or whatever. Always, especially if they're helping retailers out. Yeah, here we go. I got a Trader Podcast. I'm going to do that work for you right now, brother. I got you. Give me 2 seconds, okay? And I'm going to get to you in Trader Podcast what you just want me to do, what you want me to do for your trading view. I'm going to do it right now. So I'll be back with you guys in just a few moments. I'll be right back.
Fed makes no bids for 10-year tips.
Athletics.com.
U.S. Defense Secretary Kirby says the U.S. has to defend shipping in the Red Sea.
Welcome back to Halftime. We are continuing our series on identifying the committee's top contrarian ideas for 2024. So, Liz, you get to go for it first. What do you have?
I have a ETF DBB. This is a base metals ETF. The contrarian idea being everybody thinks inflation is coming down in a linear fashion. What if it goes back up? What if we see a resurgence because the Fed cuts too soon? And add on to that, what if housing doesn't collapse like people are expecting it to and come out of inflation? As mortgage rates fall, I think you see more demand for housing, which drives things like copper prices. So this ETF and just metals in general, aside from gold, has done pretty poorly this year, was pretty poor at the end of last year. So watch it for maybe a little pop higher. But to be clear, this is a satellite allocation in a portfolio. This should not be your entire alternatives allocation. Keep it tiny.
Good qualifier for DBB. What do you got, Bill?
I got SPPP, and I promise this was not planned at all.
We didn't talk before.
Platinum and palladium, and your point, they were bludgeoned last year. This thing was down 25% last year. I'm looking at a resurgence in China. I think that as well. If you look at the China exports of autos, they're going to dethrone Japan. That's what the call is here. If China picks up, we're going to see platinum and palladium. I mean, they're using Cadillac converters. I think it's just really crushed. Now, I do run a metals fund, and I trade the commodity in there, platinum and palladium. They've just started the year off very, very poorly. So you're looking at it here as really, I think, a good entry. Now, if you're going to get into commodities, you have to understand the volatility of commodities, even if it's an ETF of commodities. So make sure you know what you're doing if you're buying this, and there's going to be a lot of volatility behind it. But it is something that's bludgeoned, and I think there's a good reason for turnaround. I mean, even just like infrastructure in the U.S., just started the spending that's just going to keep going around, and I think China is going to be the cornerstone here.
Okay, so DBB and SPPP from Bill and Liz for contrarian ideas for 2024. Well, coming up, the committee's got more portfolio ideas for the year. But first, Mike Santoli will join us with his midday word halftime report back right after this.
So in 10 minutes time now, we do get the 10-year tips. So the US selling $18 billion of 10-year tips with a prior bid cover of 2.32 and a prior high yield of 2.18%.
We are back on halftime. Senior markets commentator Mike Santoli joins us with his midday word. You still got the NASDAQ leading and the S&P positive, but it does seem like we've lost a little bit of wind from the sails of the market here today. Is it Treasury yields, Mike?
Yeah, Courtney. Some days, pretty much moment to moment, the market tells you what it's paying attention to. So the highs for the morning in the S&P 500 were made just as the 10-year Treasury yield started that run up to 415. It's just like a,
So just taking a look at the preview for this auction. So positives for the sell include large anticipated month-end tips, index extensions, the potential for near-term upside pressure on inflation from trade disruptions, and the Fed's shift towards rate cuts. So other negatives include its increased size and somewhat rich valuations in the view of JP Morgan strategists. So primary dealer positions in tips due 6 to 11 years was net long $2.87 billion in the week ended January 3rd, as versus one that spot $6 billion average net long over the past year.
After a sprint to 2-year highs at the end of last year, but getting a little bit of anxiety in there as below the surface you're seeing some deeper pullbacks.
All right. Thank you very much, Mike, for joining us and keeping us on track. Coming up next, Trade School. It's in session. The committee debates some of the most unloved stocks and which ones could be good bets for the year ahead. Halftime is right back.
Sit.com.
No conversation?
We're back on halftime. Time for Trade School. Josh, you're breaking down some of the most unloved stocks in the NASDAQ 100. This is where you get to explain. Teach us what you're thinking.
So the general idea is in any huge market rally, there are always going to be companies that have been left behind. A lot of people are saying to themselves, like, all right, the NASDAQ's up 50% last year. What do I do? How do I buy a stock that just went up 100%? It's really hard to do, and sometimes it's worth doing that, but not always. On the flip side, sometimes it's worth looking at some of the stocks that have not participated.
Where they got that rug just set up right now, huh? You see that rug?
The first is these are severely impaired.
So in 5 minutes time now, we do get the
strategies.
10-year
Whatever
tips
these
auction. So
companies
the
were
US
trying
selling
to
$18
accomplish,
billion.
it wasn't working.
Prior
The
bids cover is
question is there
2.32
something
and a
that they
prior
can
high yield of
change, or things they can
2.18%.
change in most cases that might all of a sudden resonate with investors? So we looked at the worst performers in the NASDAQ 100, and we were looking for names where they were either in technology, consumer discretionary, or healthcare. They were sort of in growthy areas, and which ones are maybe worth a second look. So I picked out a few. I think Illumina is really interesting. It's healthcare, technology, diagnostic equipment. There was an activist fight with Carl Icahn. It's just been a total basket case. But I think it's worth a look because healthcare has been lagging. If healthcare turns up, this is the type of stock that could get rediscovered. Took a look at Siri. That's the one that's down the most out of the NASDAQ 100. It's down 92%. And of course, the whole thing is reliant on people continuing to pay subscriptions. It's been a really challenged business. The only thing they have that's special is Howard Stern. Howard Stern is probably on not just the back 9, but maybe the back 2 of his radio career. And but again, what could change at a company like Sirius? So I just think it's the type of thing where if you see the market up huge, just recognize there are companies that have been left behind. You probably don't want to own all of them, but probably there are a few names in there where something is not being appreciated by the market, and you maybe uncover a gem. So that's the idea behind the Hateful Eight.
Very interesting. And PayPal, though, also on your Hateful Eight.
I mean, it's one of the worst stocks in the history of mankind, as we all know. So how could it not be there?
And we had a very interesting conversation about that earlier. Well, stick with us because final trades are coming up on Halftime.
Tomorrow, Scott Wapner, live from the American Express. Exclusive interviews with the CEOs of American Express, Delta, and more. Coverage throughout the day. Tomorrow, only on CNBC.
Surely expecting the 10-year tips auction when issued due at the top of the hour.
February 31st.
We're back on Halftime. It's already time for the final trades. This hour flew by. Liz, you get to go first.
Healthcare this time, at least until election season kicks into high gear and polling starts to drive volatility. But you get some growth, it's not as interest rate sensitive, and they were a laggard last year.
When issued,
Very
10-year tips
interesting
yield
after
about
today's, news that we heard
1.825%
from
before the
Humana and United
$18 billion
last week.
auction.
Josh,
So just
what's
to
your
repeat that
final
there,
trade?
when
I think
issued,
Pfizer
yield
bottomed in the
around
middle of December on huge
1.825% for the 10-year
volume, a lot
tips.
of it tax loss selling and window dressing. It's about to retest that level here. I think it'll hold. I'm in the stock, relatively recent purchase.
Carrie?
I'll go fast. Autodesk, it's a software company for construction and industrials and should start to have a good year.
And Bill, take us home.
AbbVie, stay diversified. It's broken out. I think we could be running at the 2022 high, 176.
Got it. That does it for halftime. The exchange starts right now.
Indeed. Indeed it does, Court. Thank you very much. I'm Tyler Matheson, in for Kelly Evans. Here's what's ahead on a very busy hour. Spruce Point Capital out with a new short report targeting the global index provider MSCI and calling it a classic case of a company failing to transform itself. And that is the nicest part of the report. Spruce Point Capital Ben Axler is here to make his case. Plus, speaking of contrarian trades, our market guest has 3 of them. The names and why he thinks they are positioned for gains this year. And this election could be unlike any other. And it is not just because former President Trump is back in the picture. It is because deepfakes are also a part of the picture. And they are getting more and more sophisticated. What you need to know. We begin with today's markets, and Dom Chu has the numbers. Hey, Dom.
Generally positive, Tyler, but losing some steam right now. It's a bit mixed in terms of the overall picture with the major indices. The Dow Industrial is currently down about 100 points. 0.25% declines there, 37,168. The S&P 500, that broader measure, is up about 0.1%, so modest gains here. But this does represent right now session lows for that S&P 500. At the highs of the session, by the way, we were closer to 47.66. Currently trading at 44 right now. So keep an eye on
Bids cover
that
2.62, 2.62 when issued. High yield of 1.81%, 1.81%. So the US selling $18 billion, awards 53.51% of bids at high. Primary dealers taking 3.2%, direct taking 17.48%, and indirect taking 79.32%. So again, just to repeat that there, bids cover 2.62, high yield 1.81%.
That are still kind of playing some push and pull here. But Apple shares up 2.75%. It gets a big upgrade over at Bank of America today. Nvidia shares get a star. They make a record high in trading today. Alphabet's up about 0.2%. Amazon, Microsoft, all up as well. So keep an eye on big technology, certainly driving the action so far in certain parts of the market. And then the stock of the day right now has a little to do with the consumer health picture right now. The second worst performer in the S&P 500 today, as of right now, is Discover Financial Services. That company, perhaps best known for its namesake credit card, is down about 11% right now. Its earnings report was mixed. Revenues actually came in better than expected, but its profits fell markedly over the same period last year because it boosted significantly to about $1.91 billion worth of reserves it sets aside for possible bad loans down the line. That has helped dragging that earnings picture down. So Discover Financial shares down about 11%. One more data point, Tyler, in that very mixed picture for the U.S. economy vis-a-vis the U.S. consumer. We'll see how this plays out. Ty, I'll send things back over to you.
All right, Dom, thank you very much. Dominic Chu reporting. Meantime, shares of MSCI are up 1% in today's session after Wells Fargo called it a, quote, best in class, shrugging off yesterday's short report by Spruce Point Capital, which sees a 55 to 65% downside risk in that company. In the report, Spruce Point calls MSCI
Treasury
a, quote,
10-year real
classic
yields
case
decline
of a
after the
struggling
10-year
company
tips auctions,
failing
last
to
down
transform
at
itself while engaging in
1.81%.
value-destructive and even worse, nepotism-like acquisitions and share repurchases. It also accuses the company of abusive financial reporting and accounting tactics to bolster earnings. In a statement to CNBC, MSCI responded by saying it categorically refutes the claims in the report published by Spruce Point Capital Management. This report, it says, is an intentional attempt by a short seller to target our stakeholders with misleading, incomplete, and false information that aims to distract from MSCI's successes and opportunities. And here now with us to respond to that statement from MSCI is Ben Axler, founder and chief investment officer of Spruce Point Capital Management. Ben, welcome. Good to see you. This is going to be a lively conversation, I'm sure. Let me begin with this. It says in my description of about Ben Axler that you're an activist short seller, we agree, forensic financial researcher, certainly that, who has dedicated his career to exposing financial schemes. Is MSCI, with a blue chip background and heritage, a financial scheme? And if so, why?
Well, I think the company clearly is trying to create shareholder value and increase its stock price. Now, where we think they've gone wrong is through expensive acquisitions that we think haven't lived up to the expectations. We think they're repurchasing their stock at an industry high 17 times revenue multiple. We think that money should be dedicated more to dividends. And, we think that, to the point about it being a mature, struggling company, that they're engaging in aggressive accounting and financial reporting to project an image of growth, where we think ultimately they're going to struggle to meet expectations as the industry transforms and their solutions become more commoditized.
These are operational, largely. That's my characterization, not yours. Operational issues: how the company is being run, what it has done in terms of acquisitions, how it is handling share repurchases versus dividends, and so these are legitimate criticisms, I'm sure, from where you sit. But is it a scheme?
Well, I think every company operates a scheme to improve their share price, right? But I think where we believe that management is being aggressive in terms of how they're portraying their growth, how they're portraying their margins, and how they're depicting their revenue. So, for example, in our report, we noted we've seen some aggressive revenue recognition policies on non-recurring revenue items. We also have issues about the cost allocations and whether or not the margins in certain segments are increasing. So that is
one of the bones you have picked with the company as we talk about revenue recognition and things like that is the fact that the chief accounting officer left about 6 months ago. Am I right on that?
Correct.
Has not been replaced. The job is now being functionally covered by the chief financial officer. You think this is bad?
Yeah. So we do have concerns about the governance.
And the comptroller has gone. Right? There is no comptroller.
Correct. So there's some governance improvements that we think could be made. Look, we credit the CEO, who's been with the business since 2007. He's created a lot of value. He's also the chairman. But, we think as the company's end markets and customers change, that the company needs some change at the highest level, at the CEO level. In addition, we believe the company should split the CFO and chief accounting officer roles. That's a concern. We also have a concern about the audit engagement partner, who is not explicitly a financial service or technology expert, is a chemical and industrial expert. So we think there's certain things they should do to improve the governance and the confidence in the company's financial reporting.
Governance, operations. Another thing you draw attention to from your point of view is what you call nepotistic tendencies. And nepotistic, I guess, in personnel decisions, in terms of acquisitions, and other things. Explain where the nepotistic factors have come into play and why they've been injurious to the company.
Right. So MSCI, what does it stand for? Morgan Stanley Capital International.
I just heads up here that I just bought for 60 cents 475C for tomorrow. 475C.
Not releasing the terms, the payments of what's being made to these individuals. So we're calling on the company to be more transparent and explain why there is a pattern of deal-making, nepotism-like alliances with these individuals.
Probably not the best place for me to do it
Wells
this, but
Fargo comes
let's
back
see how
and
it goes
fires
here.
Back,
see if we
at
get rolled
your,
down some more.
Allegations sent in a letter yesterday to Wayne Edmonds, who's the independent board chair and audit committee chairman at MSCI. Wells Fargo
just
says,
closed the gap on
SPX.
SPX.
Report called that MSCI is a struggling company, misguided. We view MSCI as one of the highest quality franchises in our coverage. We believe the report mischaracterizes MSCI's leading market position and underappreciates its high return subscription-based model. We highlight Spruce Point's recent track record with other high-quality multiple business services stocks with average performance of positive 73%, 38% outperformance versus market since the short call. What they are fundamentally saying there is that they don't agree with your assessment of MSCI. And oh, by the way, just to pound you a little harder, when you've made short calls in the past, the stock has done the opposite. It has gone up, not down.
Well, we disagree with that. I mean, you can look at our recent track record of S&P 500 short campaigns. Last year, we called short on Xylem within a month, the CFO and CEO resigned. We found we've had a lot of traction in some of these large cap companies, and we're looking very much at the numbers, okay? So, our report is very fact-based. You can look at the client retention rate of MSCI across their segments. They're all declining. The organic growth is declining. The company's making changes to their risk factor language in the 10K, talking about client defections. We even did a survey of about 1% of their clients and are finding that the customers are pushing back on abusive high price increases. So we beg to differ there.
Other shorts you've had lately, A.O. Smith and Generac. Let me ask you this. You're critical of the amount of share buybacks that the companies do. Is that a fair characterization of what you're doing? Are those share buybacks, do you believe, driven in part by the fact that executives at the company are heavily compensated with stock?
You hit the nail on the head. So one of our issues here is that management long-term incentive compensation is being tied to cumulative revenue and adjusted EPS. Well, what's the problem here? The company does not give explicit guidance on their revenue or adjusted EPS. So investors are operating in a vacuum. Management's paying on numbers, and yet they're not disclosing what these metrics are to investors.
MSCI, we talked about that ticker this morning.
To use the buyback in a way that increases their earnings per share. So one can think of it as they're essentially buying their potential ability to hit the targets. And they will adjust out modifications to the debt in terms of adjusted EPS, but why not adjust out the repurchases in the adjusted EPS? So that's our main criticism.
So let me ask you one. We have to go, but how the hell do they make money?
Well, they have an index business.
Do they license those indexes to funds and ETFs and other? What do they? How do they make?
Yeah, so they have an index business, an analytics business, but their core growth driver recently has been their ESG ratings business. That's been growing about 20%, and where our real concern is that growth driver business is starting to slow as there's ESG pushback and more competition.
So the ESG rating, a company will pay them to rate the company on ESG metrics. Is that right?
That's
like the way S&P might charge a company to go in and give it a bond rating.
That's absolutely correct. That's their highest value ESG business, and that is under more pressure.
Interesting. Thank you so much, Ben Axler. We appreciate your time. And obviously, we have a standing invitation out to MSCI and their executives to join us to comment on this call.
Thank you very much.
All right. Thank you very much, Ben. Market probabilities for a March rate cut coming down a bit, now sitting at 57%. Our next guest agrees with that sentiment, saying a cut that soon would be too aggressive. He sees some choppiness ahead for the markets in several areas of
up a penny
opportunities
right now
to strike on amid the pullbacks.
Down a
For
penny
more,
right
let's
now.
bring in Matt Orton, Chief Market Strategist at Raymond James Investment Management. Matt, welcome. Good to have you with us.
Great to be here, Tyler.
You don't argue with the fundamental thesis that the Fed is likelier to loosen rates this year than not, right? But you just are questioning whether the timing in March is too soon.
Yeah, that's absolutely right. You know, it's clear that the Fed has hit the peak, that we're going to be cutting rates this year. The problem is the market got really, really aggressive, Tyler, in pricing in rate cuts, pricing in 6 rate cuts at the start of the year and putting up to an 80% probability that we were going to get a cut in March. But at the same time, you have an economic backdrop that's pretty darn positive. You have strong jobs growth. I think the trajectory to get to consistent 2% inflation target is not as easy as everyone thought. So, you know, I've been telling a lot of our clients that we've got to go through some normalization first. We're seeing that play out a little bit this week. I think there's still more room to go. But at the end of the day, the fundamental backdrop supporting earnings growth and supporting a broadening of the market is still very much in place. So what I say is use downside opportunistically to diversify and set your portfolios. And if you've got cash sitting on the sidelines, rates are going to come down. So have a plan and start to execute that plan, because there's plenty of interesting areas in the market.
I guess one of the things that and I may be full of it here, Matt, and you can instruct me if I am, and I admit I'm full of it more often than not, is the idea that there,
a little bit of roll, but not quite. Still strong right here, right, Johnny?
Money, this tonnage sitting there in money market funds, and indeed, money did go into money market funds over the last year as rates rose, and the returns on those funds became more palatable, more enticing.
Come on, TNX,
But
roll,
I'm always
baby.
suspicious of the idea that
Tesla
that money
still
is
blasting
going
down
to
here.
leave those money
VIX
market
trading
funds
1479
and
right
fuel
now.
a big rise in equities. Tell me I'm wrong to be skeptical.
No, Tyler, I think you're right to be skeptical because
VIX
you
closing
don't
the prior
always see
gap.
money leave those short-term instruments.
Yeah.
But what I would say is you have to think about why $1.2 trillion went into money market
Man,
funds.
they're
last
going to
year when
roll
the market was
HYG
up,
down here.
26% or
HYG
so.
getting
It
saucy right
started
now.
off as being
Dixie
defense.
looking
It started
kind of
off
weak.
as being, I'm
HYG
uncertain
looking
about
weak.
where the market's
Dixie
gonna go
looking
next year.
weakish.
And then another big part of that was rates are continuing to increase.
NASDAQ bleeding. TNX strong.
I can get 5 or 4 or 5% to
VIX
keep
blasting
my money
right
in
now.
a safe place, and that doesn't sound too bad to me after an era when
I'm up
I was
a few
getting
pennies here. I
0%
don't know what to
keep my
do.
money in these places.
I'm going to put a stop here in case I get rugged.
But then look at what has changed now. So those who went into those money market funds who were overweight, they missed out on the capital appreciation component that you can get both with respect to fixed income and equities. And a lot of them said, okay, at 5%, it might go a little bit higher. I'm going to wait. And now we went down to 4%. And so I think there's
I got to
more
stop
of
at
a
least, even
very
if they.
visible opportunity
81
cost to
counterparties
sitting there.
take
And I think at
$618
the same
spot
time,
$234
as
billion
the
at the
investors
Federal
who are
Reserve
sitting there
Corporation.
who are there
That is
for
loud as
more
fuck.
of the I need income part of the equation, they can get that in stocks, they can get that in bonds now, and as rates are coming down, I believe you're going to see that money start to move, especially when the economic picture is still pretty benign and solid.
I don't want to let you go without a quick thumbnail on a couple of the stocks you like. They are contrarian in some cases, though one of them, the first one I'm going to mention, I'm hearing a lot of buzz about lately, and that is UNH, the big healthcare company, XBI in biotech, L3 Harris, defense and small caps. Why do you like these?
Tell them what you really
so
like.
I think healthcare is a
equipment
great opportunity
is
to
the
have
sauce,
a contrarian
dude.
play because you're
There are
starting
healthcare
to get to
equipment
the point of
ETFs out there
bottoming
that
in
are the sauce
ETFs
for this year.
process,
They've been
and it's a
down
good
for
place to be
2
selective.
straight years.
So Humana
It
is
just
not
like
United
bloodbathing.
Health. The
They've
reasons
erased
Humana
all
is
of their
down so much
gains
isn't
from
just because of the medical cost
the
ratio.
COVID run.
It's because they missed expectations pretty badly, and the outlook isn't that positive. Whereas you have a UNH that's growing at 13% earnings year over
Yeah, I
year.
reposted that from Andy Constant on Twitter.
And not exposed to
it's on my profile is
so
grading.
I would be using this downside to build more of a position there. And XBI, even though biotech, Tyler, has had such a big run and people might be reticent to put money to work there, take a 5-year chart of XBI and look at the destruction that has happened in the environment where rates started to move higher. We know from our conversation earlier, rates are going to come down this year.
TNX rolling over right now.
Especially down market cap has picked up and should continue to accelerate.
TNX bleeding
and there's
currently.
a lot of patent cliffs coming up, and so you're seeing a lot of pharma companies be much more acquisitive, and I think there's a lot of room to run. So don't play the binary event, play XBI to get broad exposure.
Got to leave it there, Matt. Thank you very much. Matt Orton, we appreciate your time today. Raymond James.
Thank you.
You got it. Coming up, 2024 already being labeled by some as the year of the so-called deep fake election. Are platforms and regulators doing enough? Are they ready to prevent bad actors from using AI to hijack the presidential election? We've got a deep dive into deep fakes next. Plus, mortgage rates are well off their October highs, but buyers beware. Our guest says that puts builders at a big advantage in this market. He'll join us to make his case. The exchange returns after this.
This is The Exchange on CNBC.
I'm flat right now. I hope they don't try to stop. I hope I don't get like a they trigger my stops and then there goes your rip right there. Can I go on to? Can I talk about the Volatiliy? I have a whole educational series on it. It's very complicated, and how they interact differently with tickers, and then their culmination matters. If we're bullish or not, or if support's going to hold. Their interplay is basically Are we going to if the dip will hold on a trigger or not, or if we're going to break through to the upside through a trigger? And then it also shows velocity, momentum over many time frames, going all the way back to the beginning of the stock market. So they have a huge interplay on triggers, if they matter, if they don't matter, that kind of stuff. Also can predict crashes, major crashes, stuff like that, but it's more complex than that. It would take me hours to go over it with you, but I do have a white paper on it, and I do have some video training that is dropping on that stuff. As we come into the end of the month, you'll get access to that stuff, and at the end of January, to explain it better for you. It is complicated. It's not easy. You know, another thing too is there's only a few guys I know that. I know there's more than a few, but there's only a few guys I know that have ever gone down the rabbit hole to truly understand the implications of those things.
Asset.com.
Hopefully I can train you guys on this coming up in the month of February. Spend some time with you guys on this.
2024 could be the year of the so-called deepfake election.
They're going to try to fucking rug us here.
Videos threaten to spread misinformation and potentially affect the outcome.
I'm up one penny. They're giving me the choice right now to get out.
The world where so many elections are taking place this
They're
year.
like, get out. It's like
here
Poltergeist.
now with the details.
No,
Hi,
Amityville
Julia.
Horror. Get out.
Hi, Tyler. That's
You're
right.
getting your
That's the
chance here,
risk
boss.
That's the concern that AI manipulated audio or video could spread, impacting
Down 2
what
pennies
voters
right
think
now,
about
3
candidates,
pennies.
or even whether they think it's safe to go out to the polls. Now, consumer advocacy group Public Citizen is advocating for the Federal Election Commission to take action, warning, quote, a torrent of fraudulent deepfakes threatens to destabilize our fragile election system, maybe even decide elections. The FEC responding, quote, any suggestion that the FEC is not working on the pending
What was my
AI
logic on
rulemaking
taking this
petition is
trade?
false. Going on to
The
say,
gap
I
was filled
expect
on
the commission
SPX.
will resolve the
That's
AI
why.
rulemaking by early summer. Now, the most notable deepfake election
So right down
example
here,
yet was just ahead of Slovakia's October
there's a little
election,
more
when a
room
fake
to run
audio
down here.
clip
Let's go over to
of
this
a
chart really
presidential
quick. Good
candidate
question.
was posted on social media, seemingly
So just SPX right here. Now there's a slight problem here. We've got 1600 was right here. It's a little more gap to go, so I should have written in this one too. I'm putting a little bit more risk on than I should be. So this one right here, there's another gap down here. That's at 47.3481. So this is the close of cash market yesterday. You know how these little algorithms like to come in here and erase all this stuff right here. Now we erased this right here, and this right here has already been erased. Boom, boom, boom. Cleaned all that up. You could make the case that there's a little bit more down here. So I'm either gonna get. So if we blast down here, my stops are lower. I'm not going to tell you on stream where they are because I do feel like people are watching where my stops are. I'll be honest with you. I have a real fear that we're being watched. Hold on here. So just down in here, there's likely more blood possible in here to catch your stops, to catch this stuff back here. But if I'm going to start taking some risk, I don't want to get left behind either. So I'm going to start a position here, maybe add to a position here, and hopefully come back and add some more to some upside, just so I don't miss this dip buy. And why am I doing this? Because this is kind of like the last place for a bull, right? It's kind of like the last place for a bull. If at any point there's a rejection here, let's say this is not the bottom. Let's say it's here. So I buy here, I DCA down here, and what's really matters to this is, do I miss the trade? And also, let's say it comes down. Let's say it comes down here, and it comes up here, and it confirms more downside. That's bad. I will cut my losses, right? Not losses. I'll be winning, but not by a ton. But I'll switch to a seller of the market here is my point. So I'm a dip buyer. As we come down into gamma flip, I'm a dip buyer. And if we come down here, I'm a dip buyer here. I'm a dip buyer here to head to the upside, right? If we bounce right here, I'm still a dip buyer right here, right? Bull. I'm a bull down here. Is my point. I'm not a bull up here, am I? I'm not a bull on these tops. We already know we're at like 786 or 770, or 474, 475 up here is like the top. 480 was the top before, right? 480 was the top. This is now the top right here. This is SPX, by the way. But as a bull, as a buy the dipper, this is kind of the place. Do you get what I'm saying? Now, if we do reject here, if we're like, you know what, Cap, this was your dip, and I buy it. Yeah, I bought it here. Perfect trade. We come up here, and then we reject the downside. I'm going to actually I'm going to stop being a dip buyer and turn into a sell the ripper. And as a matter of fact, the closer we get into Friday, the more crispier it's going to become. The more dangerous it is to be doing this, because I know at some point here that as that gamma rolls off and those single tickers expire, that we're going to end up getting some window of weakness risk to the downside. So right now, just parked right here, sitting around seeing what's going on. That's why I bought it. I shouldn't have bought it. It was risky. It's cheap though. It's like for tomorrow. Down 2 pennies right now, and we'll see what happens. If we get below like 50 cents, 40 cents, something like that, I'll cut it loose. Become a seller. Yeah. I'm with like, if you're a bull, it's kind of feels like shit buying a dip here too, right? Actually, you can see right now you can see the sellers stepping in right here. Starting to break through support. They're rug pulling this right now. We may get some blood right now. But remember, like when you're buying, I want you guys to remember something. When you're out there buying, like a lot of you guys buy like the run already happens, then you're buying the top and you feel good. It feels good, right? This doesn't feel good to me buying here. It goes against your grain to buy a dip here. Even if you lose, it doesn't feel like I should buy a dip here. I should see some progress before I buy. So it's pretty risky what I'm doing right now. Are they going to rug pull us? I don't know. I feel more. I mean, the other side of my lizard brain there tells me that if I am going to put this risk on in a risky environment, I'd rather do it here than as we're fucking straight green barring it up. I feel like, I don't know. It's like a inverse relationship. Yeah, exactly, Jill. Best trades often feel the worst, and I can lose this easily. Like none of the things that we use around here to buy a dip with confidence. I'm buying a dip with no confidence right now. Yeah, we could still swing down a little bit more. It's always risky down here, right? Or so you're always like panicky, or not you, but me. Deep fakes for the election. I don't think we're quite there yet, but we will be. We will be. The real fear here, I got to tell you guys something. The real fear here, if you had a real fear for this election, it is, I was talking about this briefly the other day. I'm going to tell you guys what the real danger is out there right now. I was on Google News. You can do this yourself. It's so fascinating. So I was on Google News, and in the bottom of Google News on a desktop, if you're in Chrome, the Chrome browser, and you look at Google News, at the bottom of their news, they have a section where they try to debunk fake news. And sometimes I click on those articles because they look kind of sketch to me, even though they're used to prove what a false statement or a false news article was. What's fascinating is I clicked on some of these articles over the course of about a week. This was about a month ago or so. And I was like, man, why are they citing? And you know what it had to do with? It had to do with, it was something to do with Palestine and Israel when it was like rockets or bombs or whatever artillery that was claimed to have hit a parking lot or a hospital in Gaza. And there was a lot of discussion over when it was found out that Israel did not, I guess, they had proven that Israel did not actually bomb that parking lot. Did the New York Times or Washington Post ever make a correction in that thesis that they were pushing to sell newspapers, right? And no, I don't care about what the yes or no or anything surrounding that. I cared more about what Google News or Google News specifically, how they would address it. And so they asked the question down inside of that Google News thing about that incident and saying, after it was confirmed that Israel hadn't done that, they said, they posed the question, did the Washington Post or the New York Times actually say that Israel did this? Now, they were citing some news sources that looked kind of sketchy to me, right? So I went down the rabbit hole on this, and I'm trying to research who the writers of these articles are, and you can't assign them to real people. So they've got like fake reporters. Now, as I'm reading the articles, I'm going to myself, man, all this it's passable. It's all passing the mustard test. But then there's this little part where I'm like, man, that's not passing the mustard test. The uncanny valleyness to how this article is written. And so what I found most fascinating was a lot of these written language model AIs that are being used to write news stories for you, they're citing factual information, but it's like dated information or not really relevant to the news that's being reported. And what's fascinating about that is you can be telling the truth about a subject that's citable, but really isn't the truth in whatever they're reporting or irrelevant to what they're reporting, or even current data, right? So some of this data that they're using, I'm like, yeah, an example would be this. If this is a prime example, I'm going to give you a simplified or explanation of what I'm trying to get across to you. If you go to, if you right now were to go and read a lot of the stories about Detroit, Michigan, they use a lot of, and a lot of AI too, writing a lot of articles about Detroit specifically, Detroit, Michigan, and they cite data that is a decade plus old to build a thesis and then write a fucking essay about it. And you start to realize that, or you're starting to question who's the writer, and are they using more current data? Are they using data that's coming up from the Fed immediately? Are they using like census data? Are they using data that's 5 years old, 10 years old, and while trying to make their point about something being horrible or good or whatever? I can assure you that if you search current data, matter of fact, CNBC just did a story on the housing markets. We're booming here, booming like 10%. Prices just cranking month by month, boom, 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 going up. If you were to travel to Detroit right now, nothing is like it was 10 years ago or 5 years ago. So if you're a human, the expectation would be looking for more current data. So though the data in that story might be accurate, it's only accurate because they're basing it upon stale data. So anyways, I think that's probably a bigger risk to the election season. Forget the deep, maybe down the road, the deep fakes will be an issue. Oh yeah, baby. What's happening right now? So the point that I'm trying to make to you is this: you can get AI. Let's say the prevalence of AI citing data that's accurate or truthful, but not necessarily accurate to pushing the narrative, or pushing or not necessarily accurate to what's factual for right now. So you can be pushing a narrative out there against or for any candidate out there, and use like facts that might not be actually true or relevant to what's being pushed out there. So to conclude, my thesis here is that if you want to circumvent fact checkers, whether it's like Snopes or circumvent, I don't know. There's a bunch of the different like fact checking groups out there. There's FinTwit fact checkers out there, right? There's all kinds of fact checking. You could actually, instead of just lying with point blank fucking falsities, you can actually find actual facts to still tell the story you want to tell that would beat those fact checking websites. So I think that's the real problem as we come into this election season. Am I making any sense saying that? So rather than pushing a deep fake or pushing a false statement or something unverified, you just find facts that would beat. It's just like a virus beating a antivirus software. You're just finding a way around this to say, no, we're right in what we're saying. Yeah. Then you got Bard making itself so shit up, right, and setting itself. So I think that's the next step for this election specifically. You can actually just you're not even fudging facts. You're just citing facts that might not be relevant, but would pass the mustard test as being factual. Trading 74 cents right now on 60-cent SPY calls for tomorrow, boys and girls. How are you all doing out there right now? How are you all doing right now out there? I can't wait to post Burr on Twitter. Should I take it off right here? Now, I told you this earlier, right? If this rolls here, I would turn into a seller, wouldn't I? So I'm interested in what happens on this gamma flip, aren't I? If we can get above it, we're good to go. Rocket ships, baby. Joe Natolo, did you follow me on that trade? I said do not follow. Did you follow me, Jill? I know you dirty girl. You dirty, dirty girl. Jill Natolo. Jill, like I'll be doing the market breadth stuff, and I'm like, I'm gonna be conservative here, and I'm gonna grab some call spreads. I'm only trying to make $2 on a dollar, but I'm all in. Jill's like, fuck you, Captain. I bought $30,000 in zero dates. And I'll do it again. That's right, Stacy. You're another one. Kim's out there too. There's a whole gang of women in here. You got to watch out for them traders. You got Kate Duffy kicking around over there on FinTwit. Who else is slumming on FinTwit? There's another gangster female trader out there too. Who's the other one that I've been paying attention to out there? Have you guys been paying attention to, let me see, what's her name again? Here, I'll repost her. Hold on here. I'm going to repost, who else we got out there? We got a bunch of people out there. If you're a female trader in our, don't be getting weird. If you're a dude in this stream, don't be. If I catch you, I'll fucking permanent ban you. I shit you not. Do not harass women. This is a warning. If you're a female trader and you're in our stream, say something in the chat, just like female here, woman. We got a gang of female traders in this stream. I kid you not. Yeah, don't be getting all thirsty like DMing these people. You bunch of fucking weirdos out there. don't Samantha LeDuc. I've been following her. She spends a lot of time on
So German lawmakers
she spends a
approve
lot of
delayed
time on
2024 federal finance
CNBC
plan.
too. Here, I'll put her out there right now. If you're a female trader out there, right?
So the German 2024 budget is said to foresee 39 billion euros in new net borrowing.
Follow Samantha LeDuc. I don't know if I'm pronouncing her name properly, but I just put her name inside on Twitter. I just posted it on Twitter for you. Yeah, we got some gangster female traders kicking around. Gangsters. We got Kim out there. Who else we got out there? Yeah, we got Adrian out there. Adrian Lazoon's out there. We got a bunch more. Thanks, Kamel. I just saw that, man. I appreciate their support in the stream, brother. I appreciate it, man. Kamel, thanks, man, if you're out there. Those fucking calls are printing right now, brother. Printing 78 right now. Dude, Frogsy's in the house right now. What's going on, Frogsy? How you doing, man? Is that Froggy Trades? I don't know if that's Froggy Trades or not. I think he stops in every once in a while. I thought he did every once in a while. That's why I come to this stream. Yeah, if we have any continuation of the upside here, you can see the top of the key right here, right? Top of the key right there. Oh, gonna be looking for some kind of a back check here, right there. Kind of a back check, boom. Hopefully get some of that action right there, boom. Get back to where we want to be. Get back to where you want to go. Get back. Yeah, on 0 dates, take some profit here. I'm still long here. They're Friday fucking calls. They're not Thursday calls. Watch that red bar down below. Down below here. You could watch my cursor. You could see a pull down. And then next leg to the upside might not break through here. Trading 86 right now. Let me reset that right now. No, you know what? That's a good question. So I'm in the conversation. I got two of my closest friends here in Detroit. I'm in a chat with them right now about going to the Detroit Lions game. So Ford Field is right downtown Detroit. It's the most expensive playoff game in history. And so I was talking to these guys last night, and I was like, do you guys want fucking tickets? Or I was like, because this is what I offered to my friends. I'm like, look, I really, truly don't care if we go to the game or not. But I would really like to be there for it. And one of the cool parts about Detroit is I can rent like an Airbnb in a high rise and pretty much see the game. And I can rent a tailgating lot for way cheaper, like way, couple $100, $200-300. But then I can spend a shit ton of money on party stuff and going out and just pissing away money in the casinos and in downtown and being with all the people. So Brad was asking if I'm going to go to the game. I think I'm not going to go, and I think what I'm going to do is take out my friends and spend some money on those guys. And I love, dude. It's like my friends in Detroit. If you ever meet sometimes they're in the stream here. Sometimes they show up, but I try to piss money away on them to have a good time. So I was asking my buddies last night, Brad. I was like, well, we can get tickets, or we can fuck around and find out in Detroit. So I think that's what I might do.
More layoffs at Google, this time cutting 100 employees at their video platform.
I think we might do that.
One of their more successful properties. The company
Biden in 30 minutes. Hey, Jasmine, dude, what's going on?
In a little over a week. And
CEO Jade Pasture is here, too.
That more are coming.
What's going on, Jade Pasture? We're talking about female traders earlier.
Tech Check. Hi, D. What's going on at Google?
Well, so last year, this is interesting. Google was kind of criticized for not cutting enough compared to, say, a Meta.
Thanks, Adrian. I appreciate it.
Year, right? We've had headline after
headline. They pumping for Biden, baby.
At the beginning of the year, and last night, in that memo, Senator Pichai warning.
Hi, Jasmine.
But there's more to come. But there's this idea of maybe there's a different.
Right on. Everybody's coming out to play right now. Everybody's out swimming right now. Everybody's backstroking.
So rather than playing catch up or correcting post-pandemic, this is actually Google getting into position for an AI platform shift that will require a different kind of workforce. I want to read part of that memo from Pichai last night. He wrote that the reality is that to create capacity for AI investment, we have to make tough choices. And so for some teams, that means removing layers to simplify execution and drive velocity. So Tyler, over the last few years, higher interest rates, the efficiency drive, that was the cover for layoffs, or the reason, however you want to look at it. This year, though, you could hear companies saying AI or the machines made me do it. They're looking for different kinds of workforces. It may not necessarily mean layoffs, but also a different kind of hiring.
Is Alphabet, in effect, taking a page that worked so successfully for Meta last year, when they branded last year the year of efficiency, right? Is that what Alphabet is doing here and hoping to get a similar stock market result?
That's
G-Dad Gold's like, take the money and run now, Cap. Get the fuck out.
From Bernstein that said the year of efficiency is now the years of efficiency, plural. But, what others think is happening is this new AI shift. So they kind of are feeding each other. You had these efficiencies post-pandemic because of the overhiring, especially Google did that. But now they're looking for different kinds of workforces. So I just did this, simple Google search on openings at the company, and there was actually more open roles for data scientists than there were for software engineers. So this sort of feeds the idea that they're going to need a different kind of workforce as this enormous platform shift takes place. And, you know, some of the roles like these junior engineers may not be as needed as they have been to get to this point because generative AI is just taking over everything.
Works like diamond hands, baby.
To do research, not for any
Diamonds are a girl's best friend or a boy's. They might be a boy's best friend too, right?
Thanks. Appreciate it. Coming up, shares of the plane maker Spirit Aerosystems are higher today, but down nearly 12% after the Alaska air door plug incident nearly 2 weeks ago. But Citi is bullish and sees
Shaq's seeing that
43%
cluster, isn't he?
upside from here. The analyst behind that call joins us next.
Yeah, we've got the half-hour trigger right here, the hourly trigger right here. If we back test it, could get a pretty fat squeeze. All right, so we've got Jesse. Jesse from Twitter is asking us to look at ticker symbol ANF. So we're going to take a look at that ticker here in just a moment. Give me one quick second here. See if we can look at this ticker here. Give me one quick second here. Ticker symbol ANF, which is Abercrombie and Fitch. You know they've been in the news as of late. Here, we'll just bring it up on the. No, I don't know if it's better for me to do this here or not. Let me take a look here. Look at Abercrombie and Fitch, just like non-stop, relentless. Non-stop, relentless. Let's go to a 30-minute, 1-minute chart. Just huge squeezing right now. I got to go even farther back in time. We'll look at it, though. Give me one quick second here. Down 3.47% on the day right now. Abercrombie and Fitch, why it's a good stock for momentum is this retail stock's 284% rally poised for a sales guidance boost. Trader Podcast, can you drop in the chat if you are still here? Abercrombie and Fitch's 300% surge in 2023 beats even sizzling hot NVDA. Trading 95 cents right now, coming into the next level of resistance here.
Welcome back to the
So a
exchange.
bunch of news out there. Maybe Trader Podcast can give us some idea.
Are up more than 3% after getting a vote of confidence from India's Akasa Air, ordering 150 Boeing 737.
Trader Podcast saying 27% call volume expiring, 18% put volume expiring. Call wall is 100, put wall is 80 on ANF. So let's take a quick look at that one. This is a nice place for you to take the money. Listen to me closely here. Somewhere up in here, not a bad place to take the money. Respect, I should more than less say, like respect, like you see a roll down here, something like that. Don't be like, oh, what is it? Pikachu? Don't be like surprise Pikachu face here. If you want to take some money off, I don't blame you. If you want to jump in a second time. I've got 1 date, so they're not quite going to get as damaged as a 0 date. If you're trading on 0 dates here, you know it's directional only. We're going to take a quick look here at ANF, okay? So let's take a look at ANF. We're going to go to a daily. We're going to start on the daily. Look at that blood there. Okay, so we know we've got a call wall at 100, right? We've got a call wall sitting here at 100. Whoop. We got a hard fuck you no. We got a put wall. No, not a hard fuck you no. I'm going to talk to you about what's above here. There's going to be a red bar above this. We have a call wall here. We have a put wall down at 80. So we're going to do a baseline right here. This is the market currently for hey, when's that expiry on do you mind, can somebody out there tell me their next expiry? I'll look at it right now. Hold on. Let me put my my ugly face up here. What do we got going on here? January 19th. Anybody know right there? And then we've got January 26th. Next expiry right there. And let's take a look at let's see what we're really looking at here, okay? The first thing we're going to take a peek here is velocity. We're just going to we're going to get rid of my camera again, okay? So I'm not interrupting. And we want to see a few things here, okay? Just looking on the history here of Abercrombie and Fitch. What can we deduce here? Huge down daily velocity, huge weekly, huge monthly. And then a giant run, right? Woo! We got some more of that down here, don't we? Not so much down here and kind of flattish down here. But even I don't know if that's a bigger move at this point. I guess I could measure it and see if it's a larger move or not. But we've got what's really relevant, that looks like it's really relevant here, is this weekly, daily velo. But weekly velocity seems to be a driver. If I were to look at how does this ticker trade? It looks to me like weekly velocity is a big one for moves for Abercrombie and Fitch. Anytime you're down here, you're buying a dip, right? From there, you can have an extension to the upside, right? Maybe not here, maybe not so much here, maybe not here, but a little bit more here. And you're probably looking for some of these previous pivots for targets, right? So where it stands right now, let's look back over here. And we're peaking out here. We're really overextended on weekly velo. And we're really overextended on quarterly velo and monthly velo. That's kind of concerning. Now, even though this is concerning on a daily basis, you still do not short. They say, like, don't short a dull market, but you never, ever short anything that's on trend, right? Something that's blasting off like this is. Now, we do have the call wall above at $100. We also have a bunch of calls expiring, right? Not a ton, but some. So it wouldn't be out of the realm of possibility to see some kind of a pullback or even some kind of a VWAP check down here at $66. You are going to expect, though, the dip to be bought at $89.97. Although you got like PT1 would be $89.97, PT2 would be $80. PT3 is $66.07. Now, we do have some examples of down days, and it reverses, right? Trying to short that, not working, right? Trying to short that, not working, right? So how do we find out when to short this stock, if that's what you're asking, or if we're going higher or whatever? We're going to look at a different time frame. We're going to look at a 30-minute time frame, and this is the one that I like to take swing trades on. Now, we have a series that we have declining velocity on the daily velocity. That looks good. I like that. I do like that to short this stock. But what are we looking for to short this ticker or continue on trend in this ticker, okay? So we're going to get down to a more granular level here. We're going to go down to a 1 minute. basis. Why? We want to go on the 1 minute basis because it's not good enough to just have price blast down, is it? You bounce up here and you're fucked if you're trying to short. So what I would say to you would be two things. You're looking for a cross of the half hour over the 1 hour trigger. We got that. Have we had a confirmation yet, though? Have we had a confirmation yet, though, on doom and gloom on this ticker? No. And what does that look like? We've always said up or down, if we blast through the hourly trigger for a trend reversal, you still want that confirmation for a true trend reversal. Okay? We haven't had that yet. So if you're trying to short Abercrombie and Fitch, I would prefer to see price come back up and reject 98.40. And right now we're just back to our previous low down here, right? We got a new low here. That's a good sign for bears. And your next, if you don't want to know where your next stop is, it's right here. That's your next stop right there. And I would personally, because we tagged this previous low, I'd personally like to see this ticker, if you wanted to short it, right there. That's the better short right there, to me at least, because it's a real trend reversal. And that would target $90, somewhere down there. So for me at least, for trend reversal, I'm looking for a rejection to move down. As of right now, this stock is still bullish and is not shortable in my viewpoint until this happens. So my thesis number one at this point, even though we're at the top up here at the call wall of 100, would be until we get that rejection trade, it's to the downside. Otherwise, I would expect pinning action into the 26th up here. It's like pinning action on that 100, and then you'd get the reversal to the downside over here. Now, if you can get above this call wall here, what are we targeting? If you can get above this call wall, what are we targeting? Let's take a look and see if there's more upside potential here. Let's look back in time. Let's go to a daily basis here. See if we can find a daily basis here. Can we find a daily basis here? Where's price? We're already above these two previous highs. Let's take a look back in time. We got anything back here? I don't think I see shit back here. How long has Abercrombie and Fitch been in business? Yeah, we've already beaten that up here. We've already got a new high here. I already have the new high. No prior highs to base this on here. So let's take a look back on the 30-minute. If that's the case, and there's no confirmation of a roll, this looks kind of wonky now, doesn't it? Something like that. And I shouldn't say this either, right? Yeah, there's our first target right there. You already hit this target right here. You already snagged that one, right? There it goes right there. You already targeted that one. You got one more down here. And you got this one right here. Right there. Now, if you can get above this $100, because you've got no history, your next targets to the upside, of course, are going to be at round numbers. But the big boy up here would be 104, 105, 110. Your first one right here. That's your next level right there, your next big one. Only if you're able to reverse and hold above 100 would I then take, oh, wait a minute. So your first target should be above this prior high right here, right? And then I'd want to come back and confirm 98.21, and then I'd be looking for it's not going to go in the straight line, but it's probably going to go over here towards the, where is it, 26th? Where's the 26th? Right over there. Something like that, okay? So if you're a bull and you want to buy Abercrombie & Fitch, you first want to see beat the previous high right here and then confirm the trade at $99, $98. I'm assuming it's going to be about 100 at that point. And then you'd be targeting 110 as your next step. Now, if you're trying to short this shit down, you still need the confirmation trade, a rejection on $98. You'd be targeting 93 and then $90 here. That's what I got for you in A&F. Get back to the SPY crap again. Main screen. Let's see what's happening here. Oh, yeah, what's happening over here? What do we got going on over here? There's our 2, there's our 1. Should I take this here or no? Oh, shit. Trading $1.02 right now. I wonder if I should take this and run. I think I should take it and then come back in again. What do you guys think? Pretty good fucking trade, dude. Thanks, Trader Podcast saying max call game at 105. Thanks for that heads up, Trader Podcast. Stay in, but reduce exposure. It's that little arrow right there that I want to take it off right here. I want that little tiny last little bit right there. Want that last little tiny bit right there if I can. Trading $1.03 right now. I got the sell lined up. Now. Trader Podcast saying outside of today, puts are net sold in the market. I was just kidding, bro.
So just keep in mind, President Biden currently discussing his economic plan. The live video for that's on the feed if anyone is interested. Also just seeing now, the US Senate stopgap bill to avert a government shutdown secures enough votes to pass. Voting does continue.
Oh, yeah, Daggy. Trading $1.11 right now on 60-cent. Friday calls on Spoos.
Protect your trades from macro.
Well, SPY, but still Spoos.
Now only $99
Reach for the stars. Wonder where you are. And I'm wondering where you are. Man, I want to take this shit off right now. Like, are you're taking some money? I might take some here. Hold on. I'm taking some off. I got a sell order in. Let everybody know in public. They're gonna get mad at me. Got him out. Oh, yeah, baby. Reaching for the sky. This is so stupid right now. Congratulations, spaceman. Follow this guy. Has got 9 followers. He took the trade too. Fucking A, man. I should have went fucking the whole goddamn account. Jesus. Fuck. Following that guy. I'm following a bunch of people right now. Make sure I got to follow these people on FinTwit. Swing trader. I'm late to the party. Is this the long Tesla support group? Did I find the wrong room? Fuck no. We like the Tesla gang. We're Tesla gang supporters, swing trader. Oh, man. Look at that. Woof. Woof. What do we got to the upside up here? We're above the gamma flip. What do we do? We confirmed the gamma flip, and we confirmed the fucking so stupid. What's the next target up here? Oh yeah, baby. What's the next target up there? Oh, fucking A. Jesus Christ. All right, I gotta. Oh, man, dude. You might want to take a little bit here. Trust me. Take a little bit off right here. Trust me. Take a little bit off here. We can jump back in again. We can jump in for next party level up here. It's just a video game. I'm sorry. Yeah, you should. I mean, we could go straight up here, but most times you'll see a some kind of a, you got a little bit of a tip your wick and then a boom and then straight up there. But we could go straight up too. So if you're like just diamond hand long, like Trader Podcast saying, just stay long here. So if you do that, have at it. I'm flat right. I'm fully flat right now. I'm finally out. I'm done. I'm fucking done. I'm happy. It was a good day. Very happy man. Dude, Legend, what's going on, brother? I love you guys too. I'm so happy right now. I'm fucking almost in tears there. It's fucking beautiful. I love you too, Spaceman. This is a gangster fucking trade right here. It's fucking beautiful. Yeah, no brakes, right? All gas, no brakes. All fucking gas, no brakes. Jesus. Mike Hunt just said on Twitter, he said, look at that 1 hour move. When's the last time we had a down move with 0 retraces? 30-point move with a May of 2 points. 30-point ramp max retrace during the move was 2 points. I mean, what the fuck? That's how we used to drop. Now we only rally like that. That was Mike Hunt right there. Oh, man, my phone's blowing up right now. Are you guys going back in for another whack at this? You guys are savages. Oh shit. Alpine, you want some what's up, front row? You want some Tesla news? You want to do some Tesla? This is like third or fourth person wants to talk Tesla, right? Let's do Tesla. You guys ready to do some Tesla? Let's do some Tesla here. Let's talk Tesla. You guys want to do some Tesla? All right, give me a quick second here. Let's do some. Let's talk Tesla. We're gonna ramp right now. Watch this fucking ramp. We're gonna moon this shit right now. We're gonna fucking rip faces. Look at that shit. Just wants to fuck around and find out, doesn't it? Look at it. Let's do Tesla. Tesla, man. Jesus. Let's go. Let's flip over to Tesla really quick. Help out the boys and girls on Tesla. What's that right there? Almost hit it, right? Almost tagged it, right? 30-minute chart right there. Now, this is pretty crazy here, right? Now, I'm going to say something here, okay? I want to show you this. So see this like draw thing out here and that thing up there? Why do I have that there? Because as we come down here, I'm going to be looking for two important things, okay? Or a couple important things here. So if you are a Tesla trader, Tesla investor, any of that kind of stuff, we're going to talk about Tesla really quick, okay? Boy, how many fucking people out there on fucking FinTwit like to drop so much shit about fucking Tesla that has nothing to do with the fucking price of Tesla. Right? You got to follow this guy out there. He knows everything about Tesla. Now, this little thing right here, what does this have to do with? It has to do with this cross right here. In this red box, this red box and yellow box. Why? Is the important question. Even though we break down below the monthly trigger. Now, this is the monthly trigger right here, okay? That thing right there. Okay? When price is below the monthly trigger, ready for this? Tesla is in its own bear market. But it must be confirmed. Must be confirmed. It's not good enough how deep you go. It's what happens afterwards. So if you're a Tesla bro, Tesla bra, Tesla them, Tesla they, whatever you are, you still have, the door has not been shut on you. I'll say that. The door has not been shut on you. To shut the door on you, there has to be a retest above when that cross happens. And we're close to that cross happening, aren't we? See it right there? It's almost happening. And that cross is double fold. The daily crossing the weekly is important. And then the daily and weekly crossing the monthly is even more important. You can get some violence to the downside on those crosses. This is lining up to be a 6 trigger bear cross forming right now. This is very scary for a Tesla bull. But still, you should still see an attempt as that cross happens in a rejection or a beat of it and escape the bear market. I'll make that point on FinTwit today, by the way, that now that we're getting close, I will make that point for you on FinTwit. I'll make a post about this today. Now, you should see some kind of a squeeze, violent squeeze as this forms. It won't just blast down to the depths of hell. Sometimes it does, but it's very rare. You still want that, hey, are you sure that we have more sellers, and I mean massive sellers, than you have buyers here? Okay, because we're at that last known support here, right? So it should be a pretty big move to the upside and down. So pay attention to that on Tesla, okay? Pay attention to Tesla that we could get a squeeze, but that squeeze is looking for a confirmation of a bear market on Tesla. Okay, so I want you to be aware of that. And where does that if that squeeze rejects, that squeeze is going to lead to distribution and then a massive downside move. Now, we can escape that squeeze if we squeeze up here and we find out that, you know, the mysterious hand of the stock market is stepping in here. Right, the fat old white guy hand. Fat old guys. Fat old white men from Wall Street. Fat old Wall Streeters. Right? If they do step in and we do reverse to the upside, you'll be able to cleanly take a trade as a bull again up here. So note that you have a major squeeze coming, and you're going to find out if you're back on track to staying out of a bear market, or you're going to confirm a bear market for Tesla. So that's pretty big. So if you're a Tesla bro, expect some kind of a squeeze. Should I write this on Twitter maybe? Let me write this on, I'll put this on Twitter right now, because we're there. I want you, well, we're not quite there, but we're almost there. If you look at daily velocity here, we're almost there. Not quite. Watch down here. Watch my cursor down here. Watch this little thing down here. We're almost at the local bottom for Tesla. So that's why I have this little bit down here, right, to get that last little bit of daily velocity, and then some kind of a squeeze. So you're close. So I'm going to write that in. I'm going to write that out there today, okay? 197. Let me write this right now for Tesla on FinTwit. Do a write-up for you. Tesla. Almost at bottom of daily velo. Expect a squeeze soon. To 230. Or resolve, and you can what's my downside PT? Whoa. You guys are not going to like that downside PT. You guys ready for it? $86.
So noting the S&P 500 extending gains now, up around 0.75%. So analysts note that a rally in some of the world's largest tech companies are fueling a rebound in stocks now, with traders also weighing the latest economic data and Fed speak for clues about the US central bank's next steps. So after a back-to-back slide, the S&P 500 seems to be bouncing back as volatility in the bond market has abated. Mega caps outperformed as Apple climbed on an analyst upgrade. Chip makers gained as Taiwan Semiconductor's outlook spurred hopes for a global tech recovery. Equities briefly lost steam as Tesla fell, and Humana's disappointing forecasts weighed on health insurance companies. But again, just seeing the S&P extending gains further now, 0.75% in the green. So away from this, just seeing the NYMEX natural gas settlement prices for the day then. So NYMEX natural gas February futures, they're settling at $2.70. Also seeing diesel February futures at $2.69. The gasoline February futures settle $2.18. And finally, WTI crude February futures at $74.08 a barrel.
Squeezing, dude. Squeezing right now. Look at that. They just checked the 1 minute trigger right here. Boom. Straight up. 1 minute check, 1 minute back check, and that was off and running. You see that right there? Huge.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Seeing some data out of Lipper, who say that US investment grade funds see $227.3 million of inflow.
Yeah, we got Biden speaking, bullishness on Biden speaking. Talked about, someone brought that up in stream earlier. Upside target on Qs. Woof. 417. Hold on. My God. Spoo's upside target, if it squeezes, it's off the fucking charts. Like 418, 420, 418 maybe. I don't know. I don't think we get there, but that's that. Or maybe. Oh, hold on. I got that wrong. Hold on. Whoa. I'm going a little. 416.33, something like that. If that happens, but oof. When is Biden on? Should we put him on right now? Should we have him on the background and see if he tries to? Someone was saying in stream, or is it a Trader Podcast saying in stream that he's been getting beaten up the past couple weeks, Iowa caucuses, and so he's probably going to try to come out swinging.
Some more data out of Lipper as US high yield funds see $1 billion of inflow in the week. And also now officially as the US Senate passes the stopgap spending bill, sending the House for final passage.
Y'all
The US
done
Senate
pissed off
passing
Joe
the stopgap
Biden
funding
bears.
bill, sending it to the House now for final passage.
Look at that right now, man. Woof. Pain trade is on. Joe Donut, if you're out there, close your fucking call spreads. I had Joe Donut ask me earlier on a chat. He goes, I didn't close all my call spreads. What should I do? Or not, what should I do? He's like, are we ever going back? Or I don't even know what was that. It was just, I haven't closed all my call spreads. I'm like, don't worry, we're going back up there. I got to call him right now, or I got to tell him. He said, I love you, Cap. He texted, close your fucking spreads. Dude, I love you, Bork. Let's take a look at Bookmap, see where those sellers are. I see that. Sorry, you just said. Let's take a look. Closer look. What do we got here?
So seeing reports as well that the House is set to vote later today ahead of a weekend deadline for the stopgap funding bill to avert a government shutdown.
Yeah, I've got like topping right here. I've got topping somewhere in here. There's an STX cell above here. Let's take a look and see. Heads up. If you're out there right now, okay, heads up right now. You see this right here? We're hitting that gamma wall right now. See that upside target right here? Now, if we do break above, your next target is 4,800. So that's going to be your STX cell on the main screen here. So this would be your STX cell or RTX cell or whatever. Somewhere in there. Somewhere. It's probably lower than this. 47.73. So $2 lower. $2 and change lower. Probably right here. That's your next target. Somewhere in there, right there. I got Miro. Miro's chiming in saying next target above is 48 or 480 on SPX. 480 on SPX. Miro chiming in. Hold on. Maybe we can get Miro on here. We're forming a base right now. Do you see that base we're forming? Let's see if we can get Miro in here on. He'll jump in on YouTube. Miro is a pro if you don't know already. You guys don't know it. See if we can get. I asked Miro if he'd come on and say hello. Maybe we can get him on the stream here to say hi. Look at him trying to form another fucking base here. Yeah, he's saying go long here to 480. He's saying we can go up. We can keep going up here. We'll see if that's real or not. Maybe he's just shit posting on Twitter. We got Binky saying look for some grinding here. 2:42 in the afternoon. Oh, wait a minute. I think he might have given it a heads up. He might be here. We might have Miro here. I want to know from Miro is the last 45 minutes of the day, last 20 minutes of the day. He can usually give a dude like Miro's a badass. Like he'll be like take your or like go long here. Not well. He won't say exactly, but it'll be like we're about to take the hedge off, and I'm like sweet. Here we go. Here we fucking go. Kang says breaking news, Houthis are now training a blue whale to attack and sink U.S. warships. Beware of Houthi and the blowfish. I dig that. That was a good one. I thought that was a funny one.
Seeing now Brent crude futures settling at $79.10 a barrel, which is up $1.22 or 1.57% on the session.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
I got Dre on the moon is saying a lot of volume just came in on SPX 4760p. Not sure if buys or sells. This heads up to you guys out there. Yeah, it's a good point. AG traders saying cheap puts for tomorrow. I am looking for. I will say something to you. I want to say something to you guys out there. Okay, this is important. I am looking for an entry on puts somewhere up here, not too far from where we are, like anywhere from here to 480, 478, 475. Not a bad idea to take a put spread up here. This is like the start. I got to write that out. I got to put that on FinTwit. So I guess my point here is this. Anywhere from here to about 478, somewhere up in here. Somewhere up in here, right? Anywhere from, like, you just start thinking about it. Anywhere from up in here to here, be looking for some kind of a put spread for end of January. Just be aware of that, okay? Doesn't mean you have to take it now, but start thinking about it, okay? And what we're going to do here on the stream is we're going to bring up a trade. We're going to bring up that trade right now. So let's look at what should I bring up here? Let's take a look at we'll bring up this Weeble. And just down here, let's take a look at Weeble. There's a 30-minute chart on Weeble. I got the 30th over here. Here's January 30th. Right? So let's look at it from this perspective here. Let's go over to this here. Weeble chart, trigger screen. That's the right one. Okay, so just over here. I'm not anti a big giant squeeze here. This is something else. Not anti a big giant squeeze here. But somewhere in here, here's a 479. Here's 481. Okay, so anywhere from where we are right. Hold on a second here. Right where this yellow line is right here, right? Anywhere in here. Anywhere in this zone. I want to take some kind of a trade into the 30th down here. Now, you've got vol signals saying he's really fearful of the risk to the downside, right? And I am too. I understand that risk. Where does that risk lie? That risk lies underneath the gamma flip right here. Now, currently, we are above the gamma flip, aren't we? So, for me, I'm not going to put that much risk on. I'm not going to take like a put spread and have it dated for down here. So I got to do it a little bit more in the money. Does that make sense? So you got 480 here, and you've got the gamma flip down here, right? That was at 472, 470. I think that makes for a pretty decent trade. So like a 480, 470 has a much higher probability of printing, right? Has a much higher probability of printing something like this here, even if my thesis is that we go down here, or even if vol signals is saying this possible that. And you've got Trader Podcast saying don't expect any of this, right? That he doesn't think any of the dip is going to be anything like that. So just in here, we're kind of following that right now, right? See that? We're like following that whole thing right there, right? So somewhere in here, trying to capture this right here, right? 470 even seems a little out the wall right there. So 474. So let's take a look at a 474, 480, 474 put spread, and we'll take a look at it. And what can we do here? What can we do here? We can do. We can trade the market up as it goes up. We can also put some kind of a way to make a trade here to make some money, or we do like 480 to 470 or 460, and we'll find out where it prints. So give me a second here, and I will bring up. Let me see if I can bring something up here so we can look for a trade. In a quick second here. See if we can find a trade together. Can we do this? Can I go to the old way they did this on this site? Okay. So you see this previous high back here, right? That's 477, 478. We got 480 up here. Expected moves coming up for SPOOs. This looks pretty bullish right here, right? This looks pretty fucking bullish right here. And I'm not going to look as low as 470, maybe 472. So let's look at bearish, and we're going to do a put spread. And expiry, I'm going to look for January 30th. And 480. There's 480 right there, right? And then for where am I in the green? There's 470. Watch over here what it costs when I get paid here, okay? So what do we got here? You're in the money, 480 maybe? That's actually not so bad right there either. 485. What about a 470? That's not too bad of a trade right there, is it? Costs 788, pays 712. It's not great, not bad. Now I would have to be by the 30th. Even if we squeeze up here, I just need, if we're up here like this, right? Even if we squeeze up here, all I need to do is be down here to be in the money. You see it? At minimum, I'll try take that money. Anything down here, I'll be 100%, right? All right. Actually, below here, I'll be 100%. But let's take a look and see. Something like that. You see that? Now, am I going to buy this trade right now or purchase this trade right now? More than likely not. What I'm going to do is wait for price to get up here. I want price to be somewhere around this area right here, like 480 to place this trade. So when we get up to a 480 up here, or if we do get to 480, I'm going to be looking to place this trade and have a bottom of 470. So 485, 470, somewhere in there. Not place the trade until we get a rejection and a confirmation to the upside. So we'll just go back to the main screen right here and see where this yellow box is and this red box is. This is 478. So anywhere up in here, if I can start to think about, or an SPX if we're at 4,800, start placing a 485, 470. So 485. Here, I'm gonna put this on FinTwit. For 4,800 on SPX to place a put spread for, what is it, plus 45? Damn it. Do I have that right? I think, tell me if I got this wrong. Is it, let me do this again. Hold on, give me one quick second. It's plus 45. Long put. $70. Dated for 130. Let's take a look one more time at yeah, somewhere in there. All right, so I made that public.
Chips were the new railroad. I don't know. We have to figure out exactly.
PayPal's out there making an announcement. Did we get a reaction on that with PayPal or no?
Do you think that
Bizarre. What's PayPal doing right now?
Start to the year. Does it make sense to you? Are you bracing for anything worse? And do you agree that the bond market itself is in a zone where stocks can still be okay?
Yeah, well, I think it makes sense that we're in a little bit of a risk-off phase here with the markets. Obviously, you guys have talked about
risk-off in markets
at the end of the year, but look, we're repricing.
We're risk-off in markets. Okay.
This at the end of last year, Mike, about how 6 cuts was way too optimistic.
Oh, fuck. Here we go.
Get priced out. That's why I think you're seeing some of the elevation in the yields, and so I think it's okay for yields.
We're risk-off in the markets. Okay.
The market becomes more aligned with what the Fed expectations
Holy
are.
shit.
But you've also got financial conditions index. Look, Goldman Sachs.
She's getting blown the fuck out right now, isn't she?
Move in that index. You've got geopolitical issues going on.
Fucking
repricing earnings.
We're risk off right now. We're short the fuck out of the market. We're getting squeezed currently as I'm on CNBC right now.
12% growth expectation is too high. We need to bring that down. And we've seen it come down a little bit and set a little bit of a low bar here. But I also think it's important, Mike, to note that I think buyers
We're
are
fucking risk off right here. We're fucking max short.
In money markets that is sticky right now. You're earning 5.30, 5.40% on these holdings.
We're getting squeezed right now. I'm on CNBC right now trying to push my own.
Holding back a little bit. Plus, you've got a blackout on buybacks. That expires in a few weeks. Maybe that'll be a little bit of a tailwind to the
I
market.
want you to know that I'm getting squeezed right now, and they gave me a spot on CNBC so that I can tell you guys. Please stop squeezing me.
Overall uptrend, you're looking for around 50% of the names in order in the S&P to hit 20-day lows. Right now, we're about 36, 37% of the names. So people may be waiting for a little bit more of a pullback on this revaluation that we're having in the market. And then we'll see some maybe positive momentum.
Yeah, I mean, for sure, the indexes outside the S&P, you've already seen a little bit of some of those oversold conditions, tactical potential dip buying opportunities in the Russell, things like that start to develop, but maybe not quite a real fat pitch at the moment. I do want to get into the Fed expectations and kind of the cash on the sidelines type argument just a little bit. Victoria, you said that maybe 6 rate cuts, which is on a given day what's priced into the Fed funds futures curve, is a little optimistic. I would say that's probably pessimistic based on what the economy might have to do to get us there. I also can't find an actual living, breathing human being who is saying, yep, I fully expect 6 rate cuts. So it seems to be a little bit of an exercise in a what if might happen down the road at the end of the year that might cause the Fed to have to really open up the easing gates as opposed to people investing today's dollar based on that assumption.
Yeah, part of the problem here, obviously the markets were priced to perfection, right? And they had those 6 expectations, and they're based on the dot plot that we had previously. And they got, look, the market got ahead of itself. So I think it's repricing that. But where I think some of the misunderstanding is, the Fed, in my opinion, is not afraid that they're not restrictive enough at this level. I think they believe they are in restrictive territory. They have said that. I think what the Fed is afraid of is reigniting inflation when you've got potential supply chain issues that are going on because of what we're seeing in the Red Sea and the extra cost that is costing companies for that. Because the consumer remains resilient, we saw retail sales, the demand is still there. You've got a labor market that is supportive of that consumer, even though we're seeing more.
She did eat the whole gummy.
It's still pretty supportive. We saw the weekly jobless claims number today below 200,000. So I think the Fed's fear is that there could be a reigniting of inflation, so they want to take it very slow. Bostic said, look, maybe third quarter of this year. I'm thinking probably at the June meeting where you get a new dot plot, perhaps that's when they start easing a little bit. But that's where the Fed lies right now, and I think the market is making its way to kind of meet the Fed in the middle on this.
Yeah, we see what some of what Bostic had to say today. Of course, Atlanta Fed President Raphael Bostic speaking. He says third quarter is his working assumption, but he pulled it forward from the fourth quarter. He's also essentially saying, look, let's not lock ourselves into a certain path right now, right? So we have to essentially preserve a little bit of flexibility and see what comes. But it seems like they're pretty confident that inflation's going to
I love you too, Darth Wally.
This is
I'm struggling for the right words to describe how I feel about this conversation.
You'll find them.
I do find them. I have found them, and now
I gave you 4 minutes to come up with the right words. Let's go.
That was a long time. So listen, this idea, I couldn't agree more with what you said, that there is no living human being who thinks they're going to cut 6 times.
on the session.
The market, there's binomial outcomes that get priced into the Fed Funds futures market, which itself is illiquid, and you shouldn't really draw too much information from it. But no one thinks they're going to cut 6 times. And this idea that Fed members keep coming out and telling us
Oh
that
my
they're gonna cut 6
God.
times as if that's new information. I completely reject that. There's no human being actively trading who thinks they're going to cut 6 times. I disagree with a whole portion of what Victoria just said, not because it's wrong per se, but for other reasons. But I will take issue with one specific thing, and that's this idea that there's quote-unquote cash on the sidelines. Like, first of all, there's no cash on the sidelines. It's always in something. I think we would all acknowledge that. But more importantly, the amount of money in money markets went straight up the entire time the market went straight up. There was no limit, there was no governor on equity market appreciation because more money was going into the market. And the idea that somehow that money coming out of mutual funds will somehow reignite the market to a degree that we haven't already seen, I would take issue with that as well.
Yeah, no, fair enough. But I mean, clearly, there is a sense in which you need to have confidence that the economy is going to hang in there and earnings are going to come through, whether that means people take money out of their money market funds or not, whether it means they just remain invested in stocks and ride it or allow their equity allocations to go higher, Joe. So I think the question really is, whatever the Fed might do and whatever it might do it, can we take heart in the unemployment claims below 200,000 today? Maybe it's a fluke on weather. The retail sales reported yesterday, B of A saying, actually, maybe it was overstated by seasonal factors. To me, the concern would be if you think all of this really encouraging data is a complete head fake, and we're actually decelerating faster, and the Fed's not going to be there to catch us.
Well, if that is the case, then it's very clear to me that in terms
When's Assface coming in? He's coming in. I don't know. I have to DM him and try to get him on. I got to set him up, make sure we know what we're talking about on the stream, stuff like that, so that I don't want to surprise anybody on the stream. So I got to set it up. I'm going to talk to Binky and see if we can line up getting him on the stream, and then do like a pre-interview with him, so he's prepared to talk and stuff like that. I hate bringing people on the stream.
in mega caps and semiconductors,
Hold on here.
and in other areas of the S&P sectors as well. You can find.
So like back in the day, I tried to bring people on the stream, and they either felt uncomfortable, or we didn't have a plan. So it's always good, if possible, to have some kind of a it's not a script, but like, hey, we want to ask you these questions. Are you comfortable or want to answer those things? Do you want to do research, that kind of stuff? So I'm not like Johnny on the spot, like, hey, come off the top of your fucking head and give me some answers here. It's not cool to do that to people. Dude, when I first started streaming, it was brutal. Like, because I gotta prepare every day to stream, and at least have an awareness of what is there, so that if you ask a question, I have to kind of be prepared. So I've tried to do that with the guests on the stream, unless they don't ask to, or they want us to talk about talk about specific things, and just let them have full reign and do whatever they want. I will. Hold on, I'll ask him. I will ask him. So I don't like setting people up. It's not cool. And I think that a lot of people are afraid to be interviewed because of that. They don't realize that, or like I think it's a natural thing. Like, hey, somebody asked me to do this show. I'm not going on there. I could look like a fucking fool, right? I don't want to look like a fucking fool in front of anybody. They might not be aware that you always do it's not a screening per se, like you can or can't be on the show, but it's like a pre-screening, though, when you like meet with people and you say, okay, what do you want to talk about? And we write down a bunch of bullet points, and then we come on the show, we do a discussion, and they're prepared, and they won't get any whammies from me. I'm not here to shit on anybody or have them fail. I want them to look like a fucking superstar when they're here, always. They're taking time out of their day to be on a show with, a large audience. And so I want to make sure that they feel comfortable through the entire thing. I wrote that down, Bull for Trading. That would be crazy. Be on the Joe Rogan. I don't know if I could. I'd probably freak out. You ready? 475 traded 60 cents, and now it's trading $2.10 for almost, was it 300% trade, 400% trade, somewhere in there. Just fucking cranking right now. Fucking cranking right now. Absolutely cranking right now. Who gets too much hate? Assface does. Dude, I'll tell you what, dude. I'm gonna tell you guys again. I'm gonna make this short and sweet. If you see people shitting on people on FinTwit, the person that's doing the shitting on, at least go and find out if they add anything to the community, either in posts or responses. Now, if they do, and they're giving some critique or whatever, they don't like somebody, I usually leave those people alone. Like, but if they have like a history of adding any kind of benefit to FinTwit, I will leave that. I won't block them or mute them or anything like that. Now, if they don't, if I find somebody shitting on anybody on FinTwit and I go into their post history or even just response history, and they're just constantly shitting on people, or it's constantly after the fact shitting on people, or like what? So I blocked somebody yesterday. Now, he didn't say anything to me, but he was in my feed a lot, and I was following him. So I scrolled over his name, and I noticed that he had unfollowed me. So I clicked on his profile. He had low follows. I clicked on his profile, and his post history was all after the fact negative. Anything that went wrong, he commented on it or made a post about it after the fact. He had nothing before the fact. And then in his response history, he was just shitting on people all over FinTwit. Everywhere. It didn't matter who it was. It was like unabashed, like, fuck you, fuck you, fuck you, fuck you. So I blocked that guy. That guy lends zero value to FinTwit. So if you ever see that, even if you disagree with somebody, you can be like, you can either don't talk to him or do whatever you want to do. But if you see people doing that in FinTwit, I tend to block them or defend that person on FinTwit. But what else? There's a flip side to this, though, too. There's a flip side to this. There are some people that will shit on you, and they actually bring you follows. So if you get like somebody with like 1,000 followers or 5,000 followers or 10,000 followers or 20,000 followers, 100,000 followers, and they shit on you, don't block them. They actually bring you followers. So you want those people to be like, fuck yeah, shit on me. Take a big giant shit on top of me. Then repost it on your stream, on your feed. Be like, yeah, this motherfucker hates me. And they will actually bring you followers that want to hate on you. So you'll get good followers. No, they don't. CNBC wants nothing to do with me. I don't think they like me. They might like, there's a couple people there that I follow and they follow me back, but I don't think they like a guy like me. I'm like the guy that they don't want to know. I don't think that'll ever happen. But if it ever did, I'd probably decline. I'll be honest. I got to think about that for a second. I'd probably decline. I'd probably decline that offer. I don't want. There's something here about to talk about too. I was thinking about this past week. I fucking hate having 20,000 followers. I think I have 20,000 or something. I fucking hate it. Like I noticed like about a month ago or something. I was like, man, everything I say means something to some extent, even if it's only a little bit. And I don't ever want to have like that. Like if you have high follows, people expect anything you say is like in stone and we're going to burn you to the ground if it's wrong. They don't know if you're shit. Like I mix a lot of shit posting with real stuff. Like my handle is built around this whole thing that like you have to like follow me down the rabbit hole. You got to like go to the Discord, go to the website, go to the fucking live stream, go to the fucking handle. Then you got to go over to the private handle, like all that shit. You got to follow all of it to really know where I'm at on stuff. And it's coming to a point now where I can't do that anymore. It kind of sucks. Like I have to start at some point. You're gonna see like watered down, like, you can't mix any of this stuff. So I'm hoping to move all the legit stuff over to trade the trigger, that handle, and then just make Captain Jim James just a shit posting handle. We have nice low follower count, 1,000 people, 2,000 people, and just like put out the straight shit right there, like straight face Captain Jim James all day long, and maybe just get kicked to the curb by the rest of FinTwit on my regular handle or something like that. Yeah, it's hard on Twitter. It's the more followers you get, the worse your experience becomes. Do you guys know that? Like, there's a real sweet spot. Like 100 followers to just about 1,000 followers is a real fucking sweet spot. It starts to degrade from there until about 10,000 followers. The moment you hit 10,000 followers, you start to really feel like, I don't like this. I don't like this. At 20,000, I noticed that I really have to start reining in who I am on that persona on FinTwit. And I've slowly been reining it in over time. And eventually it'll likely have to become something like that. You know, that kind of sucks because, there's like this view of who you like, or there's like too much of an audience with certain expectations, and they don't know the whole context of your conversation. They're not following every post you make. They're not, maybe you get reposted and then they're like, what's this fucking guy saying? They're not following you everywhere else. So there has to be more consistency. I'm not really a fan of it. I'll be honest with you. I'm not really a fan of having followers on FinTwit right now, and I'm still getting them right now. So I don't know what to do where I'm at right now with followers. The same thing goes for it goes for anything. You have like people that have high follows with comedy on the market. You don't want, like, why are you getting serious right now? All I want you to do is post funny memes, or all I want out of you is this specific thing. So you kind of, no matter what your straight face is, if it's comedy, if it's shit posting, if it's anger, if it's doom, no matter if it's full on bull-tard, right? Then they expect you to always be doing that when you start to get more followers. And if you deviate from that, you get real, like, anger thrown your way. Yeah, I agree with that too. I agree with that too, Be Harder. What up, Goliath? What up, brother? What are you saying? Yeah, switch accounts. That's what I've been people have recommended to me, to create an account. Goliath is saying to make an alt account, and I haven't done it, but I want to do an alt account and just tell some of you, like, this is my alt here. It's not, it's completely fucking separate, right? So you guys know that it's actually me, like the real me. Doom. And I'll tell you what, truth be told, right? About 50% of this audience here knew me when I had no followers. Like, none. You guys have been my friends since day one. I've been your friends since day one. I'll always trust you guys. I want you to know that too. If you're in this stream here and you knew me when I had no followers, I will always trust you guys because I knew you before, right? You guys know me before. We like each other because of who we are and stuff. I'll always value and keep those friendships close to me forever. Yeah, John. Yeah, Goliath is saying that he's on his alt account more than he is on his high follow account. Any of you guys out there have high follow accounts that you have alt accounts on, so you can just kind of be yourself? H-Bomb, I've known you since day one. Fuck you. Right on, Trading Pennies. Yeah, man. I used to Fucking Horse Lover Fat and I used to fuck around and hang out on FinTwit, dude. Right? What does that guy have now? Like 40, 50,000 followers or something stupid like that? Just like, just hanging out, fucking chilling. To be honest with you, you don't need fucking 1,000 followers. Like one of the greatest parts of FinTwit is like a small group of followers. You follow them, they follow you, and you guys just have like the conversations that you fall into inside the comments of posts. They're fucking awesome. I think they're great. Like that, you'll see like these just monster threads, these crazy inside jokes. Like, I think that's one of the best qualities of FinTwit is finding a core group of friends, and you're all shit posting with each other. Nobody's watching you. Nobody cares what you're saying in that chat. There isn't like fucking 1,000 people watching the conversation. It's like you might think out there that it's a shitty place to only have 100 followers. It's like the best place in fucking FinTwit. That's why I follow people with low follow counts, because I know that there's people with gangster shit out there, and no one's following them. So I'm like, I want to watch what the fuck they're talking about. I follow people with like sub 100 follows all the time. I love like peering in, like opening the door and be like, what are you guys doing in there? All right, so we breached. I gotta post some FinTwit. Yeah, you want to hold this right here. You want to hold this right here. There's your gamma level right here in this green box. You don't want if we break at any point below that green box right there, we will roll, okay? So this green box must hold. If you're watching that upside target and next level baby stuff down here. So you want to be able to hold this down here. You do not want to lose this level. Consolidate down right here.
Fund assets fall to $5.96 trillion on the week ended January 17th. The money market funds seeing the first week of outflows in 4 weeks.
I'm going to remove it so you don't see it. It's kind of clogging up the stream here, but you want to hold this right here. Disney investors are stinky right now. Oof.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Are we playing right now? Yeah, we're playing.
Early market on closing balance, 311 million to the buy side.
When people use screen names, it allows for a lot of freedom and intellectual exploration. Agree with that too, Goliath.
Losses, but still underperforming to start the year with the Russell 2000 down nearly 6%. Our next guest sees a bullish setup building in those charts. Jeff DeGraff is the founder.
Yeah, I used to know Mayhem for Markets when he had no follows too. I used to be really close with him. He's coming on the show too. We have to schedule him, but he wants to be on the show as well at some point. We couldn't connect over the holiday. He's on the list, Trader Podcast.
Yeah, I think we can
of people that want to come on the show.
Quarter of last year, where we had really impressive and almost unprecedented.
We used to have we used to actually have Mayhem on every morning when we first started the show. Do any guys remember that? We used to have Mayhem on once a week or something like that.
So obviously the Russell.
Well, once a week he'd stop in.
So that helps set the stage. Then we had.
Yeah, we got to talk AMC. And we got to talk GME at some point, don't we? We still haven't talked AMC and GME. GME, I haven't looked at AMC in a while, but last night I looked at GME, and dude, like GME is on the same track that Tesla is.
Very, very bullish setup. So we kind of look at this as a gift because oftentimes you'll just get a consolidation without really any type of meaningful price pullback. In this instance, we're
gonna wait at 4 p.m. I'm gonna look at AMC and GMC with you.
Rambling here. I would just
at 4 p.m.
A lot of the charts that have pulled back have not structurally damaged themselves at all. They're back to their pivot points. They actually look pretty good. So
if you're interested in looking at AMC and GME, we're gonna look at it at 4 p.m.
This critical levels that jeopardizes the trend. It all looks very orderly to us.
Right. So, I mean, essentially, big picture, you say we're playing by bull market rules based on how the market sort of proved itself to a degree last year with those momentum and breadth signals. And what does it mean for the global markets? Because I also am interested that you felt like non-U.S. Indexes maybe look a little riper for new money.
Well, they're more oversold, so you can make that case. Now you can also
squeeze it on up.
Not as strong.
Trading $2.30 right now for that squeeze higher.
What side of the ball you're on. But all things considered, when you look at the strength of the trends globally, really with the exception of the Hang Seng, which is Hong Kong, and in China, global trends are actually in very, very good shape. I mean, the Japanese chart, which I've been in this business for more than 30 years, Japanese chart hasn't looked good in 30 years since I've been in this business. Yeah. So it now looks very, very good. So I think it's easier to make a case or to at least have the foundation for a bull market domestically when we see similar patterns and similar trends globally. And I think that's a big part that, frankly, I don't think enough people are paying attention to. They talk about the U.S. market, but they don't really look outside the U.S. And in many instances, talk about European banks or European REITs. They're actually stronger than what we have here in the States, and those usually bode well for at least a good foundation. It's not just some idiosyncratic move out of the U.S. that we're trying to keep alive and fan the flames. It really is more global in nature. So there's global heat out there, and I think that's good news for the S&P.
And, obviously one of the reasons that the U.S. has managed to stand above the rest of the world is the dominance of big tech, one description or another. Has there been a reason to question whether tech and related stocks remain in a leadership position? Everyone seems to want to bet against the 493 against the Magnificent Seven. Does that make sense?
I mean, look, at some point it does, but that's kind of like saying you're one day closer to dying. I mean, you know, that's a true statement, but it doesn't really give you a lot of comfort or information. Look, the relative trends are still good. The data that we look at that gives us some indication of when we want to start fighting those trends, basically risk-adjusted type of returns, are not so excessive as to suggest that, you know, trees are growing to the sky there. So I'm a little shocked by it, frankly, but the data is the data, and still said that there's more there. I think we might get, I mean, if we want to get cute with this, I think if we go back and look at the 1995 parallel, when the Fed cut rates and really kind of engineered the last soft landing, what we had was tech actually did well up until the first rate cut, and then it kind of went by the wayside as other things started to dominate, like banks as an example. And that might be, I don't think it's the perfect playbook, but that might be a twist here, that things are very good as the eyes are on the Fed to cut rates sometime in the spring. When they do, it's very, very much anticipated, and maybe the market actually shifts leadership. We're always looking for what's the wrinkle today.
Look at
versus
NASDAQ
the
just grinding.
expectation, and that's one that we're certainly
I see on VIX on a 5-minute chart, I've got a double bear cross.
Sure. Did also want to get
I'd be
your
watching
view
out for a
on
squeeze into the
Boeing.
close. Someone was on there. So TNX is TNX is waking up. I see that. Tesla waking up here.
Been overdone to the downside in the short term. Where does it head from here?
Well, the first thing we do is we start with the.
You think Tesla's going to turn here? I see that bounce on Tesla in the middle of the afternoon.
Still relatively strong. It's one of the better groups within industrials. So birds of a feather tend to flock together. Forget the pun about it being an aerospace name, but those charts generally are good charts. So we like to look for opportunities within good industry groups. The big, huge base really in Boeing, kind of coming back from the MAX 737 problems that they had, obviously was a nice breakout. It looks great. It's in an uptrend. And what we really try to do is find names that are oversold in uptrends. We call those optimal entries for our clients, and we alert them to those. We started getting some of those signals back last week, but what we really look for is that hook, some type of momentum to say that the downside is being recognized and probably flushed out. And I think today is actually a very good example of that. So optimal entry for us in Boeing. It held support, which is essentially 180, and we think it's going to resume the trend to the upside.
Jeff, great to catch up with you. Thanks so much.
Thank you. See you later.
All right, up next, we're tracking the biggest movers as we head into the close. Kate Rooney standing by with those. Kate.
Hey, Mike. Yeah, so a pair of calls from Morgan Stanley sending two stocks to charge in opposite directions into the close. We're going to tell you which stock is jumping 8% and which beaten down name is at a 4-year low. That's all when we come right back.
$337 right now.
Early market and closing balance still sitting at 311 million to the buy side.
Oh, here comes
Take
that
your
fucking
trades
ramp.
from Macro Headline Risk with Financial Juice Pro. Now only $99 a year for our real-time service.
We're
So some
bouncing,
reports of the US
retesting
plans to
the
push
gamma
more
support
banks
down
use
below
the
on
Fed's
SPX right
discount
now.
window. So the OCC, Fed, and FDIC
Keep your eye on
are
this right
working
here.
on
Keep your eye
discount
right here,
window
okay?
proposals.
S&P up about 0.75%.
Right here. This is the 4775 level right here.
Hertz. We're going to start with Hertz shares. They're jumping after analysts at Morgan Stanley upgraded the stock to overweight. The investment firm cheering on the rental car company's decision to sell about 20,000 electric vehicles from its fleet and says that should help boost the stock. And then you got Plug Power. It's down after the fuel cell company announced new financing plans. It does plan to raise more than $1 billion by selling new shares, and that new round of financing would dilute existing shareholders and would represent a massive part of the company's existing $1.5 billion market cap. Mike, back over to you.
All right, Chris Rooney, thank you. Talk to you soon, Kate. Still ahead, your regional bank rundown. Several reporting earlier with more on deck tomorrow morning. We'll hear from a top analyst with all the key themes and metrics.
Reading into this then, as US regulators are preparing to introduce a plan to require banks to tap into the Fed's discount window at least once a year in order to reduce stigma and ensure lenders are ready for troubled times.
Congratulations, Joey Donut. Joey Donut sold half of 479C for tomorrow with 82% profit. Hells yeah, brother. Money is money, my man. Congratulations, Joe. I know. You're trading safe with Cappy, Joe. We buy the actual bottom and let the weirdos get trapped in the tops. Joshua L., I see that. Nice, Josh. We do the creepy crawl up the wall here. Is that what you guys are thinking? I mean, I want to show you guys this here. On Weeble here, okay? On this level down here. This is not looking good for bears here. We've got the upside target. We hit that, but then above we've got the
looking again now to the
next
early
level
March
buy.
closing
And I'll tell
balance.
you
It's
what,
still
when you
sitting
see
at
shit like this down
311
here,
million to the buy side.
when you see like some confident like that, and if you break this previous high, you know what that means, right? Woof. Straight the fuck up, or at least in cash market. After cash market, they're probably sell futures, but just be aware of this bounce here. Pretty fucking bullish, so we'll see if they can break it. What you want to see is this green bar. You want to see it just slightly higher, like right above right here. Come back down and then boom to the upside. We'll watch this and see if it actually happens or not. Be aware that momentum will leave the markets after the close, and then you're going to get dealers selling into you at nighttime. So we should have dealers in the overnight selling into the overnight here. So we'll see. But there's a little bit of finagling into Friday. They might try to ramp it up and to print their Opex stuff. But just be aware that after the close that you're losing the momentum to the upside. That's the key thing. What up, Duckhand Dougie? What up, bro? What up, Deckhand Dougie? It's been a good day. I'm stoked. I made money today. I'm happy. I made money in the open, made money on a fucking 0-8 trade. It was the only trade that I fucking took today with you guys, and it was the right trade. So, fucking outstanding day today. Had Trader Podcast on. Vol Signals was on this morning in the chat. I still didn't see Miro. I don't know what the fuck happened to him. I want to see Miro in the chat blowing us up down here. Do me a solid here if you can. If you want, I'm gonna give you guys some free stuff here if you don't already have it. We have a handle called @CaptainsAlpha. Now we put levels out every morning. So @CaptainsAlpha, follow that handle. And here, @CaptainsAlpha. Follow that handle, and I'll let you in. Every morning I go and let people back in. There's one for you. The Discord's been kind of like lagging recently. We're going to do a new Discord at the end of the month, but still hang out in there. So there's @CaptainsAlpha. If you want an invitation to the Discord, I'll give you one. Let's see what we got here. I'll drop a Discord invitation. Here's a Discord invite. Then we've got, what else? You can also, as we are launching, you definitely want to sign up on the Discord and sign up on the website. There's a free sign up on the website. It's just free. You just sign up for it. And you'll get the inside scoop. I want you to always know that there's always going to be a free version of what we do. That'll be the same as you can sign up there. For retail traders, that was our original goal, and we're going to keep that as our main tenet. So if you want it, you can sign up there and get, and I don't send emails out like crazy. I send them out only when needed. So I also make posts on that website that are exclusive as well for people that just sign up. What else do we got? We got anything else we can give away? I don't know. Thanks, Poke the Jukebox, for paying, man. I appreciate the support, brother. We need it, man. Costs a ton of money here. What we do, I'm upside down like stupid. And what we put out. So I appreciate the support, Poke the Jukebox.
We're now in the closing bell market zone. Vertus's Joe Terranova is back with me to talk the rally in Apple shares. Plus, Bertha Coombs.
You could also, what else we got going on?
Senior bank analyst David George as we hone in on the regionals. Joe, Apple up, let's say 3.2% right now. It's the biggest upside contributor to the S&P, accounting for about a quarter.
Do me a solid. Well, that's another thing. That's what I forgot. So if you could, please, if you're on YouTube, can you please like the video and possibly make a comment in the comments section down below, not the side one for the live stream, but just in the comments be like, I hate fucking Captain Jim James. He sucks. Something like that. Whatever you say, it doesn't matter. The algos, it tags the algos on YouTube.
2.8 billion to the buy side.
Anything that gives you a sense that it's going to carry on from there?
One other thing, if you don't want, we have a $5 feed of chats with us on YouTube and Twitch to keep out the spammers and bots. If you want to chat for free, you can, but we added an extra couple steps to it. You can sign up on, just Google search Amazon Prime Gaming. You can sign up there and you can chat freely on Twitch, whenever you like, and it costs you $0, nothing. To chat via Twitch if you sign up on, if you just Google search Amazon Prime Gaming, subscribe on Twitch or something like that. I think also Bork has a link to it on how to chat for free. So there is an option for you to chat for free here. Always will be. If you want to sign up that way.
It helps out clearly today. You're going to have the NASDAQ closing at its highest.
Oh, you can't comment underneath. I didn't know that.
What's surprising about that?
I didn't know that. Thanks for the heads up on that, Andre. Just the like would work. I'd appreciate the like if you could out there.
High of the year at 47.83. Let's see if we get there. But it
squeeze it on up to the top. Squeeze it on up.
The highs of the year for the index.
Here's the upside target. We already hit it, right? And then we got what? We had the back test on Gamma. We had the back test on Gamma. Where are we going? As we go up here, if you're long calls, it's 3:51. We got 9 minutes left. As we squeeze up into the bell and creepy crawly up the Wally. Remember to monetize. Remember to consider a put spread at 4,800 for January. I said 30th, but it's the 31st. That was Andy Constant let us know on FinTwit to date them for the 31st to capture QRA risk. Doesn't matter what QRA does, just the risk associated with it.
It's the trend that's now becoming much clearer. Medicare patients are having more elective surgery procedures. Humana now warning that its fourth quarter medical loss ratio, that's the percentage of the premium that's spent on medical costs, will top 91%. That's 240 basis points above consensus. And as a note, insurers' MLR rarely top 89%. Meantime, Humana is blaming it on high inpatient costs as well as outpatient surgeries. The same as what we heard from United Health last week. But unlike UNH, Humana says this is hitting its full year 2023 earnings. On top of that, the insurer also warned that it's a higher attrition and lower new member growth during the Medicare open enrollment season recently, and now projects 2024 Medicare membership growth will be up just 1.8%, which is below the industry average that we're looking at for this year.
All right, yeah, and this move obviously has ripple effects across the sector, Bertha. Thank you. So, Joe, does it change anything? I mean, it seems like higher utilization is something that maybe we can think about being front-loaded into last year before premiums go up.
As we close, if you are a bull, we haven't played these in a while, have we? How did it go today, boys and girls? Jared Wan, thank you for subscribing on the website, brother. Thanks for becoming a member. Be Frank, baby, what's up? Cody Max, what's up? Sorrow Red Tiger, what's up? Chat Cat 2000, what's going on? Vol Signals becoming a member. George Cabalagos became a trader. B Harder 12. Anti-Max Win. J Seth, by the way. James Valdez. Legend X22X. Corvix. Nino California. What's up, brother? Spaceman. Alex Kavovich. Green Man. Johnny on the spot, baby. Primal Mackinac. Flip that dress down right there, baby. We got 1,000 people signed up on the website, Joey. Fuck yeah, brother. People signed up. Jesus Christ. Well, we haven't heard this music in a while, have we? Been a while. So well, let's see what else we got here. Nah. Oh, there's a good one right there. You haven't heard this one in a long time either. 3 minutes left until market close. What are my expectations for tomorrow? A market pin higher. This is the beginning of the place that you look for, right? We talked about that. Anything between the upside target and the next level, baby. Start looking for a put spread in the money expiring on January 31. Don't go crazy to the downside on it. Just slap it on, leave it on. I think tomorrow's the day to place the trade, but if you were going to place it today, probably get a print out of that. I want to thank you for coming to the show today. After the bell, we're going to review AMC and GME. We haven't played this in a while. Hold on here. We're going to turn this one off. No. Which one is it? I think it's the JimJames or something like that. I think it's this one. There we go. We haven't played this one in forever. I shouldn't say that. I'm going to delete that one. Yeah, this is the same guy. Here, this guy played. You guys remember this song? We haven't played this shit in forever. p.m., baby. I'll catch up with all of you tomorrow, 9:30 in the morning. For any of you weirdos that want to stick around and look at GME and AMC, I know for sure AMC or GME definitely needs a look at. It's looking sketchy. It's just like Tesla. 9:30, baby. All right, here we go. 4 p.m. If you're going to exit the show, I'll see you all tomorrow. Thank you for showing up today. I appreciate all of the alpha that we see in the chat every day. Really, truly appreciate that. You guys are fucking awesome. Everybody in the chat, thank you for being here. If you watched rebroadcast this stream, if you're in another country and you're watching this and a rebroadcast, hello. If you're in a Discord right now and a rebroadcast, thank you for joining us. I've had people say they rebroadcast us elsewhere. They've contacted me via email and inside the chat. They say, hey, Cap, is it okay if we restream? So if you're out there watching us, thank you very much for tuning in every day. I will see all of you tomorrow. For the rest of you weirdos out there, we're going to get a little intimate. And we're going to take some serious looks here, okay? We're going to put it on straight face again. And the reason for that is because of what? We need to take a serious look specifically at some tickers that people are very emotional about, right? So we're gonna go over to the trigger screen here, and we're gonna take a peek at first GME. And why did it pique my interest? First of all, I was on FinTwit briefly yesterday. I was like, I gotta go, and then I came back on FinTwit, and I was going through because I suck. I do. I really suck because I don't have enough time to be inside the notifications. I get so many notifications that I burn like an hour just doing that. So I'm like, fuck this. I'm gonna check my notifications more frequently, and then my DMs, same thing. 20 DMs a day, 20 DMs a day, 20 DMs a day, and it's really hard to do follow-up. So I've been trying to do more follow-up recently. And someone asked yesterday about GME. They said, when squeeze? They said, when is squeeze on GME? Now, they said this yesterday, right? And today's the 18th, right? And we got the 18th, 17th right here, and the squeeze today on GME. Nice little squeeze, right? And I said something about violence coming for GME. And why is there violence coming for GME? And what does it mean? And you can see the squeeze. So we had this squeeze right here, right? And then we have this we had this big squeeze right here, but then with this giant squeeze today, right? On GME. Why is violence coming to GME? What does it all mean? And why is it important right now in GME? Why does it matter? And we're going to show you, I'm going to show you in a larger time frame what matters here with GME and why it matters, the importance of it. And I felt like this person that I talked to yesterday on FinTwit, I was like, we get some violence coming. And it's very similar in nature to Tesla in some way. So we're going to go first start out with a daily chart on GME. And why does this matter? And I'm going to show you right here why it matters. I want to show you historically for GME where some real problems lie here. Now I'm going to point out the first one, and that's right here. When you get these crosses, right, you get this daily and weekly cross negative, and then you get a weekly and daily cross of the monthly. You see some real downside violence in the ticker. Okay, keep it really simple here, really fucking simple. Okay, same thing happened right here. Okay, and it was really, really bad. I remember when this happened. It was fucking ugly. I was a member of Wall Street Bets when that happened. So there's two examples, okay, of this happening. Two prior examples, 1 and 2. And what does that mean for right now is the question. It's happening again. Now it hasn't happened yet, but price and the daily trigger took place right here. And we have a blast down right here, bouncing, blast down right here, and now sitting on the 6-month trigger. That's cause for concern on itself. It's major cause for concern. Doesn't mean that I'm bearish here on GME. I personally would like to see this bounce and hold on the 6-month. If you're a bull, you got to hold this. You have to. And there's some violence coming from above right now. We've got the monthly trigger. This is that bear. This is that when price is below that bear, and you've got the weekly cross right here. And now you're looking at a cross to the downside of the 6-month trigger. Okay. Now I'm not saying we're there right now, but we aren't. We've bounced, then we bounced again and ricocheted. But I'm scared of it. Okay, so this monthly comes down right here. You get like an 8 trigger bearish cluster, and it could be brutal for GME. Now, am I calling for that brutality in GME? Not so fast. Looking down here, we had it back here. You see this? We have the start of it right here, and this weekly is getting a little long in the tooth. You'd need the great alliance of all this stuff at the same time. But I want you to see this right here, okay? Bad news right there, right? We have a little bit of that starting right now. We're not quite there yet, but it doesn't look good. Okay? So this here is a warning shot across your bow if you are a GME bull. Okay? There's a little cannon back here, and there's with a cannonball right here telling you to be careful here in a pretty significant way. Now, I don't know if that means GME is going to declare bankruptcy. A lot of you out there are going to say, oh, we just need to close the gap down here, Cap, and it's going to run again. Right? Come down here, close the gap, and then it's going to be another squeeze for GME. So what I want to talk to you guys about here, see that little blip down here? It's really nothing, is it? A little squeeze really ain't too much, is it? So we're going to look at a 30-minute chart here on GME. And I don't like this rejection here. Do you see all this rejection right here in the weekly? Sellers are coming down on you in the weekly. They're coming down on you in the daily, and they're confirming more downside to come. Prices it looks like it's above the hourly right now, but this brings true volatility to the stock, is my point, to the downside. And I guess it could be upside too. So this is what I'm going to say to you, okay? You're at a place right now with price on GME where it is critical that you get above this monthly trigger here. It is critical. It's not good enough that you get above the daily trigger, the weekly trigger. None of that stuff is important enough. And I'm going to show you why here in a larger time frame. It's not, the 6-month is not showing up here, but I'm going to post it right here, okay? You're on a bull plane, then a bear plane, but on this $13 right here. At $13 right there, okay? What is that, 1333, 1336, stuff like that? Is that still showing? No? So I'm going to say this to you if you're a GME bull. You cannot give up that $13. You fucking cannot give this up. Cannot. give this price up. You cannot. If you do, and you break that 6-month trigger down here, if you break that 6-month trigger and you start to have that daily trigger, that weekly trigger, and where's that monthly trigger? Right there. You have the confluence of all of this stuff heading down, all of this stuff heading down, all of this stuff heading down. You can't deal with a rejection here. You can't deal with a rejection here. You can't deal with a rejection here because it's going to be a fucking bloodbath to the downside. And I mean it. We're talking like 80 cents possibility. Really bad stuff. Now, some of you are going to think to yourself, no cap, all it's going to do is go down to, it's going to close this gap down here. We're going to do another run. So in your view, you're likely probably telling yourself, no cap, we're going to slam down here, and it's going to be off and to the races. I tend to disagree with you on this. The momentum that's coming down upon your head down here is likely going to seek a new low. And I think the low was at 60 cents or 80 cents or something like that way back in the day. Where was it at? Let's find out. Can't remember. It's been a long time. 68 cents. So I don't know if that's forecasting something really bad. Declare bankruptcy. And you see this right here? This is your yearly trigger. You see this right here? See that trigger right there? That's your yearly trigger. That's my target. So this is your prior target right here. That's 2 cents. 2 pennies. You understand the point that I'm trying to make to you here? So there's either bankruptcy coming. It's possible. We're getting that read. You cannot give this up. I guess you can. Some of you probably think you can down here. I don't like seeing this down here. And I don't like seeing this down here either. And I don't want to see GME at 60 cents or 2 cents. That says bust. So if you're a GME bull, it doesn't mean sell. It means something, though, too, if you are a GME bull. If you are long the underlying on GME, I'm going to give you a warning. If you want to hold HDOL, right, HODL, it might behoove you to have some protection here. And I'm going to put it to you this way. If you protect yourself with some really fucking bad puts or cheap puts that are worthless. There's a Joe Donut used to tell me this. If the world is if we're gonna have a nuclear war, go long. And you might say, why go long? Well, because the worst that can happen is we're all gone, right? You weren't gonna get paid anyways. You're not gonna owe anybody any money. You're not gonna need your money. You don't need it. World's blown up. So if you're long already, if you're a GME bull, I might take some protection out, like penny puts that only print if we trade $4.98. It's like a $5 put. Now, if we do bounce here, if this is the actual bottom, cannot give up this price, you're not going to care about those puts, or if they burn, you're not going to care, because this is the place that should be the bottom. This should be the bottom. You get what I'm saying here? So this is the bottom for GME. The way down from here is a fucking mess. It is a hot mess. So this is the place to buy GME, or if you've held to this point, don't fucking sell. Throw on some outside the money puts. Date them out far. I would date them out for at least a month and a half past mid-March, so I'd take those for like May or something, and then I would monetize them on the seasonal low for the stock market in mid-March, or let them burn if we never go down there. But this is a point. This is a place. I gotta say this because some of you know me from James Rowland, right? And some of you guys have seen me in James Rowland's Discord. Some of you guys have known me pre-GME. There are people on FinTwit that know me from pre-GME. Some of you out there know me, and you guys have seen me trade Luckin Coffee. You've seen me trade. You've seen me trade Hertz. You've seen me trade everything out there, any meme stock out there. And I gotta warn. I'm gonna give you a fucking warning here. If that bad thing happens, it's horrible. The last leg down is horrible. And you see people just get fucking destroyed. And I remember, I think it was Hertz, but I could be wrong. I did a show inside of James's Discord, and we talked about, ride this and pump that and buy this and all this other stuff. But we also had a conversation in that stream or that discussion where I said, if we get below a certain price, get the fuck out and run. And that happened, and people got fucking annihilated. So I got to do that fair warning to you as a GME bull. It's probably not what you want to hear. It's probably not, it's probably going to piss some of you off and stuff like that. But I need you to have that warning. So I need you to know that there's a wave of momentum coming down on the price of GME. Vicious momentum coming down upon GME. It can lead to a squeeze. It can lead to a new life for GME. But I want you to be aware of it, okay? So some key levels for you. I want you to understand some key levels here for GME before you leave the stream here. And your key levels are $13.49. It's a key level. Your next key level is $15.71. $16.83, $18.72. And then currently $22.96. So this will likely be about $20 at some point, okay? I really, 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 the life of me, want to see price above $20. If you want to see the next 3 to 4 months, I want to see the next 3 to 4 months, I want to see price fight and break above the hourly trigger. I'm going to draw it out for you right here, okay? I want to show you what I want to see, okay? In the next 6 months, I want you to know what I want to see out of GME from right where we are. And there is no answer below here. I got to impress that upon you. If you're a GME bull, right, I don't fucking want to hear your voice if you break this fucking $13.50 and reject there. I don't mean break it for a minute either. I mean you break it and you begin to reject it. If you do that, right, you have no voice from me. I don't want to listen to you talk about buying a dip. It's really fucking bad. This can't impress that upon you anymore, okay? So right where we are right now in GME is pretty much the place where you buy the fucking dip, okay? This is your last chance, is my point. And what I'd really like to see here is this. I'd really like to see, this is 1, 2, and 3. I'd really like to see something like this, to be honest with you. Right up there below that, I'd really like to see a squeeze up there to 22.96 and then come straight back down. And I'm going to explain it better for you here in just a minute, okay? 1, 2, and 3, and then some consolidation. And that's all I want. Right there. That's all I want. Now, this could take a while. You could be down here fucking dicking around until you get underneath. You could be down here for a while. You start, hold on, let me get some of this stuff right here. Here's the daily trigger right here. Right? You want to see that break above. You want to see this weekly trigger come underneath. And you really want to be seeing price. You want to see constructive price here. Right? It's good enough to get that squeeze right there. Come back down here, start to consolidate. You get the half-hour trigger. We get the hourly underneath you. You get the hourly trigger underneath you here. You get yourself a nice 3-trigger bull cluster on an hour or on a weekly, a daily, and an hourly basis, and you rip some fucking faces off up here. You know what I'm saying here? So this little thing's we're not here yet, are we? So I really want to see some constructive upside price on GME. Roughly about $16, right around $16. If you come back to me and say, hey, Cap, we're at $16 and holding, I don't care if we're bouncing around in here like this, but if it's holding $16, we'll start talking about attacking this $23. Okay? And the other to a bigger point, if you can get some of this monthly trigger down here, and you can get that squeeze that I'm talking about here, right? Get that happening, right? You get up here, you're able to squeeze up and hold your pants up, and then you're able to squeeze above that monthly trigger, even if we break back down and we need some time for the daily trigger to get up here. But if that daily trigger can catch price, then get us above that $20, we'll be in business for GME for bulls. So there's a lot going on in here is my point. There's a lot of expected, in my view, expected volatility here for GME. So if you're a bull, we'll go back to it again, right? I own GME. What am I going to do, Cap? I'm going to put some crash puts on. They're worthless. The first like penny or 5-cent puts you have for that time period, you throw those on, and then you start getting fucking hungry for upside targets. You start saying, I'm going to buy the dip here. I'm protected to the downside. I'm not going to get aggressive, but I'm going to start building a position. You get above the hour, the daily, and the weekly, and if we're successful underneath, price is successful on the weekly and daily, start getting more aggressive with buys. Take this up here, and then if we come up above the monthly trigger, and you've got all of these clusters underneath you of this momentum, and you're turning momentum around on yourself, we could have a party on our hands. And I mean a fucking party. Like you get the 6-month, you get the quarterly, you get the weekly, the daily, the hourly, and you turn this on these sellers, you could have another fucking major squeeze on your hands like you did back in 2020. If I would never be caught dead short with price above those triggers and with a consolidation back test and a new high, I would never be caught there. And if you do get caught in that right there, I dare these hedge funds. They will get fucked up. I mean serious fucked up. They will get wrecked. So you're either looking at a bankruptcy or you're looking at a major squeeze forming on GME. You guys understand where I'm coming at with this stuff? I'm telling you, we're at a point here, right, where we're triggering soon a pretty vicious downside move, or a pretty vicious upside move. I don't think there's any in between here. I don't personally think there's any in between. I think in between this level here, right here, in between this level, this is probably $20. In between here and here, you're going to see some fucking violence if we go up there. You might find a little bit of consolidation in this zone, But if we get up here, you're talking about a nice, sexy move. And then you're just selling puts on all of this underlying that you bought. Does that make sense? So there's a plan here. We start doing this turn here, right? This is just like a 1 minute chart on SPOOs, right? Do you see it in here? If you do this, then you just start selling OTM puts, OTM puts, OTM puts on a huge underlying position. Let me know your thoughts here on GME. Do you think it's heading? Let me ask you a serious question in the chat. Do you think it's heading to bankruptcy? Because the signs right now are saying that it is. I'm asking you guys some serious questions here. Do you? A serious question. Tell me in the chat. This is screaming bankruptcy. The price action right now is screaming bankruptcy, delisting. Not under $2 for a warning or anything like that. It's screaming to me bankruptcy. So I don't know if that's true or not, but this is a place for you if you're like a long-term GME holder, start some protection, throw the protection on. Yeah, I've heard that too, right? I've heard that same thing, that they need to do this and they need to do that, and they haven't, right? And they stopped. They just stopped doing something else recently too, right? Did they stop doing NFTs or something? There was something that they stopped recently. Like this is bottom basically for you. This is bottom for you. This is your bottom. If you're a GME bull, this is your bottom, 100%. If this is not your bottom, I don't know what to say to you. The downside is ugly. Now, I'm wondering what your theses are here. And I did see Roaring Kitty make some posts recently. I think Roaring Kitty even knows, I think even he knows that this is the place. This is the last stand right here. I think I saw yes. Maybe that was it. I got a text message or DM, or not a DM. I got a comment, and then when I respond to that person, then I saw a tweet from Roaring Kitty, and I think he knows that too. This is your line in the sand, for lack of a better answer. So I'm interested to know. Now, saying all of what I just said to you, you have to be very careful of the rejection. And this rejection, when they have one right here, you see that rejection? So how would this play out? Do you want me to show you how it would play out? I'll show you how it would play out to the downside. You would lose this, right? You would hit your target down here. But the scary part is that the scary part about this, how it plays out is your monthly would come down. And you'd have a fucking bloodbath on your hands. And that's where the death nail comes. Right down there. And you get that. Dude, I rarely see this. I only see these things on tickers that are going to zero. Let me see if anyone's commenting on YouTube here. Thanks, Adrian. Trigger. I see a squeeze even in the downside move. So what we'll do is this. I'm going to reach out to James Rowland and see what his take is on this. Because I know James watches it very close. I'll ask him on public if he'll come on the show and find out what he thinks. Because like we start giving this up, and you're talking about really fast moving. There's some consolidation zones, but there's some really big moves in there along the way. And I don't want to be sitting here like with you're saying in March, right? I don't want to be sitting here in March or June or September and we're talking about bankruptcy. What are you guys saying here? The good, no debt, extreme cost cutting, and tons of cash on hand. Yep. Agreed with that, though, that he can just invest it in his discretion. I know all those points already, but we've known that for how long now? How long have we known that? Long time, right? The bad, there's still no short of long-term strategy. I agree with that one, too. He's had some time to do that, too, hasn't he? They need to do something to generate more money. I agree. And I think time is running out. There's another not another problem here, but there could be a takeover. There could be a board takeover. They want to buy it cheaper. If they're gonna follow through with that investment, maybe that's what it is. They want price at 60 cents, at 8 cents. That's possible for an M&A or some kind. That's a good point, too, Sam. They need to buy Unity or a company like that to transition to mobile gaming. Yeah, if you want that reverse Uno card, if RC wants to, he has that. I know he's got that grand vision. He's got a bunch of cash on hand. Maybe it's a matter of getting the price low enough that they can take it private to execute that plan, because that plan has not materialized, right? Okay. All right. AMC. Said we do AMC. We're going to do it right now. Now I want to show you AMC. You see that right there? What did I say in stream? I said trade is dead below 812, right? Uptrend break of HT, right? That happened. And where is it at now? It's in full capitulation mode. What is it trading right now? $4.43. This is where GME is the last time I talked about AMC. You fuck this up, and it's blood. Straight fucking down. And that's what's happened, right? It's lost 100% of its value, or 50%. Went from $8 to $4 fucking dollars. And do you know where the next target is? 0.0004 cents. Not good, is it? You tracking me now? I think this, I think that, I think this, I think that. And what's happening? You're just hanging out down here. See what I'm getting at here? And you're coming into another test here in AMC right now. This is good. And I'm going to show you the AMC trade next. Your next check is coming up right now, right? See it? Kind of a wonky ass looking line. Not gonna lie. So on 1, 2, 3, 4 days from now. 4 days from now. One of the good things for you is you're above the hourly trigger. You have a 3 trigger bull cluster, and you have a cross of the half-hour trigger coming above. So right here, Expectations. GME expectations, or excuse me, AMC, by the 24th of January, price target $5.26. I think you break above that $5.26. I'm going to give a target of $5.50. You must stay on trend. If you at any point break trend, do you know what the next target is? $2.50. If at any point trend breaks, you start doing this goofy shit down here, you're going to bounce. Nope. Right. Oh, wait a minute. It broke back up, then right back down here. Something like that. So if you're a AMC, current price target, $4.58. Come back down, retest $4.30. Next target, $4.78, $4.48, $4.92, $4.70, $5.07, and then blast up here to $5.49. Do or die here. After 250, you'll end up you target $5 or no, not $5, 250. Then you go to $1. Then you're gonna go to 60 cents. Then you're gonna go to 30 cents, and then you're gonna go to fucking 0. And we already know the CEO owns it right down here. This is where the CEO owns it down here. I think it's $1.60 or $2, somewhere in there. Correct me if I'm wrong. That's where this asshole is, right down there. There's your $2. There's your $1.60 right there. Let me know in the chat what you think about AMC. You want to take a snapshot of that? This here. If you break here, down, break here, down, break here, down, break up here, down. Down, 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 down. You have to stay on trend. We'll talk above $5.27. We'll have a chat. If you can get above this, $5, if you can at any point establish a foothold above $5.30, you will trade. Whew, you'll trade $15 up here. You get above here, boom, moonshot. Get above $5.30, you're trading it won't be 14 then, it'll be it'll be that 13 mark, $13 or so. You must get above this right here. You need to stem the tide of selling and start doing this shit right here. Attack, consolidate, attack, consolidate, attack, consolidate. That's into the end of the year for AMC. Price target end of the year, $15. Or yeah, no, hold on a second. 15? No, it'll go higher than 15. It'll probably go $35 PT end of the year. Cannot lose this trend here, or it's going to be a fucking bloodbath. Be a fucking penny stock again. I think AMC is done. I'll be honest. I think AMC is done. Now there's a not done. AMC can survive down at $2. Fair value. It's not fair value, but that's where the owner owns it. So it could become a sub $10 trader for a long time, for months, years. And you know, I know that because then you're looking at see this right here? This is months right here. That's 2026. 2026, 2020, 30, 2020, 40, if you're even going to do that. Just be really careful on this ticker. Super hella careful. And I don't care about all that stuff back there. Because it goes to fucking zero if you keep going any lower. It's got to be wild, the dilution. I got to be straight with you on both of these. AMC looks more like, doesn't look like bankruptcy. AMC more or less looks like take it back to the dot. Remember something too, like I got to say something else here. GME, there was a mechanical reason why it should squeeze forever. It's very similar to Volkswagen. When Volkswagen did that shit. I think it was 1987 when Volkswagen did that. There really wasn't a reason for AMC to squeeze, though. AMC for a long time was very low, you know? Or not low. We should look back over it here, right? It started out up here at $111, right? Went lower and lower and lower and lower. And the CEO claimed that he was in for like $2 or something. So that must have been pre-IPO. You know what I'm saying? So there are people out there that actually own this company at a very low price, pre-IPO, I'm assuming here. And like, you know, when you IPO a company and it's like IPOing at $50, trades immediately down to $6, $5, whatever that is. I wouldn't be surprised to see that trade down to where all those original owners own it. And then it trades back up again, like $2 to $10, somewhere in there, $10 to $20, that kind of stuff. I think they're better. I agree with you that their fundamentals are better. AMC's fundamentals are better. But what else is wrong with AMC? They own a bunch of shit that people don't see anymore, right? There's like a destruction. Whether you know this or not, or agree to this or not, there is a fundamental change in how we consume entertainment in this country. Gone are the days of movies being the center of entertainment for a family in this country. In a movie theater, none of these kids have any attention span. These kids, matter of fact, if you go to Twitter, Twitch, YouTube, anywhere, even TikTok, do you notice how much production is going into a lot of the programming that you see? It's because there's a major shift. You're seeing people like shift to those platforms. Matter of fact, you're seeing the next step. There's some people on YouTube right now that are saying, I'm leaving YouTube and I'm creating my own website. right? Now you can watch my content there. So you're seeing even a progression of changing how we consume entertainment. So they kind of they got some problems too, right? How do they're almost in the boat of GME to some extent. They're not there yet, but they're almost there. A lot of Hollywood is there too, right? Some of the best writers right now are fleeing to YouTube and Twitch and all these TikTok, all these other fucking places. I think they're pricing it in. When I see AMC, I'm like, they're going to price in this fundamental shift to how we consume our entertainment. So it's not that AMC can't survive. It's that it's either an M&A or it's going to have to adjust to that new environment. And I really don't think the tentpole thing is going to fly. I think it's like the tentpole movies they're making for the entire world to consume. They're going to fly, but they're not going to fly like we expect them to fly. It's like a stopgap measure. That's all it is, a stopgap measure. And look at that fucking blood, dude. Look at that blood right there. God damn. That is brutal. This is just, I mean, look at this. This is just bye. Fuck you later. See ya, Felicia. That's got to hurt, man, if you're a fucking bull. That can't be good. I mean, look at that right there. That can't feel good as a bull. Just free falling. All right. So that's all I got for you guys. I'll see all of you guys tomorrow. I apologize for being so sour and dour on these two tickers, but GME's got to do something. Roaring Kitty is correct. That's your place. You fuck that up, you're going to the depths of hell. AMC. I likely see it going back, not back to pre-pandemic levels because it never was that low. I expect it to be priced in for where the principal owners are. That's $2, roughly right around $2. And that will be its zone trading, $2 to $10 to $20. It'll be the new life for that ticker. GME, looking like bankruptcy. I have even worse outlook on GME right now. Or some kind of takeover by the board to execute a plan that they've been talking about forever. Something there. Now, I hope that there's a turnaround, but I got to see it before you believe it. You need to see price regain these things to get bullish again on these tickers. That's all I got. I'll see you guys tomorrow. Didn't want to end on a sour note. I'll see you guys at 9:30. Wrap this week.